The big story this morning, oil has jumped this week as tensions rise in the Middle East, with Iran promising revenge on Israel for an airstrike on its embassy in Syria that killed a top military commander. Brent crude closed above $89 to the barrel overnight. As of this morning, NYMEX, what you can see on your screen, is trading above the $85 per barrel mark. In fact, oil prices have risen by about 18% in 2024, driven by strong global consumption and extended production cuts by the OPEC+. The group of oil-producing countries is set to meet tomorrow to review their output policy, and we're unlikely to see any changes. Earlier this week, you saw Chinese manufacturing data that showed signs of an economic recovery, and that has also supported crude prices. We'll get you some more details on that in just a bit. Meanwhile, in the US, better than expected data on job openings and factory goods orders added to doubts about the pace of the Federal Reserve's rate cuts. According to Bloomberg, traders are now projecting fewer cuts than the Fed itself in 2024, and that has pushed yields up across the board. In fact, the yield on the 10-year Treasury has hit the highest level since November at 4.36%. Equity markets, as you can see on your screen, saw significant selling as well. The Dow and the Nasdaq losing about 1% each, and in fact the S&P 500 declining by as much as 0.7%, and futures are also pointing to a weak start at the end of our day today. In the Asia-Pacific region this morning, there are sharp cuts across the board. At least there were for the early risers, the Nikkei 225 down about 1% or so, and the other two early risers also losing about 1% each. But you have the Chinese markets that are down only about 0.1%, the Shanghai benchmark down about 0.1%, and the Hang Seng down as much as 0.4%. In more international news, US President Joe Biden has sought to manage tensions over the South China Sea and Taiwan's May presidential inauguration in a call with Chinese President Xi Jinping, their first direct talks since the meeting in November. Biden used the call to emphasize the importance of maintaining peace and stability across the Taiwan Strait, and also the rule of law and freedom of navigation in the South China Sea, and that's according to a White House statement. Meanwhile, Xi said that ties between China and the US are beginning to stabilize, but warned that they could slide into conflict or confrontation, according to China's official Xinhua news agency. Now, there's another significant development this morning. Buildings have collapsed in Taiwan after an earthquake with a preliminary reading of magnitude 7.5 on the Richter scale. It struck earlier this morning, and it has also sparked a tsunami advisory in both the island nation as well as for southern Japan. The 7.5 magnitude earthquake could trigger waves as high as 3 meters in some areas of Okinawa Prefecture that is located roughly 1,000 miles south of Tokyo. It has only been 4 months since a magnitude 7.6 quake and tsunami killed 244 people and caused widespread damage on the Noto Peninsula in Ishikawa Prefecture on the Japan Sea coast. For now, it's a wait and watch. We'll bring you more updates as and when we get them. Now let's turn to news from back home, and this is a significant development for the equity markets here in India. The NSE has reduced the market lot size of derivative contracts on select indices, including the benchmark Nifty 50. What are the implications of that? When does that come into play? Agam is joining in with the key takeaways. Agam, the initial reaction, I think, to this would be that this will increase volume, but that might actually not come into play.
Yeah, it's a wait and watch on that one, Alex. But, let me just start with the basics, and let me start off with what changes we have in fact seen. So the biggest contract, that's the Nifty 50 contract, that has been reduced from a lot size of 50 shares per contract to 25. Similarly, we have the Fin Nifty, which has been reduced from 40 to 25, and the Midcap Nifty, that's been brought down to 50 from 75. The underlying contract size for the Bank Nifty remains unchanged at the moment. Now, when do the changes come into effect? Well, they come into effect from the 26th of April because 25th is the expiry, but this will be available. These contract sizes will be available for the July series going in. This is July 2024. Why the change? Well, the exchanges take this exercise periodically, and at the moment, SEBI has suggested that the notional value of every contract need not exceed 10 lakh rupees, and it should be not less than 5 lakh. At the moment, of course, if you just take, then take that calculation of the Nifty, that is 50 into say 22,500, that's where the Nifty is. The contract size comes to well over 11 lakh, and of course, with the new contract size, that would reduce to half, to around and about 5.5 lakh rupees. Well, what are the implications of the market? Naturally, this will mean increased liquidity because we'll just have more of contracts slushing around in the markets. There will be a better ability to more finely manage risks because of this, and of course, this makes for attractive size for the retail participants. But who does this actually benefit? Well, at the moment, it certainly does benefit exchanges as well as broking houses, but it's a wait and watch of whether or not it does in fact benefit participants, because a lot will depend on whether or not the broking houses do reduce their brokerage on each contract going in.
Yeah, and in fact, we're going to be talking about this in more detail in the editor's cut on India Market Open. That takes place starting 8 o'clock, and you'll find this conversation between 8:15 and 8:20 or thereabouts, so you should tune in for that. For now, let's turn to what we know as of now for the F&O space, the latest cues. Of course, there is a bit of selling across the board in international markets, and perhaps that's going to have a bearing on our markets as well. Let's go across once again to Agam to take stock of the latest cues from the F&O space. Agam, a little bit of consolidation, I guess you can call it that, at the start of the week. What do we look at today?
Well, it's exactly that, Alex. We're sideways movement, very, very range-bound movement, consolidation coming in. And even when we do see a sharp cut or a sharp up move in terms of its applied open, eventually markets open at a certain point, and then they tend to trend exactly where they are through the course of the day. At least that's how things have panned out over the last few days. Remember, the volatility index has also come off quite a bit. In fact, yesterday it was at its lowest level since December of last year. So it's at a 3-month low nearly. That said, it was a flattish day for the Nifty, and we didn't see too much traction in overall open interest, about 2% added there. The Bank Nifty as well, while the index remained flat, we didn't see, hardly saw any addition in open interest there either. And remember, these are early days. This is where we are expecting to see a lot more traction in terms of addition, but that hasn't really come through. Let's move on and talk about the options market. Of course, yesterday we saw the Nifty hang around the 22,500 mark, and that's where we saw a lot of writing in terms of calls and puts. Some amount of unwinding coming through as far as the 22,600 strike is concerned, both for calls and puts. Where does that leave us when it comes to your overall open interest distribution? We still have a lot of call accumulation around 22,500, and of course on the higher end we're keeping an eye on 23,000, which is unlikely to go through that because it seems like there's a little bit of a hurdle to make through that mark based on the kind of open interest that we're seeing in calls. And on the lower end, I reckon 22,000 will still be as a little bit of a support of late. Moving on to talk about the Bank Nifty, and of course this is where things become very, very interesting, because at the moment the Bank Nifty is trying to sustain about the mark of 47,500, and on the higher end 48,000 is the one where we do have a significant amount of accumulation when it comes to calls, and that will provide us with a little bit of resistance, at least in the near term. But today is the Bank Nifty weekly options expiry, and that means that 47,500 remains a crucial mark to keep an eye on. Let's move on and talk about stocks then. And India Mart and Gujarat Gas saw shorts, longs for Ramco Cement, ABFRL and Havells. ABFRL potentially the stock of the day yesterday. And in terms of stocks, we saw unwinding. We saw longs unwinding for Info Edge and ABB, and short covering for JK Cement, Emphasis and Godrej Properties. It's going to be another interesting day, Alex, because we're looking at a very sharp decline in the implied open. And based on that, we'll have to pick the cards up.
And that's par for the course based on what we're seeing across the board in global risk assets as well. Thank you so much, Agam, for getting us those details. We started with a conversation about the crude oil. In fact, let's delve a little deeper into what is causing this rise and what the context is, because Brent crude at $89 to the barrel is quite a significant level to talk about, particularly from India's perspective. Mihika is joining in to give you some perspective, and also ahead of the OPEC Plus meeting later this week. Mihika, what can you tell us?
Yes, so Brent Crude has been on a bull run in 2024. It's reached almost a 5-month high. Now prices gained 2.17% intraday high overnight, and it opened 0.34% higher at 89.22 per barrel. Prices are up just 3.4% in the last week itself and 7.46% in the last month. Now, there are various factors that have been impacting. One of the American Petroleum Institute, which has reported that the nationwide, which is the US stockpiles, have fallen more than 2 million barrels last week, and it's also estimates a fall in the gasoline as well at the distillate inventories. And one of the major ones is the OPEC allies are due to review the crude markets and the supply policy today. They're likely to keep the overall strategy unchanged. They did announce and extended its voluntary supply cuts last month, and there are currently voluntary cuts of 2.2 million barrels per day by the OPEC Plus countries, and this is likely to, and this is going to be there till of June of 2024. And something that's also been adding a little bit pressure are the Ukraine drone attacks on Russian refineries. Yesterday itself, the third largest Russian refinery was attacked, and currently 14% of Russian refining capacity has been shut down. And lastly, it was the China manufacturing PMI, which increased to 51.1 in March against 50.09 in February. New orders from domestic as well as foreign markets have helped boost the growth in March, and the first month of March is the 5th straight month of growth. So all of these various factors have been contributing and tightening the markets a little bit.
Absolutely. Thanks so much for laying that out for us, Mika. Now, one of the factors that is going to be watched very closely for multiple reasons in India is the possibility of heat waves between now and June. This is something that the IMD has warned about. They're also speaking about the impact of those rising temperatures. They spoke to NDTV Profit. Listen in, and we have to slip into a very quick break. We'll be back on the other side with more, so do stay tuned.
As we interacted with the agriculture specialist, particularly the wheat, crops, that is in the harvesting stage now. And, state like Madhya Pradesh, we understand that 90% has been harvested. So only 10% is remaining. The otherwise, Himachal, the other places like Punjab, Haryana, UP and all. So the harvesting will be completed within the next 10 to 15 days. So they say that grains are in the, in the mature stage. Therefore, there will not be any impact of temperature on wheat crops, as of now. So there will be good crop production will be there. That's what they said. But however, for any crops or vegetable, etc., in the next 3-4 months, the regions where you don't have an irrigation facility or groundwater is very less, there can be huge, temperature stress can be experienced.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers, growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing.
Welcome back. You're watching All You Need to Know. It's time to focus in on the stocks that will likely be buzzing in trade today. And Varsha is joining in with the first list of those stocks, the likes of JSW Energy as well as Suntec Realty on that list. Morning, Varsha. What do you have for us?
Good morning, Alex. So let's start with a couple of stocks which would be buzzing in trade today, starting with Anupam Rasayan, wherein they've signed letter of intent with Japanese multinational company. The contract is, the value of the contract is around 740 crore. Now this contract is for 7 years, where company will supply 2 advanced intermediate using fluorination chemistry. Intermediate products are nothing but molecules which are used to make final medicine. Now the supply for this product will commence from FY25, and this molecules will be manufactured from existing and soon to be commercialized fluorination plants of Anupam Rasayan. This will be first company in India to manufacture these molecules. Then we have Suntec Realty, wherein they are going to expand its annual annuity income business. They are giving their second building at BKC Junction to Bennett Coleman for a long-term tenure. Company will generate 2,000 crores revenue over next 29 years. Then we have JSW Energy, wherein they are going to raise 5,000 crores through QIP, for which floor price has been set up at 510, which is at 6% discount to their last closing price, and company did not provide any details on how it plans to use these funds. And lastly, we have Jammu and Kashmir Bank, wherein they've signed corporate agency agreement with New India Assurance Company for servicing and soliciting their insurance products from their branch, and this agreement shall be effective from April 2024. So these are the stocks which should be on our radar.
Absolutely, and there are more to talk about. In fact, Mihika is back to tell you about what's on her list. Mika, what do you have for us?
So first we have Ultratech Cement, which has commissioned 2 new greenfield capacities of 2.7 million tons per annum, each one in Tamil Nadu and one in Chhattisgarh. This is a part of its 22.6 million ton per annum capacity expansion plan, and its current capacity is now at 151.6 million ton per annum, which it plans to expand to 200 million tons by FY28. And the company also announced that it will invest 32,400 crores towards the ongoing expansion plan over the next 3 years. Then we have HCL Technologies, where its subsidiary HCL Investments UK has entered into and signed an MOU with a US-based joint venture called State Street International Holdings. Now they're going to divest their entire 49% equity stake in the joint venture, and the reason is because the call option was exercised by State Street as per the agreement that was entered into, and the transaction was completed as of April 1st, and the proceeds are 172.5 million tons per annum. And then we have a certain metal counters that could be in focus on the back of their business updates. We had Moil, which recorded its best ever production in FY24. Production was up 35% year on year, and sales were up 30% year on year. Then we have Hindustan Zinc, where its Q4 refined metal production was up 6% due to better plant productivity. Mines metal output was up 11%, which is on a sequential basis, driven by a mix of improved mine metal grades and higher production. And lastly, we have Nelco, which recorded its highest ever cast metal production at 4.6 lakh ton and recorded its higher ever bauxite evacuation at 76 lakh million tons.
All right, thanks so much, Mika, for getting us those details. All of those stocks are important to watch out for in trade today. Now, there are a couple of brokerage reports that we're focusing on this morning. Motilal Oswal has reiterated a buy rating on Prestige Estates with a target of 1,535 rupees. We've got Harsh joining in to tell you why. Harsh, morning. What's the rationale here?
Well, yes, Alex, extremely interesting because we've seen Prestige Estates surge 16% over the last couple of days, or rather last exactly 5 days of trade. Of course, some amount of traction because of the announcement of Kotak AIF participating in Prestige's assets. But most importantly, it's with regard to expansion is what Motilal Oswal continues to believe. 17% upside from here is what they see on Prestige Estates. Expansion into new markets will largely sustain that pre-sales number. They're positive on that count. They're also expecting the rental portfolio to start to contribute significantly. Now, mind you, what they're suggesting is Mumbai rental portfolio for Prestige, especially in the Mahalakshmi area, will start to unlock value because of the coastal road that's coming through over there, and therefore will decongest traffic, adding value to Prestige Estates. Currently around 400 odd crore in terms of its rental portfolio, where Prestige is at 2,000 crore is what they are expecting from this portfolio going forward. So new value to be unlocked from there, and therefore will be free cash flow positive from FY26 is what they are projecting. Of course, the platform deal with Adia and Kotak AIF is a positive. We did mention that the stock has rallied 16% on the back of that, but they are also monetizing their hospitality portfolio, and that can lead to further value unlocking as well. So plenty to look out for in Prestige. Lots of moving parts, but Motilal Oswal positive, 17% upside is what they are penciling in on this one.
Yeah, which is quite significant considering the kind of move that we've seen in the recent past. Thanks so much, Harsh, for getting us those details. Now, let's move to the unlisted space, and we've been continuing to track developments from Byju's, which, as you know, has been facing financial trouble. The latest, of course, is that Byju's is set to lay off over 500 staffers. Rishabh has been tracking this ongoing story for some time now. Rishabh, what can you tell us about the latest here?
That's right, Alex. What we're hearing is that in the latest round of layoffs, over 500 have been fired. So troubles continue for this former unicorn that was once the world's most valued edtech startup. What I'm hearing is that the employees that will be impacted, they'll be mostly coming from the sales and marketing departments, and employees across Byju's tuition centers as well as the K10 departments will be affected. Now, a Byju spokesperson confirmed the development to us, but they did not specify on what this, on exactly how many employees will be impacted. But what they say is that this is a result of the ongoing litigation battle that they have going on with their foreign investors, and the fact that they have limited their access to the $200 million that they've raised via the rights issue. So then they're unable to access, and hence these layoffs and the salary delays that accompany this. Also, an issue that goes on with this is that in October of 2023 is when the new CEO came in, Arjun Mohan, and he decided that the business needs to be restructured. So all of these recent layoffs and fundings are a part of that. So hopefully we go ahead and not see any more layoffs coming in from Byju's.
Thanks so much for getting us those details, Rishabh. Now, that brings us to the end of this particular edition of All You Need to Know. But remember, we've got lots to talk about before the start of trade, and particularly on the significant change in the options contracts that the NSE has announced. All of that lined up just in a couple of minutes. So do stay tuned. This is NDTV Profit.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit. Hello and welcome to India Market Open. There's lots to cover in early trade, lots of cues that we're getting in from the world markets. Global equity markets are down, crude is up. Local cues also quite a few with regard to NSC, cement price hike, auto sales behind us. It's a busy morning, guys.
It's a busy morning, so much to talk about, so much to cover. But suffice to say, the global cues are not positive this morning. It's a tough one.
And maybe Intel and Tesla are symptomatic of what the world is going through right now.
Absolutely. Intel, Tesla, BYD. So a lot to cover, Let's begin by just telling you what's been happening overnight. So the Dow is down nearly 400 points. At one point, nearly 500 points down. So it's a combination of perhaps taking some profits off the table. Remember, Q1 was excellent for the US markets. Maybe you're seeing that. A combination of nervousness, at least, because you have an economy that's growing strong and inflation, which is not close enough to the 2% mark that the Fed wants. So then now the question is, will June really be the first rate cut? And you're seeing that play out in what we saw in the markets overnight. Neeraj was talking about Tesla, and that was the big story in a sense. 5% down on Tesla because their first quarter numbers have seen, or deliveries actually, have seen an 8% drop year on year. And after those poor Q1 numbers, you saw sentiment soar. On the other hand, now look at this, equities are down, bond yields are hardening. So you saw the 10-year at one point even hit the 4.4% mark. It's about 4.35% eventually, but you're seeing that trend go upwards. Not too much respite if you look at other factors like crude, and we'll be having a more detailed conversation in a bit as well. But suffice to say that crude prices have jumped and a couple of geopolitical factors. So remember yesterday we talked about the Iranian embassy in Damascus being hit by a missile strike. As expected, Iran says they think Israel did it and that they're going to hit back. So is that going to be the start of a geopolitical conflagration? Now, to make matters worse, a Ukrainian drone has taken out one of the biggest Russian oil fields overnight as well. So which is why you're seeing crude prices showing that tension. And of course, we'll come to more detail. But there's so many factors today. So crude is up. Gold has hit another high. Bitcoin has crashed about 5%. So you have that whole picture coming. And just look at what's happened to Asia this morning as well, as you've seen a sharp decline. And again, apart from all the other factors, it's the EV pain as well, where you have Tesla and a BYD. BYD, in fact, one of the largest Chinese EV makers, has seen a 46% drop in their numbers just quarter on quarter. So that EV story souring is an interesting one.
Indeed, just before we talk about EV, a quick mention on crude, Tamanna. You've got the OPEC Plus meeting today as well. So while nothing is expected to change in terms of supply cuts or supply addition, it'd be interesting to see what the commentary really is for those guys. And another interesting headline that I caught, and I want to very quickly mention and talk to you guys about it. China and Hong Kong have lost $5 trillion in 3 years, which is more than the market cap of India. I mean, that market is still standing, right? So that's an exciting, statement I read. It was an interesting headline, so just thought I'd bring it up for our viewers. That's the kind of significant loss China has gone through, but it continues to stand. But I believe we've got Vandana Harish. Should we very quickly go across to Vandana and ask her what's really driving crude? Vandana Hari, founder and CEO at Vandana Insights, joins in. Vandana, good morning, good evening. A quick one from my side. Crude has been on an upward trajectory for the from the start of this year, really. It's up 6%. It was up 6% in March, inching every bit closer to $90 a barrel. Now, in your opinion, what is this? Is this a geopolitical stress that we are seeing in, Israel, Iran, that equation? Or do you think that an improvement in demand, anticipation of that, is really driving crude higher? So is it a supply problem, or is it improved demand situation that's supporting crude? Vandana, can you hear me? No. Okay. Vandana, can you hear us? Okay.
I think we'll have to wait for that wave to come in. By the way, just before we talk on to all the other things, just cross fingers for and prayers for people in Taiwan, and hopefully it doesn't morph into something even big in terms of a tsunami hitting some of the other coasts and damaging more lives. So that is one prayer out there for sure. But yeah, the other aspect is, of course, and hopefully we'll get Vanna soon, but what it does mean in terms of one, crude doing what it is doing, but at the other end, just a bit of anomaly from risk assets perspective, because we're seeing gold do what it is doing. We're seeing yields inch up quite substantially. And does that hurt us meaningfully, or risk assets meaningfully, is the other key question.
Most people were expecting gold to sell off, and it's not just stabilized, but it's moving higher. So, well, I think Vandana is back. Vandana, very quickly, crude has been on an upward trajectory from the start of this year. 6% gains in March, 10% higher from Jan this year. What do you think this is? Do you think this is an interim gain on back of, reduction in supply on back of Okay, I believe we are still waiting on Vandana. But yes, talking about gold, what's happening in gold is, I mean, Indians, I'm guessing, are happy. SGB is getting oversubscribed, as always.
It's insane. You know, we did a Twitter poll a few days ago, and I don't know if you saw it. If you didn't, please go to the NDTV Profit handle. We did a Twitter poll that what will do better, and we gave an option of asset classes. And at least when I clicked, gold had the highest in that list. So gold is definitely going to be the story. So we'll try and get more details for you on what's happening with crude prices, but suffice to say that's going to weigh on the markets today, and we should perhaps look at what the other factors are, Neeraj, because global cues are definitely not positive. Indian markets, I wouldn't even say closed down. It was flat to negative yesterday, but the sentiment didn't seem like it was holding up from what we saw on the 1st of April.
Yeah, most certainly. Just the sense of yesterday's movers seems to suggest that there was a lot of positive bias for things getting discounted in a jiffy. So if you just look at what the index did yesterday, deceptive so, but look at what movers did. So the key movers in yesterday's session, Tata Consumer, suddenly people find favor for FMCG. M&M, auto numbers getting rewarded. AB Capital, a brokerage note talking about doubling in 3 years, and suddenly an underperforming stock. Of course, the AB group was in focus, but the stock getting up 10%. Symphony, well, we know it's going to be a hot summer, but suddenly out there, people are seeing that as if there is no tomorrow, take a stock up 10%. Oil India, discounting oil. SAIL, discounting the China data. So things got discounted very, very quickly in trade the last 2 or 3 sessions, almost a bit of a left out feeling. But today, Tamanna is right, skittish global cues, higher crude do make the risk reward unattractive for leveraged longs. Now, you could be buying into stocks based on bottom up research, that's separate, but leveraged longs, maybe for an intraday or a 1 day, 2 day basis, maybe the risk reward isn't the most attractive. Keep in mind, traders are betting at a very wide range for the current month. Of course, it's the start of the series and maybe that is why it also has an impact. But just look at the call and the put data. Puts at 22,000, calls at 23,000. So it's a very wide range in which this is being done. So that's the other aspect to focus on as far as option support or option resistances are concerned. Sectors that may be focused on, pharma and metals, to my mind, certainly stand up there. Somehow the metal trade has come back very, very strongly based on the China data. I think there is a Macquarie note today which speaks about how the week-on-week property registration data in China is also looking up. So metals certainly remain in the fray. And pharma, guys, remains in the fray. I mean, we'll talk about it in the stocks to watch piece as well, but just the fact that there is a $5 billion vision of quality sourcing unveiled by the US, you would argue that emerging markets like China and India, but I would argue from an Indian perspective, India, looking at the generic exporters, looking at very good prospects as a result of this. If this does turn out to be true and if Indian companies manage to find a foothold there, that's a large bill out there over the course of the next 5 years. Waiting to be ticked off.
Yeah, absolutely. I think the pharma space has come to life and heated up in the last couple of months specifically, and as a trend, and of course we'll have to dig data and get you the numbers to back this, so it's not a claim I'm making off the top of my head, but the kind of strictures from the US FDA, etc., have been coming off. That quality piece has been improving consistently. There was a time when that was the biggest trigger for pharma stocks and not necessarily perhaps. But there's a whole lot of stocks to talk about today as well, Samina.
There are. So yeah, just a quick one on the F&O data as well. So while we did make record highs of 22,525, it's aggressive open interest addition was seen at levels of 22,500. So what this really means is while you might have, like Neeraj said, the next 1 or 2 days, could see a little bit of consolidation. The medium term trend remains positive if 22,300 remains a key level of support to watch out for on the Nifty. So if you do break out above that, continue to trade about 22,500, 22,700 traders believe cannot be ruled out at this stage. So long still intact, interim consolidation is what we are currently eyeing. Well, there'll be sectors to watch out for. Well, pharma will be one of them. So will metals this morning. You've had a bunch of metal companies reporting best production months ever, and I'll start with MOIL. If I can pull that one up on the screen. The stock was fairly active over the last few days of trade. They've recorded the best ever production at 17.5 lakh metric tons, which is up 35% year on year. They also have record sales for the month to come in at 15.3 lakh metric tons, up 30% YOY. So great numbers there. The stock should see a bump up, and of course, let's not forget that the dollar is looking a little subdued this morning, so that could be another factor that could keep metals in focus. You also have NALCO, which has achieved its highest ever aluminium bauxite production in FY 23-24, and you've got Hindustan Zinc. Now those numbers not looking as great as it did for NALCO and MOIL. Hindustan Zinc's mined metal output is marginally down, but it's up quarter on quarter by 11%, but there's a marginal downtick year on year on that number. Refined metal production is up 6% quarter on quarter and 1% YOY. This one, of course, had seen a pretty big move in trade yesterday. Be interesting to see how this plays out in today's day of trade. Well, a quick other one, JSW Energy. This is an update. The board has approved fundraising plans of about 5,000 crores via QIP, and the floor price is set at 510 rupees. The stock had seen a big move in trade yesterday, potentially on back of news of this fundraising approval coming through. But again, could be seeing a downtick on back of a big discount to yesterday's close. So while everyone's calling this a funding winter, I'm not sure how that is, because all these QIPs, fundraising, listings are getting snapped up.
Funding winter is for the startups.
Acha.
Funding winter is in Bengaluru.
Not in Mumbai.
Not in Mumbai. And I think because that whole cycle has
slowing down
perhaps
now.
Run its course, where you could just ask for anything on a great idea in a coffee shop, and then someone wrote a check.
I mean, there were times tech companies were going at 20x.
Yeah.
Now you get 7-8x, so, you're still good.
Now it's about companies where you can see what they're going to make. So old infra and old economy in vogue. But yeah, a couple of other stocks that on my radar, Anupam Rasayan is one that I wanted to talk about. They've signed an LOI with a Japanese multinational company with an aggregate value of about 743 crores over 7 years. They're going to be supplying to advanced intermediates using fluorination chemistry. Now, as my colleague Varsha explained this with a lot of enthusiasm, this particular chemical that they're going to be making, they will be the first company in India to make these key molecules. It's a high margin business, which is why you might see a positive outlook on Anupam Rasayan today. And their supply commences, from FY 24-25. So that's one to watch out for. Suntech Realty is another one, because we've been talking about the reality boom in advance, but is a standing structure in a key commercial area really able to get that yield? And which is why I found the Suntech Realty story interesting. So they have this premium building at BKC, which they have leased out to Bennett Coleman. And the revenue is about 2,000 crores to be generated over 29 years. So till FY26, that works out to about 140 odd crores, and then it moves out to 300 crores per year in terms of yield. So a rental yield at this level shows, some real green shoots in commercial real estate as well, on ground. I would say evidence of that. Cement stocks was the other one. So now you had some reaction yesterday as well, but I would look at some of those cement counters, ACC, Ultratech, Ramco, Shree Cement, your entire lot. So they have hiked prices, and the price hikes are fairly significant, and they come at a time when it was expected cement companies would not be able to hike prices ahead of elections, but they have. The price hikes are also pretty decent, 30 rupees a bag in Karnataka. We'll just pull up that chart for you. Look at Tamil Nadu, 50 to 80 rupees a bag. So you might see a follow-on reaction there as well today.
Just very quickly, Neeraj, I want to comment on Suntech Realty. So while this is great for them, it also makes media sound like it's in a good space. You make a 2,000 crore rupee commitment for 29 years.
Yeah, absolutely. But perhaps they're moving from, if you know Bombay, those of you know Bombay, they're moving perhaps from old Mumbai, VT, to BKC. So that's another level of move. But
the annual mat comes to about 50-60 crores for that headquarters. So
still a lot of money.
But yeah, I mean, age-old company believes it will last for another 100 years, which they very well could. I mean, who's to challenge the newspaper business there? So yeah, pretty interesting there. But no, on cement, interesting. Tamanna was talking about it. Yesterday's trade was interesting on cement. Look at the price OI action in some of these. So Ramco, Dalmia, India Cements, very strong price and OI build up there. So long formation seen in cement already. So pretty interesting that somebody had a whiff, somebody did this, and maybe there could be more in store as well. So watch out for cement stocks in this session.
I was just to add to that, I was seeing a note, I won't name the brokerage, from I think 48 hours ago, saying that cement looking tough because they're unlikely to raise prices. So
yeah, certainly.
So shouldn't be subscribing to that brokerage report.
I'm not naming any names, but yeah.
Okay, and some more stocks just very quickly. Before I think we'll probably get in a word from Vandana Hari in a moment from now. But pharma stocks could be in focus today, like we were saying. U.S. government has laid out a vision for multi-billion-dollar pharma sourcing plan over multiple years, and therefore the likes of Sun Pharma, Dr. Reddy's, Lupin, Aurobindo, all of these could be in focus today. Watch out for the CDMO companies as well, the likes of Divi's, etc. They could all be in focus because of this. In case there is a reaction, you should know why that is happening. Remember yesterday, some of these stocks, especially the CDMO players, were very active. JSW Energy, board has approved a fundraise of 5,000 crores via QIP at a floor price of 510. Remember, the floor price need not necessarily be the price at which the deal is done. At times it happens at a discount. Wokhart did. But still the stocks jump up if the appetite is good. 5,000 crores is a large one. Let's see how JSW Energy reacts today. The other one is Anant Raj Industries, and this could be very interesting simply because amongst everything else that they are doing, it's still a small cap company, but it's set up a meeting, or Capital International, one of the biggest FIIs for India at least, they are meeting Anant Raj, and somehow something tells me this doesn't mean that they're going to invest, by the way, but because this is happening, I dare say you could see a bit of a reaction in Anant Raj Industries today. So do watch out for this one as well. I don't know how Sona BLW reacts, to be honest, guys, but they've got an approval for a second hub under PLI. Maybe that stock reacts, but could be interesting.
Yeah. So many more to talk about, but let's quickly get a word in from Vandana Hari. We've been trying to connect with her since the start of the show, so good to have her on. First, let me check the audio. Vandana, can you hear me?
Yes, I can. Good morning.
Good morning. Very good morning to you. This is Tamanna here. Great to speak to you here on NDTV Profit. Vandana, we're trying to get a sense of what's happening with crude prices. Is this a sustainable upward trend that we're now seeing? And the point that Samina was making earlier, is this a supply issue or a demand issue? Are you seeing this more because of geopolitical problems now cropping up, or perhaps an economy, a global economy, which is now shifting into the next gear?
So it's very much a supply risk factor, I would say, at current levels. So let's say Brent around $88, $89 a barrel. Compared with $75 when we entered 2024. I would say at the current levels, there's at least a $12 to $15 per barrel pure geopolitical risk premium in crude. So there's supply concerns actually on two fronts simultaneously now. One is, of course, the Middle Eastern tensions, of course, centering around the Gaza-Israel conflict, but now seems to be spreading out some more following the attack on the Iranian consulate in Syria a day ago. And while there's been no supply disruption as such due to this Israel and Hamas conflict, the fear has grown as a result of the widening of tensions. And the second front, of course, is relatively new over the past few weeks, definitely through March, as we saw a spate of Ukrainian drones hitting Russian refineries. So an estimated 800,000 barrels per day of Russian refining capacity has been shuttered because of all these attacks on Russian refineries, which means Russia is exporting less refined product to the world markets. Right. So those two, partly it is an actual disruption, but much more than that, it is a fear of the worst case scenario of further disruptions in supply.
Right. Vandana, very quickly in terms of trade, and this is paper crude I want to talk to you about, where are you seeing support and where are you seeing resistance at? With a delayed rate cut from the Fed, a stronger dollar is what we're anticipating for the next couple of months at least. Will that cap gains for crude?
Yeah, so definitely the outlook for the global economy, and which again tends to center more or less on the U.S. and what the Fed is going to do with the rates, definitely that is a supporting factor for crude. If crude does lose its footing or the rally runs out of steam, I would say it would probably come from renewed concerns over the global economy, and we already see some signs of investors starting to lose confidence in the Fed rate cuts, when it will start and the pace at which the rates will be brought down. So we could see some pressure coming on crude from that end. I do see resistance around 89.90 for Brent, but as long as these two fronts continue to simmer, the Middle Eastern crisis and the Ukraine-Russia conflict becoming worse, I see it a support at least at around $80 for Brent.
Very quickly, Vandana, I don't know whether you're tracking the dynamics of what's happening on Russian crude, and I came across an article this morning that said Russian crude exports are at a record high. Well, they're the ones causing all the problems. It seems like it's working out really well for them. And India continues to buy a record amount of crude from Russia. How does that dynamic fit into the bigger picture?
Yeah, so as Russian refining capacity is being hobbled, as I mentioned earlier, nearly 800,000 barrels per day has been forced to shut in because of the drone strikes. Russia has more spare crude that it cannot put through its own refining system, so it will export more. That is natural. As far as Indian imports are concerned, I think that the fear that Indian imports of Russian crude would come down was a little bit overdone, overstated. Yes, the discount that India has been getting has been crunching, which is not a good thing for India. But nonetheless, there is a discount, compared with comparable crude. So as long as there is any discount that Indian refiners are able to get on Russian crude, they will buy it. And as long as they are steering clear of violating U.S. sanctions, they will continue to buy. So, I don't see a steeper drop in Indian imports of Russian crude. It makes sense to buy it as long as there's any kind of discount.
Okay, Vanda, we'll leave it at that. Thanks so much for taking the time out and being with us today and giving us your thoughts on this. Well, it remains a pot boiler situation, pun intended out there. Let's wait and watch how it shapes up. But what's also, well, if I can use that term again, pot boiler, is what's happening on the currency side. Well, the INR is stable, but a lot of mechanics within the INR are not. And Alex, I believe you are talking about what's happening on the derivative side in a meaningful way on the equity end in the session today.
Absolutely. In fact, that is the focus today because of what was announced by the National Stock Exchange yesterday. In fact, I would invite Samira to join us because this is a conversation that we're going to have with her as well on the editor's cut. Let's break this down first to talk about what was announced today and what the implications are, because there are a couple of scenarios that we will have to peer into, and we'll also talk about who benefits or who stands to benefit the most. Agam, let's start with what was announced and then we'll move from there.
Sure. So what's announced is that the lot sizes for 3 of the derivatives on the NSE have been reduced. So the Nifty 50 contract will reduce from 50 to 25. The Fin Nifty contract will reduce from 40 to 25, and the Midcap Select Nifty contract will reduce from 75 to 50.
Correct.
Where the effect will come into place on the 26th of April. That is one day after the 25th April expiry, and this will be valid for the July 2024 contracts going in. The reason why they've taken it up is, of course, this is an exercise that exchanges take every 6 months, and well, from what we understand is that SEBI has given a notional size for each contract to be within 5 to 10 lakh rupees. And considering the Nifty has run up so much, and it's sustaining well above the mark of 22,000, 22,500 at the moment, of course, it does seem like exchanges think that it's a good time to.
What is the notional value right now?
So at the moment, the notional value of the Nifty 50 is about 11.5 lakh rupees.
11.09. But very quickly, Agam, you said this is a biannual revision that the NSE undertakes. When was the last time that they actually significantly reduced their contract size?
So, well, the last time we saw a change was, in fact, the Nifty moving from 25 to 50.
And when was that?
This was about 5 or 6 years ago. I still need to.
So this is a big significant move, even though it's business as usual.
It certainly is, but it's for good reason, because we have seen the Nifty move up substantially as well in the last 5 or 6 years. So yeah, that's largely
the long and short of it, if you can call it that. But let's talk about implications, and I guess to a certain extent, Agam, we're going to have to, and Samina, we're going to have to build out a few scenarios. But let's talk about beneficiaries first. On the face of it, seemingly the exchanges and the brokerages have.
Absolutely, always. The house always wins. Well, so of course it's going to lead to a better liquidity, and this will also lead to a lot of institutions perhaps be able to more finely manage their risks, because you just have that much more granularity since you have smaller lot sizes. And the real question is whether or not your institutions and retail participants benefit. Sure, the lot size is very attractive, but it'll also come down to several costs.
So therefore, and we'll come to that in just a bit, but on the opposing side, we've seen BSE make some big moves to their betterment, and we've seen that reflected in the stock price, which is up 500%, over 500% over the last 12 months.
Yeah, so I think the one house that may lose, at least sentimentally this morning, could be BSE. Of course, now, just to put this in perspective, NSE is in a different league altogether, right? So there's no way you can compare the two, but let's not forget, BSE is listed, NSE is not. So if you want to play the exchange game, you want to play the India equity story, your only way to do it is through the BSE. Now, just to put some numbers in perspective, NSE, like Agam said, has halved their contract size on the Nifty 50 from 50 to 25. This move also comes in to sort of keep up with what you have in terms of the Sensex contract size. The average Nifty contract after this change comes down to 5.5 lakhs, 5.5 lakhs versus 11.09 lakhs, which is what it was when it was 50 units, so 50 shares in terms of a contract, as compared to Sensex, where the unit or the lot size is 10 shares, the value of it is about 7.5 lakhs. So if you're comparing in terms of value, volume, liquidity. BSE is at 7.5. You've got now NSE, which is at 11, coming down to 5.5. So this change could be also viewed as moving or keeping competition at bay, right? We've maintained NSE is a league in itself, but nevertheless, BSE is gradually inching up. Last Jan, when they had the new CEO come in, there were a number of changes that were undertaken. One such being that Sensex weekly expiry was moved from Thursday, which is when you have the Nifty weekly expiry, to Friday. So they wanted to keep that separately, and that worked out really well for BSE.
And they've got an expiry on several days of the week.
Yeah, and they saw a massive bump up, right? So if I've got those numbers right, the average daily derivative turnover on BSE rose 34 to 34.6 trillion in FY24 versus 1.38 trillion from a year ago. So while I said two different base, BSE is still really small, but someone could view this as a move of NSE to continue to maintain its leadership.
Yeah, I remember very quickly that for a few weeks, the NSE had decided to keep the Bank Nifty contracts expiry on Friday, but they took it back because I believe that BSE had come in and requested you can't do that because we already have the Sensex expiries there. So please, you're going to have to take a step back, which is after that, in fact, it was decided to pull it back on Wednesday.
Let's talk about the last implication, because I think to a large extent, a lot of people interpreted this as resulting in significantly higher volumes. However, I think the kingpin or the deciding factor is going to be the cost of each contract. How do you explain that?
And I think this is going to be the most important aspect to watch out for. Currently, a contract in an options market, on an average, is about 20 rupees per lot size. If the brokerages decide that they do not want to change or reduce their contract or brokerage overall, that means instead of paying 20 rupees for a 50 size contract, now we're going to pay 20 rupees for a 25 size contract, which means that for a 50 size contract, or rather two contracts, you're going to have to pay 40 rupees. All right. This really doesn't become a huge amount of an issue when you actually sit and write your at-the-money options, because there the premiums are relatively larger. But when you start moving out of the money slowly, steadily, that's when option premiums becoming smaller and smaller. And the further out you go, the less option premiums that you will see. At one point in time, it will be very, very I would say it won't be lucrative at all if you actually go ahead and sell those
Could
options.
one interpretation of that be that we will see lesser volatility? Could that lead to lesser volatility?
Yeah. So it may not lead to lesser volatility. I think of it as a positive. Sure, it will certainly reduce the kind of traction that we see on tail ends, but the fact that you're not getting to write those options anymore also reduces the overall risk of the system. Because when you write an option, you are also taking on
unlimited risk.
Unlimited risk theoretically. And that, of course, reduces substantially.
And this goes back to what the regulators wanted. Remember, a couple of weeks ago, we were talking about all that froth across the broader market. So this also could be on the lines of reducing risk, protecting retail investors. But very quickly, how does this compare to the BSE costs? And I think this is going to be a sentimental negative on BSE, by the way, this morning. It wouldn't surprise me if the stock sees a gap down on back of NSE's move to half contract size.
So brokerages remain the same for BSE contracts as well.
Okay.
And in this case, of course, again, it's going to come down to, the fact remains that BSE option market is still not very liquid. So it's going to be, that's also something that's going to be a wait and watch.
And this kicks in 26th of April for the July contract. So we'll have to watch how these pan out over a period of time. And remember, the most important point is whether or not the price of a contract, the cost of a contract will change. So we'll have to probably speak to a few brokers and see what their reaction is going to be. That brings us to the end of this particular edition of Editor's Cut. It's been an interesting one. Let us know what you think in the comment section, and do stay tuned. Lots more coming up before the start of trade. This is NDTV Profit.
I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Welcome back. You're watching India Market Open. Let's do a quick check of the implied open. Remember, most of Asia is down in the red, and we're looking like we're in for a rough start as well, as per the GIFT Nifty. The implied open about 119 points down. What is it looking like on the F&O side of things? Agam is joining us for more. Do you hope for any enthusiasm? Because more people can now participate for less money. But anyway, the timing perhaps is not too good.
Yeah, so what's really happened over the past few days is that every time the market opens at a certain level, taking into account the global cues, well, we start to see a little bit more consolidation, sideways movement, and that's what's happened yesterday as well. Whether or not it's an expiry or no, we tend to see a lot of consolidation across the indices, and that's how things panned out yesterday too. For the Nifty, of course, it was a flat day of trade, very little traction in terms of index futures, just about 2% added there. For the Bank Nifty as well, again, marginally in the red, largely flattish. Open interest seeing about 1.2% added. Again, a very quiet day. Yesterday, in terms of the options market, the Nifty, well, did see a lot more traction around 22,500 and perhaps on expected lines where we did see a lot of traders write that particular strike in terms of calls as well as puts, as you can see on your screen there. But moving on to your overall open interest distribution, we still do have a significant amount of accumulation in calls around the 22,500 mark, and of course in terms of puts, it's fairly distributed between 22,000, 22,100. At the moment, it does seem like consolidation could potentially be on the cards, but it'll also depend on where we in fact open, and the first 15-20 odd minutes of trade could potentially also decide how things could pan out for our known markets. Well, of course, it is the Bank Nifty weekly options expiry, keeping an eye on 47,500. It's on the other side of the end as far as this bar graph is concerned, but 47,500 is the key mark to keep an eye on, because that's around where we have seen a lot of traction for the Bank Nifty. Well, moving on to stocks, again, it was a fairly mixed day of trade, but shorts for India Mart and Gujarat Gas, longs for Ramco Cement, Aditya Birla Fashion and Havells. In terms of stocks, we saw unwinding. Well, we did see short covering for JK Cement, Emphasis and Godrej Properties, and longs unwinding coming through for Info Edge and ABB. But the real question is, what do you do in these markets? Well, let's get an expert opinion here. We have Aditya Arora of Analytics Research who's joining us on the show. Aditya, good morning. Thanks for joining in. Again, your view on the indices, more consolidation on the cards?
Very good morning. Yeah, absolutely. The data is actually suggesting consolidation because there isn't big a long build-up or short build-up in index futures. So probably some consolidation more over there. But stock-specific action is good. If we see yesterday, then all the middle stocks have done really well in this week, and a lot of banking names also popped up. But consolidation in banking name is still continuing. So I think those candidates are buy on dips, which makes Bank Nifty also buy on dips candidate. So I think market is a good buy at these levels. Today we'll open with gap down, but it could be a short put shorting opportunity. So neutral to bullish bias is a good strategy in this market. So selling put option is a good strategy, and we'll see breakout once Nifty crosses 22,600. So we can see good momentum over there. On Bank Nifty front, I think good momentum is likely to catch up above 48,000.
Markets go on the view on how things could pan out for the Nifty and the Bank Nifty. But Aditya, I believe you have a option structure that you're playing out on IRCTC.
Like IRCTC has been consolidating since many weeks and months, and now this year it's doing pretty well. So I think this can outperform, and outperformance may continue. So it's a bullish strategy on IRCTC. We can we can sell 1050 put option, which is trading at 58.60, and we can buy 1000 put option, which is 29.75. So if the stock goes above 1050, we'll get the full benefit of the premium, which we have sold. Maximum loss potential over here is 18,506, and maximum profit potential is 25,244. So it's a neutral to bullish strategy. If the stock goes up, one who constructs the strategy gains in this strategy.
Aditya, I know while you joined for options, I'm just inclined to ask you, we saw fairly significant long addition yesterday in some of the cement counters. Have you looked at the likes of Ramco, India Cement, etc.? Because the OI buildup was very strong. We also know now that there's a fundamental reason for cement prices having increased prices. Is there merit in trying to initiate a naked long into any of the cement names?
Very good morning to you. I think it's a very good idea to go long on cement counters, because all the industries which are tilted towards infrastructure are doing well, whether we talk about reality, whether we talk about metals, and now cement is also catching up. So definitely cement stocks will also see new highs, as we have seen in reality. So just today we have got a buy call on Ultratech Cement by a major brokerage house. So similarly, smaller candidates like India Cement, Ramco Cement also look good, but the outperformance will continue whether we talk about large caps, small caps. Very good time to go long on cement space.
Yeah. Aditya, thank you so much. We'll leave it at that. Thanks so much for taking the time out and being with us today and giving us your thoughts.
Thanks.
So, well, viewers, some option strategies and also a view on cement. We'll, of course, get in our other guests to talk about cement as well. So, that's the other interesting thing. Before we get in our guests, just a quick word, because there is so much of talk around this whole policy that is getting framed in the US, so therefore pharma. And the other thing is this Chinese data, the India PMI, so on and so forth, all pointing towards, could there be a revival in, a strong number in manufacturing and what it could do to metals.
Yeah.
We've seen some evidence of that. Hitherto metal stocks have flattered to deceive, gone up and then come off. Could this time be different is the key question.
So in China, in terms of China, the Caxton data, of course, for manufacturing was higher than expected. The services data was out early this morning, and that is also higher than expected. So you're probably going to see a China revival on track. And then, of course, the question that Samina has been asking for a long time, then what happens to India? Does India become less attractive, less favorable for foreign funds? So that also plays out one way or the other. But I found this whole EV thing fascinating. The fact that EVs are suddenly now losing charm in that sense? I know you have just two sets of data, Tesla and BYD, but there was a survey, Indian survey of consumers a few days ago, where consumers were asked, would you buy an electric vehicle? Only 5% said they would, if it was in the 8 to 10 lakh rupee range.
You know, we have a 33% weightage on this table, which is looking to buy an EV. I'm just wondering to ask whether the weightage is inclined to buy an EV.
You guys are not in the 8 to 10 lakh rupee bracket. I'm sorry. This is the 8. This is your.
No, don't insult me so much. I can afford an 8 lakh rupee car.
No, you guys
I'm not that underpaid.
You guys are way above the 8 to 10 lakh rupee bracket. So, you know, you guys are the 0.001.
I do enjoy the Uber. We'll stay with that.
But speaking of autos, should we get into an auto conversation?
Absolutely. Is EV really pipped to be the game changer everyone's hoping? Kumar Rakesh, India analyst of IT and auto at BNP Paribas, joining us this morning. Kumar, very good morning to you. Great to speak with you here at NDTV Profit. And while we're gabbing on whether the EV story is really going to come to fruition, the hard data from March and the last financial year tells us that passenger vehicles are still doing fine, ICE is still king, and so are anything that passes for an SUV. Two-wheelers have also recovered. Would you say that that's the key takeaway?
Hi, Tamanna. Good morning, and thank you for having me on the show. It was fascinating to hear your conversation just before I joined in. We actually ran our own survey with the owners of electric vehicles to understand that what is the real bottleneck in the adoption of these electric vehicles in India. And there are two key takeaways which we got from those surveys and interactions. The first is the charging infrastructure. It may not be such a big bottleneck for the two-wheelers, but it definitely is a bottleneck for passenger vehicles because they typically drive longer distance and they would want to have the charging infrastructure set up on the path on the customers typically travel on. The second is the charging technology as well, because the current charging technology takes quite a long period of time to charge the vehicle, which is not very convenient to customers. And hence, most of the customers today are charging these vehicles overnight at their home. And that restricts the use cases that they can potentially use these vehicles for. And that possibly is the key bottleneck in the near to medium term. While there is a good understanding of the total cost of ownership these vehicles offer, but it is right now restricted only to customers who are using these vehicles for a really long journey, whose daily usage would be more than 40 kilometers, is when these vehicles start making sense for them, both from cost as well as the challenges which the technology currently has. That being said, on the two-wheeler which you asked, there we believe that the customer understanding is very well matured now, and they understand that these electric two-wheelers are the next generation technology. They don't need charging infrastructure because the battery sizes are small. The time needed to charge these vehicles are much lower, and they are quite comfortable charging these vehicles at home as well. And there we expect a structural increase in adoption. March obviously was the month of pre-buying before the incentives were to come down from April. And hence we saw very strong adoption, penetration reaching almost 9% from about 5-6% in the prior months. So we would expect April will be much weaker post this pre-buying. But again, a structural increase in adoption should start continuing from May onwards is what we would expect.
You know, just to close off that EV conversation, I was looking at the data, and this is Vahan data. In the last 10 years, in FY 2014, there were about 2,627 EVs sold. In FY 24, it's 16,75,800 EVs sold. So you are seeing a big jump. The pace is the question. But I want to come to you, Kumar, also on the issue of commercial vehicles and tractors. It's been a dismal show, to say the least. Now it's being put down to perhaps a delayed monsoon, a whole other set of factors. Do you see this trend persisting, or would you expect an improvement post-elections?
So for commercial vehicles, it's fair to expect post-election, we would expect a reversal in the demand. The new government, when that comes in, should start focusing on issuing the tenders, and the new construction activity should start picking in. And that's when we would expect the commercial vehicle demand should start reversing. The current industry volume is still similar to where the last peak cycle volumes were. So there is still some headroom left for this cycle. Peak volume is yet to be arrived. The tractor is a segment where the last 3-4 months data have been quite disappointing. Double-digit volume decline continues, and it it was in the March month as well, a double-digit volume decline, both in retail as well as wholesale volume numbers. And that is a concerning. I believe that the consensus would be building some growth going into FY25, and those numbers would definitely start coming under question, and there is a downside risk. If we look at a long-term trend over the last 40 years of the tractor industry data, there is a huge cyclicality in that, and that cycle typically is of 3 to 5 years. And if this trend continues, there is more risk on the downside than on the upside, what the expectations currently are for FY25 for tractors.
Kumar, another interesting story that has come about, and I don't know how much you're tracking this, but Tata Tech and the BMW JV. So we're going to be hearing from Warren Harris in a bit from now, but this of course saw a big boost to the stock. It's a prestige project. How much value do you think this adds to a Tata Tech, and is there an impact, if any, on an LTTS which had a pre-existing deal with BMW? Now, it's not clear if this is in lieu of or in addition of, but clearly a significant build-up of BMW's presence in India, and their software updates are going to be through Tata Tech. So just your take on this deal and the implications for these two listed entities.
Sure, Tamanna. I cover technology as well, coincidentally. Yeah. So.
I knew that. That's why I asked the question. So not so much of a coincidence.
Yeah. Over the last 2 decades, actually, if you see, India has become a hub for outsourcing technology work, and it's both for IT services as well as engineering and R&D services. Actually, among the GCCs, which are the captive entities of these global enterprises, India would be having close to 45 to 50% share of global GCCs. So India has become a dominant space for establishing such R&D centers. And it's no surprise that some of the leading automakers are incrementally looking at India more favorably, especially in the context when I cover technology and I see the resource crunch which many of the enterprises face in their developed markets, be it US or Europe, makes India even more favorable that you start looking at India more favorably to set up incremental R&D centers here. And that is something which possibly is just reflecting in these news updates which you are seeing. So these most likely are incremental work coming to India in lieu of how it is far more difficult to ramp up similar tasks in Europe or US. And also it's the cultural difference. Being a traditional automotive company, there's only so much in-house that would be possible to do at a reasonable cost. And it becomes far more easier to partner with some of the companies who are really deep into this, and which is where many of the Indian IT services companies or engineering R&D companies start to shine in this context.
Yeah, absolutely. So watch out at 9:35 for that conversation with Warren Harris of Tata Tech, where we ask him about this deal and a lot more. Thank you so much for joining us, Kumar, this morning. But let's get to the meat of the day. Aditya Agarwala, Head of Research and Investments at Invest4Edu, is now with us on the show. Aditya, very good morning to you. It's been, I think I would describe it as Indian markets holding up in the face of a global storm that's brewing, and that we've seen overnight deepening. In terms of the Nifty and the Bank Nifty, where do you see the challenge coming in today?
Morning, Tamanna. Thanks for having the show. I think we are still in that range. It is just that the range has shifted upwards, Tamanna. On the downside now, maybe 22,200, which is the 20 DMA, will act as a support. On the upside, for back-to-back 3 trading sessions, we've not been able to sustain above this hurdle of 22,550 zone, even though we did make a new all-time high by a marginal few points, but it did not really sustain above that. What I'm looking at is that resistance to be taken out decisively and markets closing above that. Good thing is the broader markets are participating in the past 2 days, so which is a healthy sign. But today will be a key trading session to watch out for, because we'll be opening with a gap down, and it needs to be watched very closely if the support levels of 22,350, 22,300 levels hold on in today's trading session. Otherwise, we'll again slide down to that lower end of the range. So my take is we are still in that range, broader range between 22,550 to about 21,800, with an immediate support at 22,200, which is the 20 DMA. Something interesting is every time the bank Nifty is trying to inch higher and maybe it is closer to its new all-time high, we again see a bit of a selling pressure that comes in. So bank Nifty is something which is not been participating the way it should, even though it has participated in the past few trading sessions. But still, I would want to see that kind of zing coming in from the bank Nifty above 48,000 levels, which is not coming. So all in all, I believe markets will remain range bound, both the Nifty and the bank Nifty. And markets could turn a little choppy as well from the time the polling starts, maybe after 16th of April, the first wave of polling starts. So might be markets can turn volatile after that.
Phase 19th April onwards is going to be one to watch, definitely. And I mean, no exit polls, of course, but we will see perhaps some of your first cut of pre-poll surveys coming in the next few weeks. That may be a trigger as well. I have to say, though, so far the elections are being seen as by the market as a bit of a non-event. Now, having said that, Aditya, let's quickly take your picks for this morning. What would be your top 2 calls?
So I'm going to buy and sell, clearly, because I don't know how the markets will behave in trade. Trade could be soft, could be sideways. So I've got a buy recommendation on Birla Soft. This stock, after a big up move, went into consolidation. Now I believe it's time to look at the stock again. Could be a time for IT stocks to come back after an underperformance. So Birla Soft is something that I'll go ahead and buy for a target of 820 on the upside with a stop loss at 735 on the downside. I'm going to sell on Axis Bank. Looks like there's a bit of a selling pressure which is coming into Axis Bank. And as I mentioned, banks are looking a little wobbly at the moment. So Axis Bank could be one of the candidates to short for a target of 1010 on the downside with a stop loss at 1070 on the upside.
Right. Gentlemen, stay with us. We'll also put the focus on the currency markets. The Indian foreign exchange derivative volumes are expected to decline quite sharply on back of mandatory exposure rule that kicks in on the 5th of April. Now we'll break this down and try and understand what this means for currency traders, speculators, and individuals or companies, smaller ones, that actually have an exposure to cross currency or the dollar. Anuj Gupta, head of commodity and currency at HDFC Security, joins in to break this down for us. Anuj, break this down for the sake of our viewers. Simplify what this means. From what we understand, the regulator up until now had allowed speculative trade on the dollar-rupee pair without any underlying exposure of up to 100 million. That rule now stands changed, and I believe the industry is concerned that this is going to impact volumes in a big way, because a lot of the trades are not always because you're looking to hedge an exposure. Most part of it seems to be, or has been, speculative.
Good morning. See, on 5th Jan, RBI released a circular regarding the currency market, and they released the circular. It mentioned that clients will trade only the currency market as per their physical exposure. It means only currency market used to hedge the position which is physically exposed in the physical market. So now, as per the circular, it is clearly mentioned that the clients who want to trade in the currency pairs, particular which involve INR, they can only trade as per their physical exposure. It means that physical trader can only trade in the market. No intraday traders allowed in the market. No speculator can trade in the market, and even no other option trader can trade in the market. So, and if you see this currency market, almost 90% volumes comes from the intraday traders or speculators. So now after this circular, they will not able to trade in the currency market, and will see a sharp decline in the volume. Only the physical exposure trader will trade in this market as per their physical exposure. Right. And it also be mentioned, or it also be keeping in the books that this much of amount they have a physical exposure, and equivalent this much of amount they can only hedge from the market.
Anuj, let's just try and understand this. Small companies, corporates, clients who actually have an exposure usually use the forward market to hedge through a bank. What we see otherwise outside that is large speculators. Now tell me, what do you think is the rationale of the regulator to do this? Because I know all the way back in 2007, when we were dealing with the currency crisis, this is exactly what happened, right? Where underlying was required for cross-currency trades. Why is the regulator doing this right now, especially if volumes are going to be impacted so much more? The markets are so much more deeper today than they have been in the last 20 years.
See, this circular is a little bit confusing because nobody is able to, interpret the reason why RBI did this, release this circular. But yes, definitely because in the futures market, currency has on NSE or on BSE. So on the both exchanges, 90% volumes comes from the speculators and traders and intraday traders. But small corporates, importer and exporter are doing this kind of hedging from the bank. So I'm not expecting that that will be benefit for the market. I think this is little bit towards the it lose the strength of the traders in the market, because when we talk about that Indian currency would become global currency. So now at that point of time, if we took this kind of step, possibly that will hurt the traders or investors.
Right. Will this have any impact over the next couple of days or weeks as this, of course, kicks in on forward premiums?
I'm not expecting so much kind of forward premium, but yes, definitely the volume of the exchange will shrink from the side, and even many broking houses, all broking houses who are trading in currency market possibly lose their businesses.
Lastly, Anuj, I'm sure the industry is shaken up from the sound of it, and I'm sure there are appeals being made to the regulator. Realistically, do you expect the regulator to come back and, maybe undo this, delay this, make some changes on what they've said with regard to underlying? Because if 90% of the volume is going to be hit, I genuinely don't think the country or the regulator wants that.
See, every time we saw this kind of activity in agri commodities, banning of the agri commodities, and again restarting of the agri commodities. So similar kind of thing we saw in the currency market. Possibly after some time they will, come out with a new circular or new guidelines. But possibly, I think it will take time. But now recently, this, from the 5th of April, no trader, speculator, or intraday will able to trade in the currency market.
Right. Thank you for that, Anuj. This is not good news. Remember, proprietary traders and individual investors are responsible for 80% of the traded volume. The smaller companies, the smaller investors who actually have an exposure to a foreign currency use the forward markets or the forward premium to go out and hedge their exposure, usually through banks. So the business that's getting hit is the speculative business. But there was an analyst who said that because of the inclusion of India on the debt indexes for Bloomberg, etc., this doesn't come in as a surprise, because what the regulator is trying to do is keep the currency stable. So while they've had ammo in terms of intervening the market as and when required to support the local currency, this could be one more step in that direction, where they're trying to keep the dollar rupee pair stable. It's been one of the most stable currencies across Asia, at least in the last couple of years, guys.
Okay, well, from currency and whether the currency has an impact on stocks or no, but definitely a lot of stocks in news today. And let's talk about the fundamentals as well. Mayuresh Joshi, HR Market Smith India, joins us right now on the show. Mayuresh, thanks for waiting for us, and appreciate your patience, and good morning to you. Mayuresh, we were talking in the studios about whether metals become an interesting bucket to bet on, considering this uptick in manufacturing that we're seeing globally, but particularly in China on the property side as well. Is this still a false alarm, or could this time metals rally for real?
Morning, Neeraj. Thanks for having me on your show. I think the base factor that remains is a genuine recovery in China, because China is the sole market that will determine how numbers probably play out in terms of both production as well as supply, because it's one of the largest reprocessing economies as far as the metal sector is concerned. The second element obviously is the inventory levels across the globe. So whether you take ferrous or non-ferrous, steel stocks, lead stocks, copper stocks are at abysmal low levels across the globe. And as demand starts coming back slowly and steadily, whether in the European zone or the North American markets per se, and a genuine recovery in China, the prices on LME will start showing an uptick northwards. This will also mean that input costs, which includes iron ore, bauxite, alumina, will start moving higher as well. But then it will genuinely indicate that demand has come back strongly, consistently, and it is here to stay. So very premature, at least from a very global perspective in terms of these data points. Consistency over the next 2 to 3 months are key in terms of a genuine recovery. In the same context, Indian domestic volumes remain extremely strong because of the infrastructure activity and spending that is happening, expectations of private capex coming in at some point of time. But a large element in terms of operating leverage largely not getting played out is because LME prices still remain subdued. So I think would take this with a pinch of salt, Neeraj, would see consistency in data at least for the next 2 to 3 months to genuinely believe whether we are genuinely on a strong track to recovery globally as far as demand dynamics are concerned.
Okay, Mayuresh, now we were toying around with the once newsmakers of the day today, and on that, the data that is coming from a MOIL in particular, the FY24 growth numbers, the highest and beating the best year that they have ever had in history by a cool 28%, or a NALCO coming out with numbers as well. Is there merit in looking at any of these individually?
So numbers have been outstanding, no two ways about it. Now the only factor that remains is over FY25 and 26, with the high base that they've probably created, how are they going to outbeat this performance? Obviously, I think, as I said, in the domestic context, demand remains extremely strong. Pricing remains a little bit volatile in terms of how global queues are, and input costs also remain volatile. So if the input costs presumption and assumption is they remain stable over the next few quarters, the expectation in terms of a stable margin performance is a given. The other element obviously is in terms of the overall volume growth itself. How much can they outperform over FY24 in 25 and 26? So one has to really assume very practical presumptions in terms of the kind of volume growth assumptions that can come through, specifically for both these counters. Obviously, expectations in terms of aluminium as an end use case, as far as electric vehicles, electric factories are concerned, is a big factor moving forward. And so is the expectations in terms of domestic demand and industrial production as well. So largely, I think volume growth should be normalized going forward as well. Valuations obviously have peaked off for both these counters, but the momentum can probably take the stock onward. So I will wait for pullbacks on metal counters in China.
Aditya, one stock that I haven't been able to get my eyes off has been Hindustan Aeronautics. Last couple of weeks, order wins back to back. The recent one with Cochin Shipyard has also meant the stock is up 10% in the last 4-5 days. At 3,500, it's a one-way journey from 3,000 rupees, at least since when I've been watching it closely. Where from here? If today it's a flat start, would you initiate a fresh long?
Morning, Samina. Thanks for having the show. Oh, yes, I believe it's a fresh breakout for the stock, and there is further upside in the stock without a doubt. What is interesting is even after the outperformance that the stock had posted last year, it is continuing to do so. Went into a minor consolidation, and yesterday it posted a big breakout on good volumes. So my sense is it's going to sustain. Question is if it opens flat or maybe with a minor gap, given the fact that markets are opening gap. Will I initiate a fresh long? Yes, closer to about 3,400 is the immediate supports. I would not shy away from taking a fresh long in the stock with the stop loss just below 3,400 and look for a target of 3,800 and beyond. 3,800, I believe, could be tested in a matter of a couple of weeks. So this is something which is looking very interesting, and the setup is also very strong. So yes, it's a thumbs up, and I would want to be a buyer in the stock if I see a gap down or a flat opening.
Now, Yuresh, I want to bring you into this conversation. There was a report yesterday by Jefferies which says they see a 45% upside, even from these levels, on stocks like HAL, BEL and data patterns, interestingly. How do you feel about these counters? Still constructive even after the recent rally?
The momentum, Samina, can very well continue. Obviously, I think the tailwinds that happen or exist for all these stocks in general are commonly known to the markets. They've got a very, very strong order book, which gives revenue visibility over the next 4 to 5 years. The expectations in terms of defense spending continuing in the Indian context will mean that more orders will come their way. And all these orders are coming at very healthy margins. So I think the kind of operating leverage that one really expects from these companies can very well continue. I think the only sore point becomes if they are not able to execute for a quarter or two for whatever reason. And in that scenario, I think the expectations in terms of the entire earnings matrix probably comes off significantly. So to that extent, I think the only risk for the entire defense pack is execution itself. And if that does not happen over any couple of quarters over the next couple of years for whatever reason, the earnings might come up quite significantly. Having said that, valuations are on the higher side. They trade above key pivot levels as we see debt markets with India. So anybody holding these stocks can continue enjoying the momentum. Fresh investors again have to patiently wait for pullbacks for most counters in this.
Patiently wait. Don't know when your number is going to come in that sense, but nevertheless, that's the view on some of those defense counters that are looking really hot, and they've all done really well in trade yesterday as well. But apart from that, Aditya, even Adani Group names have been seeing some traction, at least this week. Anything in the Adani pack that looks like a good trade for the April series?
I would like to avoid a few of the names because they've already shot up big time. Could be Adani Ports or Adani Entertainments. These are the ones which one can actually focus on if at all they want to focus on. Between the two, Adani Entertainment is something, Samina, which is not participated the way Adani Ports has done. So maybe Adani Entertainment could be Enterprises could be one of the stocks to look at. Above 3,300 odd levels, it can test levels of 3,800 on the upside. But be a little watchful. Don't be in a hurry to go out and buy Adani Enterprises just now. Wait it out for it to sustain above 3,300, then it can be a good idea to latch onto it. If I look at some of the cement stocks that the group holds, be it an ACC or an Ambuja, they definitely look very interesting to me. So Ambuja Cement is something which can be looked at on a minor decline or even at current levels. I think there is big up move which is coming up in Ambuja Cements, can easily test levels of 660, 680 on the upside with a good support at 610 on the downside. This is the one trade that I would like to take within the group of Adani stocks if I have to pick one.
Right. Aditya, Mayuresh, stay with us. Let's take a look at some of those brokerage notes as always. Harsh is standing by with his list. Harsh, what do we have this morning?
Well, first off, couple of very interesting notes. First off, on ICICI Lombard, target price 1750 on this one. Jefferies reiterates a buy. What they're suggesting is there's a strengthening presence with regard to where health is concerned. On the health insurance side of things, they're ramping up on both digital as well as agency, and that should drive growth on the health front. Largely, health growth has come in from group as of now, but they're expecting the agency ramp up to lead to retail growth, which should obviously lead to better profitability as well, and that should happen in the next 2 to 3 years. So that's on the health front. With regard to motor, there's been a lot of competitive intensity has been strong across the industry, especially over the last year or so. That seems to be ebbing, and therefore they believe that motor pricing has started to improve, and that should clearly benefit ICICI Lombard because it has a very strong presence in motor. Now they're expecting a premium growth of roughly 16% CAGR over the FY 24 to 27 period, both driven by health and motor, and they're expecting a lower combined, which is roughly at 103. They're expecting 102 in FY 25 and 101 in FY 26, which should lead to better profitability. They're giving it a target price of 1950 on the basis of a 25 times June 26 EPS estimate, and they've raised this by around 2 to 4% in terms of earnings as well. Now, quickly switching focus, Shelly Engineering is the other one which we've picked, initiating coverage note coming in from Systematics. 720 is the target price on this one, so large upside from here on Shelly Engineering. It's a leading exporter of high precision engineering products across segments, so it does both all on OEM, consumer, healthcare, across segments is what it caters to. Now, with regard to some pockets, one, healthcare and consumer to lead growth. Healthcare especially, 150 crore of capex, possibly at least a 3-time kind of revenue potential from the healthcare segment alone. So large potential there. They're expecting a 19% CAGR on revenue, 29% EBITDA CAGR, and a 46% PAT CAGR over the FY 23 to 26 period. Target price based on a 30 times earnings FY 26 multiple.
All right, thank you for that, Harsh Saita, there with the list of brokerage notes that you should keep on your radar this morning. Mayuresh and Aditya with us. Just about 4.5 minutes to go for markets open. Mayuresh, just your take on cement companies. You already saw some moves yesterday, and then the news that a price hike has come was not really expected, and frankly quite a significant price hike at one go. What would be your favorite picks in this space? Would you go for the big ones or look at some of the key regional players?
Morning, Tamanna. I think so a large element of the price hikes, as per our channel checks, has also been some element of increase in input costs, and therefore they have front-loaded these hikes to a large extent. Obviously, expectations in terms of utilization levels exceeding 75% with a lot of construction work across sectors expected in the next few quarters and years, is going to keep cement demand in momentum. What probably happens through in terms of input cost inflation going forward, I think the pass-through will keep on happening through, because demand remains extremely strong. Having said that, the expectations in terms of Q4 numbers specifically, reported EBITDA per ton should have a very, very stable performance. A lot of cement companies, Tamanna, have had internal power consumptions, whether it's waste heat recovery or captive power plants, which is reducing the cost in terms of power consumption as far as their overall operations are concerned. And therefore, stability in terms of operating performance is something which can be expected generally for the pack as a whole. Having said that, we obviously look at leaders as per our methodology, and therefore UltraTech Cement continues to remain our top pick within the cement pack, followed by JK Cement, because our expectation is that numbers should largely hold up for few companies like these, which have a good product mix and a good distribution and geographical reach as well.
Yeah, just a quick word on two stocks that did really well yesterday, and would you be biased towards them today? One of them was Symphony, the other was Aditya Birla Fashion Retail. Quick thoughts there.
Symphony, yesterday we did see a good volume build up there. I would like to wait it out and maybe buy above 970. It's a good trade to take, Neeraj, without a doubt. Above 970, I'm looking at a target of 1100 with a support at 950 on the downside. Aditya Birla Fashion Retail is something that was on my list as well. So definitely I'll look at this stock. Though we did see a bit of profit booking from the top yesterday, but I still believe there is good upside left in the stock. Yesterday volume was massive. So on the downside, 230 is a very strong support. And I would not shy away from taking a long position, maybe more of a positional trade for a target of 280 on the upside. A long way to go for the stock because it has not performed at all. So I believe it's time to look at the stock and be invested for at least 280, 300 levels.
280, 300 levels on ABFRL is what he likes. Just a quick word, since we are having that cement conversation. Aditya, anything that you like in this space? Ramco is not doing too badly in pre-open trade. Last I saw Shree Cement, or would you go for your Ultratech, Ambuja kind of players?
I already mentioned one, Tamanna. Ambuja Cement definitely stands out. I definitely like the stock. The second one, I would agree with that Ultratech is one that I also like on the chart setup. It's broken out from a falling wedge pattern, and Mayuresh also pointed that out. So I believe that Ultratech should be on your radar as well, looking at the chart setup. I would look at for a target of 11,000 on the upside with a good support on the downside at 10,000 odd levels. Given that risk to reward is also in favor, so Ultratech and Ambuja Cement are the ones that top the list within the cement pack. And I believe there's a good trading play which is taking in the cement space. So you can definitely look at the entire gamut of cement stocks within them. Maybe Ambuja and Ultratech top the list.
Okay, Aditya, 20 seconds. Your top trade for the morning.
I'll go with Birla Soft because that is something I believe there's a good upside momentum left in that. So maybe a Birla Soft buy for a target of 820 with a stop loss at 735.
Okay, we'll get in Mayuresh's top theme as well in moments from now. But the market's about to start, so let's focus on what we'll do today. Remember that banks might be a bit sedate, but oil and gas upstream could be in focus because of the oil price uptick. Does that kind of negate each other? Remains to be seen. We're starting off soft on expected lines, about 80 odd points lower, 1/3%. Nothing dramatic, but 1/3% lower, and rightfully so. The world markets aren't the best. Bank Nifty about 1/3% as well. Bring up mid caps 1/3%, small caps flattish. So well, relatively small caps have done better each of the last 4 days. They're starting off in the same fashion today. Let's get the heat map up on the screen and show you what's moving and what's not. On the upside, is it oil? Actually, Ultratech, so about 1.31% higher. Maybe cement has it in it today. We'll wait and watch. But yes, oil upstream is starting off well because ONGC is up about 1.27%. Oil India yesterday, remember, was up about 6%. Maybe there is more there today. Divis, I think there's a BOFA note with a double upgrade. That stock is starting off okay. There is strength in Axis a little bit, and Shriram Finance could be because of this story around how Bain is coming close to acquiring one of the units, but it's kind of flattish. What's not doing well? Airtel, maybe a delayed reaction of sorts. The numbers weren't the best. The stock is down about 1.2% today. Bajaj Auto cooling off after the gains that it has had. Mixed bag for IT and FMCG in the session. So nothing too untoward, nothing too great. But for Ultratech and ONGC, which are kind of standing out as very strong movers, because on the losing side, Tamanna, you can clearly see stocks which are just cooling off, most of them, after a rally that they have had. The likes of Bajaj Auto, BPCL, and a couple of these FMCG names like Nestle.
Absolutely. The Ultratech story also perhaps because of an announcement they've made yesterday, over 30,000 crores of investment plus 2 new facilities that they're going to work on. So maybe that's what you're seeing. But a few stocks that have been on our radar from the broader markets. Let's look at what's happening with ZE. An announcement late last evening that Puneet Goenka will take a 20% pay cut. And, pre-market, that stock was buzzing, but about 1% up now. Suntech Realty is the other one. It was on our watch list as well. We were talking about a long-term 29-year deal for them in their premium spot in BKC. Adani Green has reported as its first company to surpass the 10,000 megawatt renewable energy limit. They have India's largest operating portfolio right now. So that news flow, but not too much of a reaction this morning immediately. Anupam Rasayan is the other one that we spoke about. It was in our trade setup list as well, and that stock doing fairly well on opening trade, about 4% up, but come off its initial burst as well. So they have signed an LOI with a Japanese multinational company and will be going into specialty chemicals, being the first in India for that specific molecule. Gensol Engineering had a set of pretty good business updates, records its highest ever revenue of about 960 crores. So some of those buzzers here, but many coming off. You're seeing a bit of selling pressure right on top, Samina, and tell me what you are spotting. But the sense that I'm getting is that it's really a sell on any rise.
It is a morning of profit taking and no surprises there, right? You've seen a bunch of weak global cues. And remember, we've also ran up quite well. So the Nifty has done well. 22,300 will remain an important level of support. And we're inching closer to that, 22,366. But until that remains, it seems like the positive medium-term outlook is intact. In terms of stocks, MOIL, let's pull that one up. It saw in traction in the early part of this week. Fantastic production and sales numbers, on back of which the stock is seeing a very, very good up move this morning. 6% on MOIL is what we have. Tata Investment Corp back on the upper circuit drive. The stock is up 5% in early trade as we see it. You've got Hindustan Zinc as well. So talking about those production numbers, Hindustan Zinc also managed to do quite well in terms of what we saw in production. Record levels there too. The stock is up 3%. While we are at it, let's pull up Nalco as well. So these were 3 companies that posted their numbers, and all 3 are actually trading with a very clear positive bias. This was stocks that were marked in trade setup as well this morning. Another interesting one is Cochin Shipyard. That pair trade between Cochin, or no, actually it's not really a pair trade, but the deal between Cochin and HAL did lead both those counters much higher. HAL is quiet, but Cochin Shipyard, after a 12% up move, literally over the last 2-3 days, continues to do extremely well. 4% high on Cochin Shipyard. So there clearly seems to be no stopping. It's gone from levels of 700 to 1,000 in literally a span of 3 to 4 days. We'll try and get a technical view as well on Cochin Shipyard in a few minutes from our guest. Adani Group stocks continue to do well. So yesterday was the day that was Adani Wilmar. Today's day belongs to Adani Ports. The stock is trading flat on my screen. I'm not sure. Okay, well, that is We'll pick that one up in a minute. Macrotech developers is down 3% in trade. You've also got some of the other counters that are seeing pressure. So DLF is seeing a little bit of a weakness. Godrej Consumers, Godrej Properties are seeing a downtick in trade. Chalet Hotels, on back of its fundraising, is seeing some weakness. FMCG generally is looking a little weak, and cement is seeing profit taking after its up move yesterday. Autos as well doing pretty much the same thing. Stocks like Bharat Forge and Ashok Leyland seeing some selling in early trade. But I think the stock of the morning is some of these metal counters: MOIL, Hindustan Zinc and Nalco.
Yeah.
Not surprising.
All of realty is actually under a bit of pressure, I would say, except for a Prestige. And we will be speaking to them in a bit from now. But realty doing poorly, and largely, your entire basket of banks, consumption, all of them feeling a fair bit of pressure.
And we know that's happening in Cochin Shipyard. And it's up. It was 700 rupees on Monday. And what are we at Wednesday? 1,020.
Wow. Really?
Yeah.
Okay, that's interesting. Well, let's pull up this week's chart for that, Cochin Shipyard, once before we go to our guests and talk about some of these pockets, metals, real estate and 12%. The others. But Cochin Shipyard up 3.5%. Just pull up the 3-day chart if we can, and let's see what it has done. Yes, this week about 12%. So yeah, good show for this one for sure. But metals it is. Let's start off with that. We spoke to Mayuresh about fundamentally about some of these. The way they have started, Aditya, is there any metal stock that could be traded?
Oh, absolutely, Neeraj. And this is one space which has surprised everybody. People were a little bearish on the counters. Despite that, it has surprised. If I have to pick a trade now, maybe JSW Steel definitely stands out for me. Still hasn't broken out into the positive territory for the day. But I believe this is one trade to take with a stop loss close to about 860. Look for a target of 910, 930 on the upside. The second stock could be a National Aluminium as well. That is something which is broken out into a fresh record highs from that consolidation. So at current levels, one can look at initiating fresh longs for a target of 185 on the upside with a stop loss at 165 on the downside. So a National Aluminium and a JSW Steel both stand out for me. I believe these are the two trades one should take within the metal bag.
Okay. Mayuresh, any idea about Cochin Shipyard?
Strong order book, Neeraj. Expectations in terms of them executing this for the next few quarters is something that the market is probably feeling very optimistic about. And the second element is very stable margins that they've probably exhibited as well. So I think the combination, as I said, for defense, counters in general, is revenue visibility remains extremely strong. Expectations of more orders coming their way is a given. Margins are extremely good as well. And therefore, I think the operating performance should hold out for these counters. I think valuation is a totally different story altogether, but I think all these factors are acting as tailwinds and giving huge amount of momentum to all these stocks.
Aditya, are you tracking Anupam Rasayan at all? That stock, doing pretty well in an otherwise tepid market, and fundamentally also a big Q for that counter. Overall, specialty chemicals have not had the best of time, but Anupam Rasayan on that positive news. Do you like it on the charts?
Tamanna, it's facing resistance at the 200 DMA and also the 90 DMA, the 100 DMA. From the top, it has seen a bit of profit taking. Seems like open highs also same. So I would wait it out and see how the stock behaves maybe after an hour or so of the trading done. On the downside, 900 or 890 is a good support area. If stock tests those levels and from there sees a renewed buying interest, then maybe I'll be buyer in the stock with a target of again 960, 970, which is the 200 DMA, continues to act as a resistance. I will wait and watch before I initiate a fresh long. Not a bad trade to take, definitely, but one has to be a little more watchful in today's trading session because from the top, you've seen a bit of profit taking in the stock.
Names are doing quite well. So Nuvama, if you can pull that up on the screen, Angel One, Anand Rathi, I'm not sure if I can have that. Let's see what's happening on some of these names. So on a subdued day, 3% on Angel One. Nuvama as well, I think, is seeing some traction. 2% on Nuvama is what we have. Insurance companies are looking good today. So GIC, case in point, is up about 2%. Muthoot Finance is up 2%. So while banks may not be having a great day, it's the ancillary in the bank space. So everything that's non-banking is looking pleasant. Mayuresh, is it just a trading pop for some of these non-banking names? So your capital market players, insurance, are they looking good just largely on trade, or for the next couple of months, this could also be a good story to invest into for a tactical rally?
being a stock market participant myself, I think remain extremely optimistic on capital market plays. And I think the logic is very clear. The kind of additions that are happening organically in terms of demat accounts, as an example, the expectations in terms of the culture, in terms of equity investment and investing that is getting spread across the length and breadth of the country, and millennials who are probably more attuned in terms of equities as an investment option. I think all these factors are going to ensure that capital market participants and proxies probably remain in the limelight. Obviously, a lot of these players have taken digital initiatives, which has reduced costs quite significantly onto their books. And that gets reflected pretty largely in terms of their operating performance as well. It's no longer the case 10 years back, which was only related to brokerage. I think it's a gamut of services that are being offered digitally and otherwise. You look at presentations of Nuvama or any of the wealth management players as well. I think over the next 5 to 10 years, the kind of additions that will happen in the ultra HNI category or the HNI category itself, who will need financial planning and assistance, is going to be huge. So I think all these players will remain in focus to a large extent. But to your broader question in terms of NBFC as a space, housing finance companies is something that we are keeping on our watch list at MarketSpace India. I think the performance has been relatively better for companies like PNB Housing as an example. Asset quality pressures have come off. The expectations in terms of the overall book itself, which is largely dominated by retail, obviously adds a little bit of an element in terms of as rate cut starts happening, even in the Indian context, a lot of growth can probably start coming through in the second half of this financial year and expected to continue because the real estate cycle, we're in the midst of that 6-year cycle, which can continue after rate cuts. Very aggressively, at least for these players as well, which have probably to a certain extent lagged growth because of rate hikes and so on and so forth. So I think within the broader NBFC space, I think these housing finance companies can offer a lucrative bet from a risk-reward perspective.
Mayuresh, any thoughts on Yes Bank? They put out their business updates today and they seem to have been better than expectations. Stock is up on high volumes as well this morning. Just sequentially, the deposit growth has increased by 10% at a time when that's a big problem for banks. And obviously, when we get an opportunity to speak with them, we'll try and understand what they did. But just your thoughts, Mayuresh, on Yes Bank?
Yeah, Taman, I would love to hear that conversation on how they have achieved that deposit growth as well. But to a large extent, I think the performance has been very, very volatile to a certain degree. And therefore, I think consistency in terms of numbers is something that the street wants to look at. Obviously, a few quarters back, the expectation was that a huge turnaround will take place as the cleaning of the books will happen, so on and so forth. But the volatility still continues. So I think at this juncture, still better off looking at larger names. What we have on our watch list is something like an ICICI Bank as an example, where the numbers have been reasonably good. Retail loan growth has been reasonable. The NIMs have remained stable, even in the scenario that we probably looked at. And similarly for NBFCs, as the rate cut scenario starts taking place, the expectations of normalized NIMs and spreads should start coming through. And deposit growth should then accelerate as we head into the second half and the next few years as well. So to that extent, I think the mix that they probably have, the kind of subsidiary performance also probably aids the SOTP valuation. And valuations are not that expensive for a large bank like ICICI Bank. So I'm better off looking at leaders like ICICI Bank rather than Yes.
Aditya, you like Yes Bank?
I would like to say that I do like Yes Bank, but again, on the upside, there are hurdles. 30 is something which is the maximum that I see on the stock at the moment. There's no bias here, but yes, 30 maybe could be one thing to look at. Apart from that, there are pockets which are outperforming. Maybe an auto is something that I would look at right now. Mahindra is something which is looking interesting, Taman, at the moment. Nice trade, maybe for a target of 1075. One can look at with a stop loss closer to about 1960 on the downside.
I wonder if in a weak real estate market, Anant Raj is reacting at all or no, but yeah, it's a very interesting announcement to see them meeting capital. It could be interesting. Data centers, real estate, lease. Mayuresh, any thoughts on Anant Raj? It's actually done really well recently, but have you looked at this company at all?
Yeah, and I think you mark the point appropriately, Neeraj. I think data centers is something which is the kicker for this stock. And obviously the expectations in terms of the spend that will happen towards data centers is going to be phenomenal over the next few years. So to that extent, I think the kind of moves that we have probably seen, you might say it justifies the kind of price move because of numbers that have been put out. But again, I think if you entirely want to play that theme of data centers, power ancillaries, smart meters, why not look at a stock on pullbacks like a Techno Electric as an example? Techno Electric has all the ingredients in terms of not only the power space, but also smart meters as a space, and also the data center matrix, which goes very, very well. I think the capex is almost going to get over for one of the biggest data centers that we probably see in Chennai. Obviously, valuations are a little bit on the higher side, but I think it will trade at premier valuations because of the kind of expectations that one has. Just a key point here as well, I think with the flue gas desulfurization expected to get completed before March 26. I think a lot of players like Techno Electric, Power Mech as an example, which are key players in this space, should start moving ahead as well. It's a 1 lakh crore market, Neeraj, and we hardly scratch the surface, and just a matter of 18 months to probably fulfill or have fulfillment of those orders. So it's a complete mix, in my opinion, that Techno Electric can give as a solution.
Techno Electric on Mayuresh's radar. I just want to quickly pull up and see what's happening with the KRBL and LT Foods. All your rice export plays, yes, they are up. So the story on wires last evening, and we're getting more details on it as well. The government has allowed the export of non-basmati rice up to 1,000 metric tons. Remember, they had stopped this in July last year, as well as for basmati rice. Now recent news that stocks are sufficient in our godowns, etc. So this will be some relief maybe to some of these players. A lot more to talk about, but for now I have to thank Mayuresh and Aditya. Thank you so much for joining us this morning. Always great to chat with you guys. Very short break, but on the other side, we're speaking with TATA Tech, the company which has been in news after this big JV that they're going to begin with BMW. What is that entire deal about? All that and more with Warren Harris after this break.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What
All right, Tata Tech has been in the news because of a prestige deal, I think I could describe it as they've inked with German luxury car maker BMW. They have announced a JV which will be setting up an automotive software hub in India. We are speaking now with Managing Director and CEO of Tata Tech, Warren Harris, who joins us on the show. Very good morning to you, Mr. Harris, and great to speak with you here on NDTV Profit. Now, we have sketchy details of the deal so far. We know it's a joint venture with BMW. It's a huge project. You're going to be in at least 3 cities, etc. But can you share more details? What we would love to know is there any investment that Tata Tech puts in? What is your share of the deal, etc.?
It's a really big day for the engineering services sector here in India. To have a premium automotive company like BMW make a commitment to India at scale is something that I think is a testament to the growing capabilities that we collectively represent here in this country. You know, today we signed the joint venture. The joint venture is joint venture is subject to regulatory approval in Europe and in China. So I'm not in a position to be able to share too many details, but what I would reinforce is that it's going to be focused upon automotive software and also the development of enterprise IT capabilities that will further enable BMW to optimize the way in which it runs its operations globally. So it's a very exciting day for us, and also an exciting day for the Tata Group. The success that we've celebrated today was enabled by BMW undertaking a search over the last 12 months of candidate Indian engineering services partners. They made a decision on Tata Technologies based upon capability, but also values and culture. And our proposition to BMW was also reinforced by other group companies, and specifically companies like Tata Elxsi. So it's a great day for us, but it's also a great day for the Tata Group.
Agreed. It is a great day, Mr. Harris, and you know we saw that in the stock run yesterday. But having said that, is there any sort of detail you can give us on the size of this JV? What is the quantum of investment? What is, for example, the contribution to your top line that is going to come with this deal? In what aspects are you partnering with BMW? Anything that you can share there?
As the name joint venture communicates, this will be a joint venture between both organizations. You know, we will have a material say in how the JV operates. We'll also have a material ownership position in the organization. But at this stage, given the requirement of regulatory approval, we can't disclose too much in the way of detail.
I think one thing that the street would definitely like to know, and this is something that maybe bothers analysts that track your company, is your dependence on your anchor clients. Your top 5 account for about 70% of your revenue. Your top few are for about 45-46% of the revenue. Can you give us a sense if this deal with, or this JV with BMW now reduces that concentration with your anchor clients?
One of the things that's synonymous with Tata Technologies' value proposition is the strategic nature of the relationships we have with our clients. And so although we typically work with a small number of clients, the commitment that we make to those clients and they make to us is material, it's meaningful, and it's long term. You know, we have focused upon the top R&D spenders in the 3 sectors in which we operate: automotive, aerospace, and transport, construction, and heavy machinery. And wins like this certainly improve the customer pyramid. But as we expand our customer base, we want to stay very true to the difference that matters that Tata Technologies represents, which is our ability to be able to undertake the most complex engagements in this sector. You know, the type of work that we undertake is typically synonymous with the type of capabilities that the OEMs have themselves. And so we're very clear about where we sit in the market, and all of the engagements and the customer relationships that we're investing in support our ability or support our ambition to expand that.
That's great, Mr. Harris, but let me reiterate that question, which I haven't quite gotten an answer to. For example, does this bring BMW in your top 5 or top 3 client list?
I think maybe in 12 months' time we should have the same conversation. But at this point in time, I'm not going to speculate.
Okay, I'm going to hold you up to that, and I hope we can have that conversation with more details. But let me come back to the scope of what you will be doing with BMW. For example, is this going to be focused on their ICE, vehicles or their EVs? What will be the range of contributions to BMW? Is this for a new kind of vehicle? Can you give us some sense there?
Well, the scope of the JV is focused upon 2 domains. One, automotive software, as BMW look to inform their future products with more and more connected and digital services. The JV is intended to make a contribution to that. But the focus will also extend into enterprise IT systems. So the type of digital systems that will further enable improved productivity and the optimization of how BMW does business across its entire value chain. So it's in those 2 areas that will be predominantly focused.
Anything you can share in terms of the number of jobs this will create, the number of employees across the facilities in India?
All that I will say is that it's material. This represents a very strategic and very meaningful commitment from both TATA Technologies and BMW. And that's one of the reasons that we are excited. But in terms of specific numbers, again, given the constraints under which we are currently operating, I'm not in a position to be able to share detail with you.
Right. No, I get that. One thing, though, that I wanted your comment on is, JLR is a key client of yours and a rival of BMW in several markets in Europe as well, of course. Does that create a conflict of interest for you? I was just curious to know how you manage this.
Well, we've established a capability to protect the confidentiality and the information that is shared with us by our top clients. We're very proud of the relationship with JLR. The relationship at JLR has allowed us to demonstrate the capabilities that we represent on both the full product side of our value proposition, all the way through embedded electronics, software, and again, enterprise IT. So we've been able to, I think, demonstrate capability at scale with JLR that has really reinforced confidence with other customers like BMW. But we will continue to protect the trust and confidence that is extended with TATA Technologies across our entire customer portfolio. Integrity and trust is the basis on which we've built our customer pyramid, and it's something that we will never compromise upon.
A story that I wanted your take on, Mr. Harris, and this caught my eye yesterday, that Xiaomi has launched its first electric vehicle, and they saw astounding bookings on day 1. And it's interesting that how essentially a mobile phone company is pivoting to producing cars. I wanted your take on this in terms of how OEMs and tech companies will be converging and doing very similar things. How is Tata Tech placed in moving in on that trend?
That's a really great question. And what Xiaomi have done and Huawei are doing in China, it contrasts sharply with the announcement that Apple made in the earlier part of this year, in and around the disbanding of their automotive ambitions. I was in China some 3 weeks ago, and a couple of things surprised me. One is the convergence of tech and product in the Chinese market. The seamless integration of the digital platforms that companies like Tencent, Xiaomi, and Huawei represent is incredibly impressive. The transition from home to vehicle to office is somewhat seamless in China, and I think it represents a benchmark against which most other companies globally will be playing catch up. And so I think the connected services proposition and the integration of connected services with EVs is something that China is currently leading the world on. And I'm excited about the fact that we, TATA Technologies, have a material presence in China and are supporting many of the companies that are driving the type of innovation and the type of capability building that is not only disrupting the market there, but is increasingly influencing the trends in Europe and in North America.
And what is the size of your revenues from China, Mr. Harris?
It's not something that we disclose, but I would say that I'm very proud of the nexus that we have in China, not just because of its material contribution to our overall business, but also because, like with other territories, the majority of our employees are Chinese. We do not practice an India out proposition. We have a balanced onshore offshore proposition, and again, we're very proud of our heritage here in India, very proud of our heritage within the Tata Group, but we position ourselves very much as a global company.
Another challenge, a big challenge really, that global players are facing, Mr. Harris, is getting the software right for EVs. We've seen it delay product launches. Perhaps only a Tesla has cracked it. Where is Tata Tech placed here?
Another great insight and great question. Certainly, software now is increasingly on the critical path of vehicle launches. We've recognized that trend some 10 years ago and have been investing over the last decade. And the fact that somebody like BMW has undertaken an exhaustive search of candidate engineering service providers here in India and has selected Tata Technologies as its partner of choice, I think is a testament to the breadth and depth of capabilities that we now represent. You cite Tesla as a great example of where the industry is trending, but to the point that you made previously, I think the Chinese are not only playing catch up, but in some areas, particularly in terms of the seamless integration of different parts of our life, I think they're actually taking a lead. The fact that Tata Technologies not only has capabilities, but also has a presence in these different parts of the market, I think uniquely positions us to capitalize our learnings and ensure that increasingly we're in a position to be able to represent that to the customers that we serve. We're in a very exciting transformation in the automotive and the mobility space that's providing all sorts of tailwinds for companies like ourselves, and we fully expect and are investing to capitalize on that.
I'm curious to know how all of this translates into what we will see in India and by when. Do you think that this tech that you're talking about, a seamless transition from office to home in your EV, etc., will reach India fairly soon, or are we still at a nascent stage here?
I don't think so. If you look at the progress that the market leader, Tata Motors, has made in electric vehicles, I think the investment that they've made in EV products, in converting internal combustion engine platforms to electric platforms, that's allowed it to take a lead on the competition and has certainly defined its fortunes over the last couple of years. The progressive nature of the product proposition and the capabilities that are informing the Tata Motors portfolio is something that we're excited about in terms of the contribution that we've already made, but also the contribution that we expect to make going forward. And I think one of the things that's really exciting for the industry here is that we're doing that in a very frugal way. And not only do I think that will provide very competitive products for the Indian market, but I think it will also increasingly provide Indian OEMs and their associated supply chains with opportunities in the broader market globally.
As we round up, let me come back to the JV with BMW, which is why we're having this conversation, Mr. Harris. Can you share what are the timelines in mind to actually execute it? I know you're waiting for regulatory approvals, etc., but what has been penciled in?
Yeah, the regulatory approval is likely to take several months. We have been planning on the JV over the last 6-7 months. And we expect to continue that as we are going through regulatory approval. So the formation of the JV is not yet determined, but I would expect it to be in the second half of this year.
All right, so that JV is likely to form in the second half of this year, says Warren Harris. Thank you so much for speaking with us. Pleasure to have you here, and we hope to have you back soon. All right, Warren Harris there, the CEO of Tata Tech. Quick look at what the stock is doing. It was darling of the market yesterday, seeing a bit of pressure today, but nothing massive either way. Markets overall are seeing a spot of weakness. I would say banking stocks more than anything else. The Bank Nifty nearly 0.5% down. Realty is not having a great day as well, led by Macrotech as the biggest weakness in that space. We'll take a very short break, but on the other side, we're talking metals and much more. Is the rally sustainable? Stay tuned.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Welcome back. You're watching India Market Open. It's a morning of consolidation, but no surprises there. We've actually held out quite well over the last couple of days of trade. March ended on a positive note, and April hasn't been too bad either, with a new record high that we saw at the day's high point from what you can see. So the buying's coming in. We're closer to 22,400 from what we can see. Lots of pockets of interest in today's day of trade as well. The broader markets continue their outperformance. So while frontline names in the banking space are weaker, you've got stocks in the insurance bag, capital market players that are looking quite good. Metals continue their upward journey. Auto stocks seeing some profit taking, and you've got stock-specific trade as well that's driving action in today's session. But all in all, it's not a bad day of trade. It's a buy on decline from what we are picking up in terms of activity from traders. In terms of metals, remember stocks like MOIL have seen a massive surge as China's manufacturing has rebounded. Stocks like Hindustan Copper as well are doing quite well. Rakesh Sharma, founder of GoIndiaStocks.com, joins in. Rakesh, hi, good morning. Thanks for joining in. Rakesh, strong rebound trade that we're seeing across metal names on back of Chinese PMI data, seeing an uptick. Do you feel like this recovery across China, the US, India is here to stay, and that could mean a sustainable uptick for metal stocks from here on?
So apparently things are, falling in place for commodities. And on one hand, we are expecting interest rate, cut cycle to start in US. And as you mentioned, that PMI data has been surprising positively, not just China, but even Eurozone and even US. So demand should be better than what it was in last year. But having said that, what exactly comes out of China is more important than what goes in. And China has been exporting quite aggressively. So in the first 2 months of this year, Chinese steel export is up 23%, which already was like a 7-8 year high last year. So China is exporting quite aggressively, and this is not limited to commodities, but even finished product. It is estimated that around 12 to 13% of extra steel production is being exported out of China in form of EVs, renewable solar power panels, etc. So China is aggressively dumping material into global market. So I'm not really sure if this rally has too much of legs. There is support at the bottom, and maybe it will inch up commodity prices. But it's not a full-blown rally that we have seen, say, pre-global financial crisis or even during the COVID period.
Of course, the last time we saw the commodity super cycle was all the way back in the mid-2000s. And now what we are seeing is prices of iron ore, steel, coal, natural gas that are rising quite sharply. But Rakesh, if you had to make an investment call, maybe for the next 1 year, I know stocks like Tata Steel do trade at a record high. Would you buy metal stocks today?
So,
and if yes, which ones would those be?
Unfortunately, Indian market has been on a kind of a strong bull cycle, and all these metal stocks have also benefited out of that. So valuations leave hardly anything on the table for the investors. Most of these stocks are now trading at multi-year high price to book levels, whereas sustainable ROEs haven't really improved as much. So I think risk reward ratio for metal stocks at these levels doesn't look that exciting.
Doesn't look that exciting. And also, what did you make of those numbers that came in from MOIL, Hindustan Zinc and NALCO? I mean, MOIL has had one of its best months, year-on-year increase, quarter-on-quarter jump. Are these green shoots? And if yes, would MOIL or Hindustan Zinc be a stock you would buy? These counters, of course, trading higher today.
So, there's a little bit of bullishness around commodity stocks. And I don't think Hindustan Zinc or MOIL can increase production as aggressively. It is not as easy for mining companies. So I would take it like a one-off, it's not a sustainable trend. It's not that the volume growth is going on to a different orbit.
Right. Thank you, Rakesh. It's good to hear that your opinion on it, because I feel like the markets may be getting ahead of themselves, but it's a trading prop from what it looks like, at least across the metal universe. Whether the recovery in China is here to stay, Rakesh says, may not be just yet. But of course, good support coming from metal names. And remember, the last time you saw a super cycle across commodities was all the way back in mid-2000s. So you are seeing an uptick in prices such as iron ore, coal, natural gas. But of course, how much more from here is yet to be seen. The metal index today outperforming the benchmark, up nearly 1%. We'll take a break. We'll come back. We'll talk to Prestige Estates. The counter has been on a breakout, and more importantly, it's managed to secure funding from none other than Abu Dhabi Investment Bank. So stay tuned for more on the other side.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swap.
Welcome back. You're watching India Market Open, and one stock that we've not been able to get our eyes off is Prestige Estates, after, of course, performing and recording one of their best pre-sale growth over the last few quarters, a big land acquisition in Delhi NCR, and now an agreement with Abu Dhabi Investment Bank. It's been great for Prestige Estates. Irfan Razak, CMD of Prestige Group, joins in. So Razak, very good morning. It's Samina joining in. It turns out it's been a pretty good Ramzan for you. Back-to-back deals, agreements. You've gone and picked up a massive land bank in Faridabad, I believe, and now this deal with Abu Dhabi Investment Bank. You want to talk to us about all this?
Good morning. Yes, it's business as usual for us, and we are quite bullish on the entire real estate market, and we are quite happy the way things are panning out. And I believe the opportunity is huge for players who do it right, professionally, and delivery. Because for me, delivery is the most important part, and we've kept doing that consistently. And that gives us and the teams the courage to do more. And right now, you talked about the deal with the Ardia and Kotak AIF. Yes, we signed that a few days ago. And I believe that, again, will give us a whole lot of firepower to really expand our footprint in the other geographies and also get in that much of raw material in terms of land acquisitions. And that's what's helping us now. And this is across all 4 geographies. It's in Goa, it's in Mumbai, Delhi, and Bangalore. And the 4 separate properties that have been identified where this money is going into. And I believe that, again, will give us a huge amount of top-line revenue. And that top-line revenue will amount to almost 18,000 plus crores. And that will help us to, exceed the targets that we have set for ourselves. And as I told you, it's business as usual. It's exciting for us. We keep doing good work. getting better products, and at the same time creating the homes for people who need them. And that's what's helping us to be where we are in the space.
Absolutely. Very good morning, Mr. Razak. This is Tamanna here, and you say it's business as usual, but I think the reason that the street is excited about what Prestige is doing is because you're very clearly foraying outside territories where you've already been strong and expanding quite rapidly. Just to understand more about this this deal with ADIA and Kotak AIF for about 2,000 crore rupees, I also saw that your aim is to have projects of GDV of 18,000 crore rupees over these 4 cities. I was just wondering what the timeline on this is?
See, now timeline on this will be that lands are tied up. So question is how quickly we can come to market, and it's the approval process. And I don't see it going beyond 2 to 3 quarters with it. We can come to market, and moment we come into market, since things are doing well, it's a matter of launching, and it takes about a year plus to achieve that. So it's not something that is too futuristic. We are in April now, and I think by the end of the year we should launch all these projects. And I think by the next quarter and the next few quarters, we should be able to sell out these projects because the locations are really spectacular.
Is that where this 18,000 crore GDV figure is coming from? Can you
Yes.
just explain to us the math on it? Because the initial investments were about 2,000 crores. So how does this all play out?
Yeah, I mean, that's the whole, that's the revenue that we'll get from these 4 projects and maybe more. And we have to do it right. And it all depends on, as I said, how quickly the approvals come in. And that's the potential that we have. And the market is pretty strong. If we do a good product, if we price it right, and since the location, we are very, very confident it's a good location. I think this revenue will just come, and I don't see any reason or any sort of nervousness on thinking whether that revenue will be available. As I said, it could be, we have just kept a conservative number of 18,000. It could be much more on these 4 developments.
Mr. Razak, good morning. Neeraj here, and congrats on the deal as well. Just wondering whether this is one of the many things that could happen, because it's great for a large developer to get a prestigious name like ADIA as a partner, good for ADIA to get into a reliable development zone as well. Would you do many more such stitches by virtue of the growth numbers that you're targeting for Prestige?
I mean, it's business as usual, as I said. So what happens is, it's the proof of the pudding is in the eating. Now, if we do it right, if we deliver the goods, if I'm able to give the value to my partners, they're definitely going to come back again and again. Now, this also, they have worked with us indirectly at many times through other banks. And this is the first time ADIA has come directly into us, along with, of course, Kotak AIF. So it just gives them the confidence, and the entire pressure on us will be that we do it right. We do it right, and we bring value to our investors. So once the value has been brought to the investors, obviously it's an open field. We can get much more than what's been done now. So the opportunity is huge, and it depends on how much efforts that the company is willing to put in, the amount of work that they are willing to put in, and the teamwork that happens. And I believe the things can be pretty big. And of course, as I said, there are many others. We can't work with everyone, but as we go along, as I said, it's a question of what's available, what type of product can come in, and how we can turn this around quickly.
Got it. Mr. Razak, the other thing is, back in 2021, you sold a large chunk of the developed non-residential block to Blackstone. And since then, you've built out a clutch of hotel properties. a colleague of mine broke a story about you signing up with some 5 or 6 other Marriott hotels as well. There are developments that you're doing in Mumbai which are non-residential as well as residential. So what's the strategy? I mean, how large could the rebuilding of the non-residential piece be from then until say maybe 2025?
This is a fabulous question, Neeraj, because now see, last time we had a clutch of assets. It was 8 shopping centers as well as some of the office assets. And we saw an opportunity, and it was a win-win for both the investor as well as for us as a company who divested these assets. With that, what is helping us to do is create more brand new assets. Like now, we've just now completed 2 brand new malls under the Forum brand, and there are another 10 more under construction. 10 more in the sense, I won't even tell you in terms of numbers, but in terms of square footage, it'll be another 10 more million. 2 million is already trading. Another 10 more million will come up in the next 2 to 3 years. So this is what will add up on the retail side, on the mall side. And you told me about that story about hotels. Yes, hotels are doing well. And we have a good association with the Marriott chain as well as the Hilton. But of course, we are doing a lot of work with Marriott. And we've signed up many more smaller and medium and larger hotels with them. The biggest one that will be opening its doors is in 2025, mid of early 26 or end of 25 is the Marriott Marquis and the St. Regis in the Aero City in Delhi. The construction is on at full pace. It will be India's largest convention center, as well as in terms of number of keys, it will be one of the biggest. So that is what is giving us courage. The revenues will be quite phenomenal. And whatever hospitality assets the company owns now are doing extremely well. So we are looking at some point of time even doing a separate IPO for the hospitality assets itself. We've got the consent of the board for this. The team is working on it. So that will help us build more hospitality assets without getting too much into more debt, you see, because we have to have this balancing act of how much of debt you can get in and how much of equity is required. Even now, this current deal, it's a question of how to balance yourself. How much of debt can you show in your books and how much of equity you can have. Of course, it comes with a trade-off. The moment you give more equity, you are sharing a certain amount of the pie. But I'd rather you share that pie than have that problem of debt on your head. So, I mean, we'll have to keep doing it right. Of course, it doesn't mean to say if it's equity, you become frivolous. You have to make sure that you give the returns to your stakeholders.
Absolutely. An important line over there, Mr. Razak, in that response was that you are looking at hiving off your hospitality business and maybe bringing in another IPO. I think that's very, very interesting. Can you give us any more details? What is the size right now of this hospitality piece of the pie, and by when? You're saying that there is a board approval, if I heard correctly. So by when do you hope to implement this and bring this as an IPO?
It's work in progress. It takes about at least 6 to 8 months. And I believe that in this calendar year, we should be able to pull this off.
Okay. So in this calendar year, we could be looking at a hiving off of the prestigious hospitality business. What would be the current size of the business?
It's not hiving off. The main thing is it will be a separate company that, because the parent company will be the major stakeholder there, and we'll be getting in private public equity there, and obviously the size and all of that is still a work under progress. It's the existing keys that are there which will come in along with the new assets that are under construction. All of this will come in and it will give us the bandwidth to do more. We are looking at various, like we are now developing a resort in a place like Sakleshpur. It's going to be conferencing as well as a holiday place. So like that, there are many assets which are under planning, which we are looking at, and all this will come into this entity at some point of time. And of course, there are now in Goa itself, where since we've tied up these lands, there'll be at least 2 or 3 hospitality assets which will come in. This is the type of bandwidth that is on.
Just a couple of last questions, Mr. Razak, and this more on outlook. So now you have set a target of 250 billion rupees in pre-sales by FY26. You're looking at 6 cities to base this on. I want to understand how the foray into NCR, Chennai, Pune is going. Is this on track? Because, of course, Bengaluru, MMR, Hyderabad has been pretty solid, MMR picking up. But what about these other 3 cities?
See, now, we've been in Kerala, we've been in Bangalore, we've been in Mumbai, as well as Hyderabad, as well as Chennai. We've been in Chennai for more than a decade, and we've been doing a lot of good work. We've got some office assets there, which we own, and some which we've owned and sold. And we are also doing residential business there. But the new territory is NCR. Now we've acquired these lands in NCR, and we are looking at making sure that these come to market soon. And this should happen in a couple of quarters. And the demand is there. The customers are looking for a reliable developer who can deliver goods to them. And I believe we'll be pretty successful. We are building up the organization there. And of course, in Pune, we just completed 1 million square feet of office, which we leased out to Bank of New York Mellon, which is in Karadi, which is called Prestige Alpha Tech. And that's one large transaction we have done. And finishing that, it's giving us courage to do more work in Pune, because I believe even that market has got potential. It's similar to Bangalore, and I believe even on the residential space, there is the opportunity. But we are looking at some good locations, and if that happens, even Pune, we will be doing some residential.
All right. Thank you so much, Mr. Razak. Always a pleasure to have you on. And hope to speak to you soon on NDTV Profit. A lot of news points there from Irfan Razak of Prestige. But we'll take a very short break. On the other side, we're speaking with JM Financial Securities' Anish Damania. He's joining us on the other side. Stay tuned.
Hi, I'm Tanuj Bhojwani, and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers, growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others
Back with India Market Open, and let's take stock of what could the near-term implications or medium-term implications be like for markets at large. Anish Damania, MD and CEO of JM Financial Institutional Securities, with us on the show for the first time on NDTV Profit. Anish, great having you. It's been a while. Thanks for taking the time out.
Well, thank you.
Anish, what's your sense? There's a bit of a climbing the wall of worry that the market has done in the recent past. As much calling was there for it being an overvalued market and correcting since mid-Feb. I think we've recovered very, very strongly in the last few days. What happens next?
Yeah, I think this has not been the first time. This has happened at least 4 or 5 times in the last 18 months. And every time there's an expectation that there will be significant corrections and the corrections will spill over into a longer time frame, and the market has recovered very quickly back thereafter. I think this is more to do with the liquidity flow which we have seen in the market. Nearly 2 lakh crores each from DII, FIIs, and 1 lakh crores from the PMS and AIFs, etc. So about 5 lakh crores of inflows into the market. And if I look at the supply side, QIPs, IPOs, blocks together account for 3 to 3.25 lakh crores. So about 1.75 lakh crores have gone into the secondary market. So this is a lot of money for the market to absorb. No wonder, we have got a 28% return in the Nifty and a much higher return on the mid caps.
And so Anish, one of the factors driving stocks, as is the case usually, is earnings growth. There is talk that FY25 earnings growth after 4 consecutive years of double digit may cool off a little bit relative to the trends seen. Could that be a factor coupled with all the other factors that are usually there, which may, for lack of a better word, temper the gains for FY25?
I think whenever we look at averages and whenever we combine the whole thing, sometimes it gives a little different picture. But when we take pockets, we have seen outperformances coming through. And the market has shifted from understanding a 1 or 2 year perspective to a 3 to 5 year perspective. And when we look at the 3 to 5 year perspective, lots of opportunities coming up for the Indian players, especially when you are seeing very marked, focus towards India by the global guys, both on the manufacturing side as well as on the fund side. So when we look at that, it opens up a lot of opportunities for the country. I think that is what the market is trying to price in a little bit. And this is just a start of that trend. Secondly, as savings have got channeled into investments, that is another flow of trend. That is another trend which we are seeing, which is expected to continue. So both these put together would mean that even if for a particular year earnings growth slows down, it might not impact the markets too much.
Okay. Anish, where are you guys bullish on currently then, with the construct that you may have in mind for the markets? Is it financials wherein there seems to be a consensus buy? I mean, we were looking at the Nifty 50 constituents. 4 of the top 5 stocks with the highest return potential as per the Bloomberg consensus are financials. So where is it they're most overweight on?
No, I think financials will continue to be a good area to invest in. When you are seeing significant size of money coming in and what needs to be deployed, financials is about 30% of the weight in the market. So that's where you would see. Obviously, there will be other names which will form part of the alpha, but financials definitely is going to be the key driver of the market. One of the reasons why I see this is probably it's the cleanest play on any growth that we see on the manufacturing side or on the capital goods side or the capex side, which happens. And this clearly is the cleanest way to play the India story. So financials will remain a very pretty important basket in any investment decision. And I would say that though it might be a consensus trade today, it will still continue to perform well.
Okay, fair call. What else, Anish?
So I think one of the key things which one has to look at is also, if I were to see India, we have become over the last 10 years, a lot of investments have gone into automation processes, etc. And that has made India an extremely lean country in terms of costs. So be it men, be it material, be it energy costs, be it overhead costs in the factory, all of them, when I benchmark it against some of the global companies which are reporting margins the way they are, India stands out, and we probably score a lot over in these parameters. And given these parameters, and given the way automation has happened, the quality of the Indian products has significantly improved. So I think manufacturing as a sector will continue to benefit from this aspect. On top of it, we have a government which is extremely keen on promoting this sector in a very large way. They have first identified where all we are importing things, and accordingly they are framing policies to make sure that we indigenize them. That itself is a very big opportunity for us. So I think manufacturing sector across the board is going to be extremely important in one of the baskets of investments. The other basket of investment, which has been a kind of a revelation, has been the PSUs. I think PSUs across the board have performed very well on the market, and I think that will continue. So, financials, manufacturing sector, PSUs will all do very, very well. Consumer sector today is seeing some bit of headwinds, largely on the mass market side. We are not seeing a lot of growth. But if over the next 1 year we continue to see the way in which things are moving, I think the sector also should start doing well. So if you ask me where a contrarian investment could be, maybe it is time to have a closer look at the consumer sector.
Okay. And I'm just repeating for clarity, by consumer you mean staples. You're not talking about premium consumption, because that's had a really good run any which ways.
Yeah, so I'm talking about mass market.
Mass market.
Mass market. Staples, and it could be even, to an extent, not premium, but you would say the mass market products in the durable space as well.
Got it. Last question, some of the economy-linked stocks are making a comeback after a brief hiatus. Like today, for example, the likes of Garden Reach Shipbuilders, Mazagon Dock, Cochin Shipyard, etc. are all really shooting through the roof. The last few days, we've seen some of the others also come back. Is the PSU fear ebbing? Are you guys constructive on PSUs? I know it'll be bottom up, but broadly, are you anti-PSUs or are you for PSU companies as well?
We are very much for PSUs. I think that has been one of our largest themes over the last 2 years. It's been a big contrarian theme, very difficult to push through the first year, but I think a lot of investors saw the merit in this, given that things are happening for them. And as I mentioned to you, the government focus has also been extremely good in terms of converting the import items into indigenization. PSUs also are a large play in that, especially on the defense side. So from that perspective, I think PSUs as a theme and most stocks within the PSU basket will continue to do very well. We're still not seeing the end of this. I think we are at the midway somewhere, and so there's a long run to have in the PSU still.
Okay, Anish, we'll leave it at that. Thanks so much for taking the time out, and look forward to have you more often.
Thank you.
All right, that's the view from JM Financial. And on the note that the markets are okay, but specific pockets, like I said, some of the shipbuilders, etc., are doing well, with the markets being very flat. We wrap it up on this leg of India Market Open. Up next is the FNO Show.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers, growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
There are different types of stocks. Large cap stocks, mid cap stocks.
Welcome. You're watching the F&O show. Agam and me will take you through all the F&O action this morning in trade. But more importantly, it is the NSE that's in focus. They have slashed or halved the NSE lot size from 50 to 25 on the Nifty 50. Well, Sriram Krishnan, Chief Business Development Officer of NSE, joins in. Good morning, Mr. Krishnan. Thank you very much for joining us. So, Krishnan, I'm guessing retailers, investors, traders are cheering the fact that you've halved your Nifty 50 lot size from 50 to 25. I do understand that this is business as usual because you do frequently or go back and revise the lot size. But I've also been told that for the last 5 to 6 years, there was no major revision. What led to you cutting down the lot size from 50 to 25? That is 50%.
Yeah, hi, good morning to you. Well, I think, I have to factually correct what you just said, because we have carried out such revisions in 2020, 2021 and 2023. In 2020, when we did the revision, we only revised the lot size of Nifty Bank, which was 20 at that point in time. We took it up to 25, which meant that the contract value went up. In 2021, we revised only Nifty 50 down from 75 to 50, the lot size, which obviously brought down the contract value proportionately. In 2023, we only revised Nifty Bank, and this year we are, other than Nifty Bank, revising the other three contracts, which is Nifty 50, Nifty Fin, and Nifty Midcap. And these are all part of the 6-monthly review, which is stipulated by regulation, which we undertake diligently. And as per the rules, we are required to ensure that the minimum lot size is 10 and the contract value is minimum rupees 5 lakhs. And we also take into consideration the average closing price of the underlying index for the previous 1 month prior to the point at which this revision is being undertaken. So this is a very routine exercise that we carry out. And what we have done just now is also something that we have done for stock derivatives, where on the 28th of March, we announced that for 42 stock derivatives, the contract size would be revised downwards, and for six stock derivatives, they would be revised upwards. So this is very, very standard process from our perspective.
Right. Sriram, if you can come in on the kind of factors that you use to assess risk when you do, in fact, take these revisions into consideration. What are the key elements that you actually consider before going ahead and considering this?
Rules stipulate that the minimum lot size has to be always 10. The contract value has to be minimum 5 lakhs and maximum 10 lakhs. It should be in that range of 5 to 10 lakhs. And we should be guided by the average closing price of the underlying index during the previous 1 month prior to the point at which the revision is being undertaken. So what we have observed in this case is that Nifty 50 contract value had gone beyond 10 lakhs to 11.22 lakhs. Fin Nifty and Nifty Midcap are both significantly above 5 lakhs, at about 8.5 lakhs for Fin Nifty and about 8 lakhs for Midcap Nifty. So we thought, we should do one round of correction just to make sure that, they are more towards the 5 lakh mark, which is the prescribed minimum value. Because these contracts, need to be reviewed from time to time, keeping these guidelines in mind. So we typically look at it every 6 months.
When we consider, the revision of these contracts, what takes precedence? Is it, more to do with the finer changes and the finer ability to perhaps, from a investors and traders point of view, is that perhaps a finer ability and a more granularity when it comes to risk management? Or is this the ability for smaller players to come in and perhaps participate in the particular segment?
Actually, it's a combination of many things. The more important thing being, of course, the affordability of the contract itself. I think, 5 lakhs is the minimum prescribed value, because I think then participation can be more broad-based. And, the affordability is an important consideration for any derivatives contract from an overall standpoint. So, of course, risk management framework that we have in place is one of the finest in the whole world, has stood the test of time. And we are online risk managers in a sense in the whole world. Nobody comes anywhere close to us. So I think more than risk management, what we are looking at here is to make sure that the contract value doesn't become so high, like in the case of Nifty 50. What we've seen now, it's at about 11.22 lakhs, which means it's beyond the 10 lakh maximum value that's prescribed by the rules. That's why this correction was required.
Right. Sriram, a final question from my end, and I'm sure that you probably won't be able to talk from the broker's point of view, or whether or not they will in fact be able to moderate their brokerages. But from the NSE's point of view, would you be considering perhaps cutting your transaction charges, or will they remain the same, of course, prorated to the contract size?
So I think NSE transaction charges were revised downwards about 1 year back by about 6%. And even about a month back, we announced a 1% downward revision. So, these are, again, topics which we keep reviewing from time to time. And wherever possible, we have passed on the benefits of scale to the investors and to the ecosystem.
Thank you very much, Krishnan, for joining us and breaking this down for our viewers of what this change in lot size means for investors and traders. Well, a quick move on from there to the markets. It's turned out to be interesting. We've actually decoupled from global cues, at least for the first hour of trade. The Nifty at the day's high point, nearly 22,450 is what we have. Trades flat after a gap down start that we saw. Lots of pockets of interest, but the broader markets are outperforming the benchmark. Across the Nifty 50 500 as well, you've got stocks like BSC that's up 2%. Fertilizers are doing well. Defense names are up and about. Stocks like Cochin Shipyard, Mazgaon Docks, Garden Reach, Shipyard, all trading with gains of 5 to 10% each. Defense as a theme really continues. So remember, we go into elections in a few months, and PSU stocks, the stocks of the government play, are the ones that are seeing traction once again in trade today. Well, we've got with us Akshay Bhagat and Sudeep Shah, both joining in with their trading and derivative strategies. Akshay, good morning. It's interesting what we're seeing on the Nifty. Pretty much decoupled in the first 2 hours of trade. Global cues were negative. We started off flat, got close to 22,300, but now at the day's high point at 22,450. On the Nifty, what's the trade?
Good morning, Samina. So 22,200 is a very important support to watch for if you're a short-term trader. And broadly, the setup just hints that every dip will have buying interest the way you had today. Even on a gap down, you did see a strong pickup in the Nifty. And today, as I see it, IT has a good chance that it may support the index for today and tomorrow's trading session. Metals have been doing fine. And there is some of the other blue chip stock which supports the Nifty. It's just a matter of time when 22,525, which is a major resistance, if you are a short-term trader, is taken out. My sense is that the view is still positive in the index. It's just a matter of time when 22,525 resistance is breached. You will have new highs being conquered soon in the month of April. So I'm positive on Nifty. 22,200 support, 22,700 roughly works out to be the target area for me. So continue to have a positive bias on the Nifty index.
Okay. Well, Sudeep, good morning to you as well. Your assessment on the benchmark, how are you playing this one?
Good morning, Agam. See, what we've seen is post this gap down in line with the markets, the way they have been trading in the last several sessions, that all dips have been bought. So what we've seen is that once again, the metal, defense, auto names, and even today, ICICI Bank also did show some signs of reversal. Also within the IT pack, TCS also has seen signs of reversals. So I feel that overall this would be supportive for Nifty from an extreme short-term perspective. 22,350, 22,380 will act as a strong support from an intraday standpoint, because we have seen aggressive put writing in 22,400 puts, whereas on the upside 22,530 and 22,550 will act as a resistance, because there is still that call writing perspective from 22,500 strike price, which is not yet being reduced. So we are not seeing much unwinding in that strike price. So essentially the range for the day would be 22,380 on the downside and 22,530 on the upside.
Right. Akshay, you want to come on Bank Nifty?
Yes. So Bank Nifty, the RBI policy, which is on 5th of April, would be a major event which will be seen. And ahead of the policy, my sense is that Bank Nifty will reattempt to get a test or break past the 48,000 mark. So I have a positive view on the bank index too. If you are a short-term trader, then there is a good chance that for short-term trading, 47,700 and 48,000, these are the two levels you need to consider on the buy side. View is positive. Overall, if you were to sum it up post policy, how the trades will span out, it's a broader range, 47,000 to 48,000. It will be a bit choppy in this range. So I would prefer taking a short-term bet ahead of the policy with a target of 48,000 in the Bank Nifty with a stop loss below 47,200. So positive on Bank Nifty, but from a short-term perspective for next 2 to 3 trading sessions.
Okay, let's pull up the constituents of the Bank Nifty, in fact, and see where there is a lot of traction coming in. Of course, it's also the Bank Nifty weekly options expiry. As you can see, most of the, in fact, 10 of the 12 constituents of the Bank Nifty are in the red at the moment. And of course, all marginal weakness, but what's really advancing is something like an HDFC Bank, again, up by 0.5%, and Axis Bank is up by 0.5%. And you have some amount of longs building up, but it's not a significant amount in terms of open interest change. In fact, the entire banking index isn't really seeing too much traction as such in today's day of trade. It seems like another quiet session, at least so far it has been. And while, of course, notwithstanding the 200-point up move that the index has seen since morning. But, overall, it's been a quiet one. Want to very quickly take Sudeep's view on the Bank Nifty as well. Sudeep, your view?
Agam, Bank Nifty, in the past 4 or 5 sessions, what we have seen is initially between 21st March and 28th March, it was consolidating with 47,000, 47,150 as a resistance. Once that was crossed, now I feel 47,100, 47,150, that the same zone will act as an important support. So all the dips towards 47,150, 47,200 should be used to go long, and overall I feel in the next few days we could see an outperformance from the banking space, especially with HDFC Bank now breaking out of its consolidation range. Now this stock has consolidated for a long time, and now we are seeing signs of a breakout in HDFC Bank. So I feel HDFC Bank could support Bank Nifty, and ICICI Bank also is not doing too bad either. Now it's just consolidating at higher levels and within a range. So overall, I feel both these stocks could do well from a short-term perspective, and I guess that could propel Bank Nifty up to 47,800, 48,000 on the upside.
Right. Sudeep, Akshay, stay with us. We'll take a quick break. We'll come back and continue our conversation and take your top trading strategies as well. So stay tuned.
I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the
Welcome back. Let's very quickly take a look at all the stocks which are buzzing in trade in the future space, where we have seen a significant increase and a decrease in open interest. Well, right at the top of the list, you have something like a Nestle, which is declining by around 2.7%, but there is some amount of traction towards fresh shorts. Hindalco and Persistent Systems, on the other hand, well, the underlying is advancing. Persistent Systems marginally so, but we are seeing some amount of build-up there, what could potentially be longs there. Kotak Mahindra Bank under pressure, down another 1%, back at the mark of below 1750. That's where we are seeing shorts coming through, and Apollo Tyres as well, where even though the underlying is down by around 0.5%. In terms of other stocks to keep on your radar, let's pull that up. In terms of stocks which are seeing unwinding in trade, well, we do have Aditya Birla Fashion is now starting to see unwinding. I reckon that this is about a profit taking because the open interest is down 34%, even as the underlying remains largely flattish, marginally in the red. And we have short covering for Gujarat Gas, well, Coal India is the other one, which is also in focus, up and about, but less than 1%. Jindal Steel is, of course, marginally in the green right now. We do have longs unwinding for L&T coming through as well. Akshay, what are the stocks which are on your radar at the moment? What are you tracking?
Well, I believe IT is the space to watch out for. Now, the quarterly result season will kick off with the big names of the IT sector. And the broader setup here has been a bit tamed. It has been a bit negative. There can be possible short covering candidates. And if you look at the momentum which some of the IT names have picked up in the first hour of trade today, they make a good trade for a bounce back scenario. So Infosys, TCS, Mphasis, Wipro, these are some of the names which I have on my buy list. So consider the IT pack to be on your buy watch list for the short term. A strong recovery of 3 to 4% is very much on the cards.
Right. Sudeep, what about you? What are your top stock trading strategies you're recommending?
Samina, what I feel is that since morning, what I'm seeing is along with IT stocks, there are other stocks such as Nalco, GAIL from the PSU space. They are doing well. So my top pick would be GAIL, Gas Authority of India. Today we have seen a strong long build-up in the stock. Along with that, 3.5% gains in the stock. And if you see the charts, it has come out of a 8 to 10 day consolidation zone now. So there's a strong breakout also backed with volumes and a rise in open interest. So I feel GAIL can be bought here with a stop loss of 186 on the downside and a potential target of 198 on the upside. My second pick would be from the IT space. Now, Akshay also has mentioned about a rebound in the IT stocks. And specifically, if we see one stock here, which is LTTS, which has seen a strong long build-up, 8.5% build-up of open interest on the long side. And the stock has even taken out its prior resistance of 5,700, which was the high of the February month. So I guess from the current levels, LTTS also could be bought with 5660 as a stop loss and a 5850 and a 5900 target on the upside.
Sudeep, very quickly, some of these defense names have been on a tear in the last couple of days now. So if you look at a Cochin Shipyard, Mazgaon Docks, Garden Reach Shipyard, you've also got HAL, Zentech. I mean, some of these counters are up anywhere in the range of 15 to 20% in the last 3 days itself. Any fresh opportunities here if somebody wants to go out and buy a defense name? Is there anything you have on the radar for the April series?
See, from a FNO perspective, I feel BEL and HAL both are doing extremely well. BEL has been on a tear now. If you last 6-7 days, it is forming a higher top, higher bottom formations. And it has even crossed its previous resistance of March month, which was around 216-17, post which it had seen a downfall up to 180 levels. So now I feel that here there is a strong momentum being visible in BEL. So BEL also can be looked upon from a short-term perspective. Out of all the other non-FNO stocks, Cochin Shipyard and GRSC is what is on my radar now. Rest, a lot of spaces where there have been reversals, but considering all the names together, putting them all together and checking the relative strength, I feel Cochin Shipyard and GRSC stands on the top of the list, and I feel they can still do well in the coming few sessions, despite the gains that they have seen in the previous 2 to 3 trading sessions.
Okay. I want to just revisit a handful of other futures and options names at the moment. And what we do see is further traction in names like Voltas. Voltas has been up and about in trade, not just today, but over the past few sessions. If you can pull out perhaps the last 7-day you move in, in terms of what we've observed there. So there you have it. It is essentially the last 3 odd sessions where we have started seeing a lot more traction being built in Volta. So it's up and it's above the mark of 1,200 rupees per share. Fundamentally, certain investors are ascribing, harsh summers for at least the near-term well-being of Voltas, considering an expectation of, higher sales as far as your air conditioners are concerned. But how are things looking up technically? Akshay, your view here?
Yes, Voltas, the recovery has been very strong. And if you look at the last 5 days, especially the rollovers for the April series have been buoyant. Strong long bets have been rolled over. Last couple of days, fresh buying has been noted in this counter. And the charts are signaling that exactly the last year's high, if you see in April 2023, somewhere 1300 was the area where this stock has visited. So there is a good chance that the stock will reattempt to hit the levels of 1300 very soon. It may happen in the month of April itself, considering the strong momentum rally which you are in currently. So I'll be positive and would recommend a buy on this counter. Although it is a bit overbought for comfort, even a slight dip would be a better trade in case you want to time this trade. So 1280, 1290 also would be good buying levels, but broadly consider 1300 as your target for Voltas. And the support is a 1170, so your stop loss will be around 1165. Target 1300, positive view on Voltas.
Okay. That's as far as what Voltas goes. The other stock that at the moment want to address is, I would say Godrej Properties. Let's pick that one up. What's really happening with Godrej Properties is that it has shown a lot of strength of late, and it seems like it's taking a step back in today's day of trade. The question really is that can you take today's day of trade as a one where you could in fact go ahead and initiate longs, considering the kind of momentum that we've seen in this particular counter over the course of the last 6 to 7, 8 sessions. Sudeep, this one is for you. Your view on Godrej Properties.
If we closely see all the real estate stocks, whether it is DLF, whether it is Oberoi Realty, Godrej Properties, Godrej Properties and Oberoi Realty has been standout outperformers. Even yesterday when DLF was struggling to find momentum, Godrej Properties had risen 4 to 5% on the upside and almost had retested its prior resistance on the upside closer to 2550. So today's pullback, a small pullback here, what I feel is can act as a buying opportunity closer to 2400 on the downside. Remember that 10 and 20-day exponential moving averages are closer to 2340, 2350, and the stock, after breaking out on the upside about both these moving averages on 26th March, has risen from 2250 to almost 2500. So once again, it's just a retest of those moving averages on the downside, and I feel closer to 2400, it would be a good buying opportunity in futures with 2350 as a stop loss. And one could ride this short-term uptrend, and this is just a minor pullback in an overall uptrend.
Right, that's the call coming in some of those counters. I'm not sure, Akshay, if you do you by any chance have a view on some of these other counters that are seeing a little bit of traction this morning? So you've got fertilizers that are looking quite sweet. Defense, of course, I talked to Siddhi about a lot of this election play from the look of it is playing out. If one wants to play the election outcome or wants to take advantage of trade over the next 8 weeks, any stock, any sector that you're betting on?
For the election, in perspective, if you have the perspective of election in mind and you're taking a bet for the next couple of months, I would be betting on the Adani Group. Adani Group, if you look at the chart patterns of Adani Ports, Adani Power and Adani Enterprise, although they are choppy from the short-term trading perspective, but if I were to bet on the stocks for the next couple of months, then these are the counters I would put my money on. Adani Enterprise, current rate 3228, I'm looking at targets of 3500 plus in the next couple of months. Support is around 3100. If you look at Adani Power, it has had a fabulous move in yesterday's trading, breaking out of 580 resistance zone, which is a very strong development. I would look at targets of 700 plus in this counter with a stop loss below 560. And lastly, Adani Ports is the third name which I have on my watch list, which will give you targets of 1550 plus with a stop loss below 1325. So Adani Group is one group which I would like to buy ahead of the elections or for the elections for the next couple of months.
Okay, there you have it. Well, positive on Adani Group. That's the election play going forward from Akshay's point of view. Well, we are out of time on this show, so I'm going to take a moment to thank both our experts, Akshay and Sudeep, for joining us and taking us through their views on the markets and, well, providing us a handful of stock ideas as well. And on that note, it's a wrap on the F&O show, but lots more lined up on the other side. Stay tuned in.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
There are different types of stocks. large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
Hello and welcome. You're tuned into the Small and Mid Cap Show. I am Mahima Vachajani and with me is Harsh Saita. Well, we're going to interact with two interesting managements today, Borosil Limited and KRBL Limited. But before that, let's take a quick check on how the markets are panning out to be. Well, in terms of the benchmarks today, well, it's not a very good day for the markets. Nifty is trading within a tight band of the 120 points. The markets have come off from its day's lows. However, they're around 40 points away from its day's high. If we check the Nifty right now, it's around 0.02% lower. So pretty much flattish. In terms of advanced decline ratio on the Nifty 50, around 19 are advancing, 30 are declining, and 1 remains unchanged. In terms of point contributors on the Nifty, the stocks that are pulling down the index include RIL, L&T, ITC, Nestle, Kotak Mahindra Bank. In terms of Sensex also, Sensex is also trading pretty flattish. It's around 0.1% down, 0.03% down right now. In terms of broader markets, well, broader markets are performing a little slightly better than the benchmark indices. In terms of mid-cap 100, it's trading around 0.27% higher. For small cap 250, it's around 0.6% higher. But for more stock specific action, Harsh, what is going on?
Well, absolutely. Thanks for that, Mahima. If we can pull up sectors, try and break down as to what sectors are really doing well. Media, we've got a third straight day of gains on media. In fact, media was the top gainer on Monday, did very well yesterday as well. So that particular index seems to be on a bit of a trot here. Mind you, probably the worst performing index for FY24 was media. We've entered FY25 with that, and FY25 it's been doing fairly well. It's probably the top performing index, sectoral index there. So keep your eye out on media. But outside of that, IT doing fairly well despite an adverse note coming in from CLSA. The PSE stocks are doing well. Metal counters are also doing well. What's not doing well is probably the realty space. Of course, very good traction seen over the last couple of days in realty, but that seems to be reversing in trade today. PSU banks not doing well. That's not too often that you'll see PSU banks not doing well and the PSE space as a whole doing fairly well. So that kind of dichotomy playing out in trade today. FMCG is under a bit of pressure as well. And notably, you can see Nifty Auto down around 0.25%. We've had all those auto sales numbers come through. Yesterday, the Nifty Auto was buzzing on the back of that. But today, a kind of a tepid day for Nifty Auto. Specific names which are buzzing, let's pull up something like a Nalco, which is doing fairly well, 5% higher. GET&D also doing very, very well. A Moil on the back of numbers is doing fairly well as well in trade. Something like a Hindustan Zinc is up 4% in trade. So strong one there as well. And in terms of Ashiana Housing, 2.5% higher, around 400 odd crore of sales which it has clocked up from its new project, pretty much entirely sold out. So some of those counters buzzing. Outside of that, let's pull up something like a Shelly Engineering. That one is up 4% on the back of an initiating coverage note by Systematics. Target price 720 on that one. But let's quickly take it to managements. We have Borosil Limited and we have Shrivar Kheruka of Borosil Limited, who's the managing director there. To talk to us about expansion. They've opened a new facility and what that means for the numbers as well as the top line. We're going to try to break that down. Welcome to the show, sir. Good having you here.
Thanks for having me.
Right. I want to try and understand your capacity utilization was roughly 80% plus in the last quarter itself. This new sort of capacity being added, what does it do to the overall numbers for FY25, both in terms of capacity utilization as well as in terms of top line?
So as far as the capacity utilization is concerned, the number that you mentioned is correct for our Opal glass facility. So we have 2 furnaces where we manufacture glass for Opal dinner sets. And we expect that capacity utilization to move up to close to 100% in the foreseeable future. The new facility which we have commenced is actually the first of its kind in India, which is a press production borosilicate glass facility. This is actually transparent glass, which is microwavable and oven proof. And this is main application is for servingware as well as for lunch boxes. As people take lunch to office and they can microwave it, it's a healthy alternative. So this production has just started. It's a part of our import substitution strategy where we are looking at stopping imports from various countries and manufacturing more in India. So the capacity utilization here has just started. Our capacity that we've installed is about 3 times the current sales that we do because we expect the market to grow rapidly. And I hope that we should be able to absorb this entire capacity in the next year and a half or so.
Right. So sir, Mahima this side, since you mentioned that, this will be an import substitution for you. So I'm pretty sure that this will reduce your cost per se. So how will this impact your margins? How well do you think your margins will grow because of this?
Well, the fact is it's a double-edged sword. Yes, production costs will come down and therefore margins should go up. But on the flip side, as we go to try and explain to customers that we need to use or people should use glass versus plastic or steel, there's a certain amount of marketing and distribution expenses that will increase. So in the short run, the margins may increase not so substantially, but once the capacity utilization is at 80% or so, and plus we have the base level of customers who have adopted the product, then we expect margins maybe to substantially rise. So the current EBITDA margins of the company are, let's say, 16 to 18%. Can this go up by 5-6%? I think that's possible.
Sure, point noted. Even among your other product lines, something like an opalware, your capacity utilizations have started to max out. What's the capex plan on that front like on some of the other product lines? And just to add to that, on this particular product line with regard to glassware, especially for tiffin boxes, etc., a year and a half later, you'll be adding more capacity to your existing facility. How will it work?
Yeah, well, as far as the capex for opalware is concerned, at the moment we have no plans. We would definitely like to utilize the entire capacity, and then there's also the scope of premiumization of products that we would like to bring in higher premium products into this opalware segment, which we are working on currently. We will discuss internally and come back with any plans and announce it in the appropriate forum at the time when we've agreed on it. As far as the glassware front is concerned, we have I would say the target has been to expand the product portfolio, give customers more choices. If we have to replace plastic, then at the same time, we need to certainly give more shapes and sizes in glassware, which we're planning to do. And to specifically answer your question, we have enough space to further increase capacity here by 50% at the same location. Should we achieve the level of capacity utilization of, say, 80-90% in the next few years, we can further expand at the same location.
Right. And in terms of your recent demerger, I'm just trying to understand that for Borosil Scientific Limited, the listing is yet to happen. What is the timeline looking like for this particular listing?
Yeah, frankly, the timelines are not in our control entirely. We have to follow certain procedures which we have followed well on time from our side. It does take time for the regulator to approve it, and there are certain conditions which we need to do, so which we need to fulfill. For example, now I believe that we have to get audited last 6 months. Our P&L and our balance sheet has to be audited. So. We've just got the approval for listing, but we have to submit the audited statement. So I think it'll take about a month and a half or so to get that done, as we've just closed March. So therefore, I expect that by the second half of May, I'm pretty sure we'll be listed on Borosil Scientific.
Okay, very interesting. So some amount of value unlocking there as well. But with regard to your balance sheet itself, you've significantly hiked your debt on the back of the capex that you've been doing. Where does debt go? Has it peaked now, or you're also raising equity? Talk to us about fundraising and how the balance sheet shapes up.
Yeah, the debt has, we invested a substantial chunk of money in capex, as we just shared, as I just shared, on the Opal glass expansion as well as the Borosil glass expansion, plus other projects that we have done. So debt is, frankly, debt is well under control. While it has gone up, we were we were net debt zero about a year and a half ago, and now I think we have about 200 crores or thereabouts of net debt. But our EBITDA itself, the debt to EBITDA ratio is not so high at the moment. The equity plan or the expansion plan was done from various perspectives. One was, of course, to repay the debt. The other one was, there's a scope for other organic and inorganic expansion opportunities. So those, that will continue. When it happens, it happens. But we are not so concerned about the debt levels on the company at the moment. What I can say is that the market is growing well. The Indian consumer is changing their habits, and they are looking for more lifestyle products for their home and for kitchen, and we are right there in that space. So therefore, we feel very comfortably placed from a growth perspective. And in order to achieve those growth objectives, if we have to raise equity, we will do so.
And so you had mentioned in your recent con call that you're planning to raise capital. Can you just give a ballpark figure as to how much amount you're looking for, and what will this be used for? And secondly, what kind of capex infusion more are you looking for in FY25?
So what's been approved by the board has been a capital raise of up to 250 crores by any of the instruments that are available. So up to 250 crores is what we've got approval for. The main application of the funds would be initially to repay debt, of course, but obviously that having been done, we have room to further take more debt and to grow. Capex, we have about 100 crore capex plan in the coming year, which we will do. Plus, we are working on other options, other ways to grow, and this will also entail capex. Although I'm afraid at this moment I can't share that with you.
Sure. Point taken. With regard to raw material costs, with regard to pricing, how's the environment really shaping up? You're, of course, in the more premium category, but raw material cost pressure is still there, or you see that ebbing?
Raw material in general has ebbed. The pricing, the cost pressure rather, of the raw materials have ebbed in the last 12 months. We saw some really steep hikes in the financial year 22-23. And if I look at 23-24, it's been quite a stable environment. And I don't see that changing, at least at the moment. And therefore, we did take price increases in 22-23 to compensate for the increase of raw material costs. However, given that we've stabilized since then, we've not taken any price increases, and we don't plan to do any material price increases in the future.
Right. Also, in your Q2 transcript, as far as I remember, you said that 90% of your revenues come from domestic and 10% is your exports. But you are planning to scale up your exports. So by FY 25-26, where do you see this 10% going to? Like, what will be the mix of domestic versus exports?
See, our focus has always been the domestic market, given the fact that we have a strong brand presence here. We have a very strong distribution channel, a brand salience, etc. So what we see is that in the last 2-3 years, we are getting a lot of inbound inquiries for our product range from large customers overseas. And this is an area which we have not really been we've not been focused on in the past, but we do see these as incremental opportunities. I would not say we are going to change everything, our focus, and go to exports as a main target. But we do have large capacities that we've added. So if we are able to find good customers in the export market who can absorb these, then we'd be happy to talk to them. I do not think it's going to make any change in the very short term, where I can say that from 7, 8, 10% export, we'll jump to 25%, 30% in the next year, because the export customers, say in the US or in Europe, these customers are used to buying product from China for the last 20 years. They've developed very substantial, let's say, sourcing strategies and sourcing partnerships from there. To change that overnight is not going to happen. It may take some time, let's say 3, 4, 5 years, but I would say that in that period of time, 3 to 5 years, can our exports double or triple in terms of percentage of share? I do believe it can, but I would not like to put a target or put a number in mind, because it's too early. We'll have to see really how these customers, how they decide their strategy. Frankly, it's not entirely dependent on us.
Sure. And with regard to solar panels, we've seen, several news articles coming through with regard to Europeans using this for fencing now. Solar panels appearing to be relatively cheaper as an option, given the kind of, traction that we are seeing in terms of supply from China. What's the sense like? You are into solar glass as well. So what's the sense?
So as far as solar glass is concerned, as far as that's in obviously separate company, Borosil Renewables, and that company has seen a lot of demand increases, although we face substantial dumping from China, and that's continuing. The government has taken a very positive step of ALMM, which is the approved list of module manufacturers, which has already been implemented as of April 1st, which means this will spur domestic demand for domestically produced solar modules. And therefore, we anticipate that if the domestic production goes up of solar modules, the demand for solar glass will increase, and that should positively impact the pricing to some extent. We don't know how much, we don't know if it will impact pricing, but the quantity will certainly be attractive, and we are geared up for that. We've added lots of new products in terms of thinner glass, in terms of glass with special coatings, etc. So I believe that that business should see an uptick. It'll probably take a couple of quarters to play through, because there may be inventory in the system. So maybe April to June, there will still be stocks in the system of the really low-priced Chinese modules. But hopefully by July, August, we should start seeing an improvement there.
Right. Well, those are some interesting insights. Well, thank you so much, Mr. Kheruka, for speaking with us at NDTV Profit.
Thank you.
Well, let's take a quick break now. More news and updates on the other side. Stay tuned in.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers, growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Welcome back. You're watching the Small and Mid-Cap Show. KRBL, which is also known for its India Gate Basmati brand, is on our radar today. The rice production has been picking up globally despite the challenges of El Nino conditions for India. The contraction in Kharif production has impacted the industry, but KRBL has maintained its production and volume levels. Well, it's also planning its expansion projects in Karnataka and Madhya Pradesh, and has recently highlighted about its profit margins and export challenges that are taking place. To discuss more about this, we have Ashish Jain, CFO of KRBL, who joins us now. Welcome to the show, sir. So, Mr. Ashish, my first question to you is that the exports for your 9 months FY24 have been down around 34%. How have these shaped up for Q4, and going forward for FY25, how does the scenario look like?
No, sure. Happy to be here. Thanks, Mahima. So, see, our exports in the current financial year have been affected because of some distribution challenges that we faced in the key market. So, because of which, when you do a year-on-year comparison, the numbers appear lower. We are in the process of, addressing these challenges, and we hope to restore the export numbers back in the current financial year, which is FY25.
Sure, sir. How quickly will you be able to do that? Saudi Arabia, new distributor, maybe Q2? Can we expect that?
Yeah, so I can't give you a firm timeline right now. However, this is a matter of top priority for us. Our team is engaged in it, intensely, and we'll update as and when I have a firm timeline.
Sure. And how does this change your domestic strategy? Because you've moved increasingly towards domestic as a result of this. Does this mean that domestic will continue to hold up even after international starts kicking through or export starts kicking through?
So, we see both the export and the domestic market as important segments for us. So our response to domestic is not in the context of what is happening in the export market. There is an independent strategy for both segments. Now, with respect to the outlook for domestic segment, see, there are a couple of things that we are trying to do there. One is that we are trying to encourage the consumers to move from loose to packaged rice. Now, that's an initiative that we've been focusing on, and that's yielding good results. Second, bulk of the rice production in India is still non-basmati, where there are no national brands available. So we started focusing on this opportunity around 18 months back. And again, the results have been very strong. So we'll continue to work on those two initiatives, and therefore see strong outlook for the domestic market. On export, like I mentioned, we are addressing the issues that we are facing and hope to restore the number back in FY25.
Right. Mr. Jain, I also wanted to understand that, higher input costs in Basmati are affecting your margins. So what are the kind of trends that you're looking at in terms of raw materials in the next quarter in FY25?
Sure. So, see, if we look at overall Basmati demand, both in India as well as overseas, I think the demand continues to be strong. On the export side, the country is likely to see a record year for Basmati exports. So strong demand coupled with, some of the trends that you mentioned earlier, which is affecting the overall global rice production, has affected Basmati prices and therefore our buying costs as well. So we've judiciously passed it on to the consumers to the extent possible, and we'll continue to do that as required.
Sure. I also want to try and understand weather problems likely to add to the pressure here, in your view.
See, for any agri commodity, weather is always a significant factor. Rice is no different. However, difficult to comment on how the weather will shape it and the likely impact. But yes, it is always a risk factor for any agri commodity.
Right. Mr. Jain, also, your inventory is piling up, which is why it's affecting your profits as well as margins. So, how do you expect that, how will this play out? By what time do you think that the inventory will come to normal levels?
Yeah, so see, we don't see it as a pile-up. In fact, one of the key pillars of our business model is aging rice. So rice as a grain, as you would know, improves with age. So Indiagate is known for offering fine rice that has been aged. So we build our inventory in line with that strategy. Typically, our inventory tends to be high at the end of Q3 because bulk of rice production in India is harvested in Kharif crop, which is harvested around that time. So our inventory levels are in line with our strategy. We don't see it as a pile-up. And, like I mentioned, the demand for rice continues to be strong. So in light of that, the inventory levels should auto-address themselves in the forthcoming quarters.
Sure. One more quick take on export. Non-basmati rice exports have now been given a bit of a lift by the government from a regulatory perspective. Does that in any way change the shape of the market as well as how you view it, as well as the export demand, as well as market overall?
Yeah, so, over the past few years, India has emerged as the largest exporter of rice in the world. And non-basmati export is a key part of that. Starting September 22, Government of India has taken various measures which are, in our view, aimed at settling the price of non-basmati rice in India. Yes. Yeah, we have seen some changes in that recently, but we'll have to wait and watch.
Okay, well, Mr. Jain, thank you so much for taking your time and speaking with us at NDTV Profit. Well, that's all we have on the show, but stay tuned in.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the sector.
Don't listen to anyone and everyone.
When it comes to your hard-earned money.
Join us as we put the spotlight on 6 stocks.
On your show, Hot Money.
Let's be real, guys. There are many financial experts out there.
Good morning and thanks so much for tuning in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Smriti Chaudhary. We'll take you through the next half an hour or so of trade. Now, this show is aimed at getting you answers to all of your stock related questions, and you see a number, or you will see a number on your screen. You can send us your questions on that WhatsApp number or in fact on any one of our social media platforms. But before we get to that, let's take you through what's happening with the equity markets right now. And you have the benchmark index, the Nifty 50, that's trading as flat can be. In fact, you saw a bit of a downtick at the start of trade, but right now we're standing at exactly where we ended yesterday. And this is actually better than a large number of global equity markets. You saw the handover from the US markets overnight. That wasn't very pretty. And in fact, quite a few of the Asian markets also are seeing downticks as we speak, even right now. The broader markets, in fact, looking even better. You have the mid-cap index that's gaining about 0.4% right now, and you have the small-cap index that's up as much as 0.9%. And a look at the sectoral moves today, you see that the bank index is down only about 0.1%, but the worst performer is the realty index, which was an outperformer yesterday. Media is doing reasonably well. IT is gaining about 1.2, 1.3%. Remember, IT has been under a little bit of pressure in the recent past, and it's picking up a bit. You have metal as a pack that's also gaining about 0.5% or thereabouts. Not too much to speak of, and not too many big movers. But among them, I will point to a few, and we're not really certain as to why they're moving right now, but it's important to mark them. The likes of Mazgon Dock, as well as Garden Reach Shipbuilders, Cochin Shipyard, all of these ship-related companies or shipbuilding companies are up and about in trade today. Perhaps an announcement is something that you can look forward to. We don't yet know why this is happening. But we are going to focus on one particular stock today, and that is MOIL. It is also up as much as close to 5%, and there's a reason why. It is to do, Smriti, with the business update.
Right. Good morning, Alex. And MOIL is one of the stocks that has been moving today. After a business update, the other stocks that are moving based on this similar announcement is Yes Bank and even Satin Credit Care. But focusing on MOIL, it came out with its numbers, the business update numbers, and we have Kanika joining in to give us details about that. Kanika, how do the numbers look? Because the stock is up about 4.5% as we speak.
Right, Smriti. So shares of MOIL are up by more than 4.5%, and this is mainly on the back of the company achieving best ever production of any financial year since inception, which showed a 35% year-on-year increase. Now this is 29% higher than the previous best ever production, which was in FY 2008. And on the sales front also, the company has hit an all-time high, showing a 30% year-on-year increase. And the company has also achieved best ever production in electrolytic manganese dioxide, which is higher by 28% year-on-year. Now EMD is a 100% import substitution product used mostly for pharmaceuticals and battery manufacturing. Going a little further, going a little behind, on 1st April, MOIL implemented price hikes across product categories. It implemented price hikes on ferrograde manganese ores by 3 to 6%, fines and chemical grades by 3%, and electrolytic manganese dioxide by rupees 2,000 per metric ton. And this was all done with the intention of a revenue boost for the company.
So that's something to look forward to as well on the back of higher volumes. We'll get you a check on what the fundamentals look like and what you should do as a prospective investor. But before we do that, let me introduce the first guest today. We've got Kunal Rambhia from the streets joining in, and we will also soon have Vineet Polinchkar. He'll join imminently. But before we go to Vineet on MOIL, I would like to ask Kunal about the three shipping related companies or shipbuilding related companies that we spoke about at the start, the likes of Mazgon Shipbuilders as well as Garden Reach, up and about in trade. Any technical indicators that are pointing to why Garden Reach up as much as 8% right now, Kunal? Morning.
Very good morning, Alex. Morning to everyone. So if I look at the overall chart, now see, Garden, Mazda, these counters have been in trend since quite a long time. And in fact, the first breakout which we saw on the chart was somewhere in in the month of November 2022. And since then, this counter is clearly making higher top, higher bottom. If I just specifically speak about Garden Reach, then this counter was in consolidation in the last 6 to 7 months. But now, today, I think it's on the verge of giving a breakout. So these trends are just on, and in such kind of markets where the markets are not willing to give up at all, I think the best strategy would be to trail the stop loss and hold the position till the time the trend is intact. So as of now on Garden Reach, one can hold the position with 825, 830 as a support in mind, and if the counter manages to go about 910, I think the targets of 1100 are also likely to be seen on the charts.
While we're just one more point I would like to ask before we get into conversation with Vineet. I understand that he's going to be joining imminently, but on the benchmarks, and we're looking at a little bit of pressure, not too much on the Nifty Bank. It's not supporting too much today, but on the benchmark, amidst this selling pressure that you're seeing across the board in global risk assets, we're still holding out, Kunal, on the Nifty 50 at least, and the broader markets are looking sanguine. What are you reading in the latest cues on the index front?
So Alex, there is very much common way of looking at this, and this is that either there has to be price correction or there'll be time correction. So what we are witnessing on the indices is almost like a time correction. Now look at just historical data. That's from January 2024, where we saw the Nifty trading at around 22,100. Right now it's trading at 22,400. It's been almost sideways consolidation. The uptick which we saw was just in last 2 to 3 days with a small gap up in between. So this is a kind of time-based correction, sideline correction. And so that's the, I think, reason the markets are not really giving up. I think this sideways momentum might just continue on broader indices, and the stock specific moves which we are witnessing in the markets are really very strong. So it's advisable to focus on those stocks which are doing really good and starting from the extreme low levels, and avoid indices for time being from trading point of view at least.
Good morning, Kunal, and thanks for that. Let's come back to MOIL. Now, Kunal, if you look at the past performance of MOIL, the stock performance, it's been a multi-bagger, and even in the last 5 sessions, it has given 12% gains, and we're seeing gains today as well. What kind of upside target do you expect for the stock?
Morning, Srishti. So, overall performance of the MOIL and other PSU counters were also very much laggard till 2022-23. And what we saw as an uptick actually started on MOIL somewhere in July 2023. Counter since then has given almost 110% returns, clear higher top, higher bottom formation. Otherwise, people were honestly holding this counter in the portfolio from dividend point of view. But this has given this capital gain first time in this entire journey so far. If you look at the last 3 months performance since January, a sideways consolidation with a bit of negative bias, but today it's giving a clear breakout of double bottom again. So I think one can initiate a fresh position also at 318. The overall trend which we witnessed in last entire year still remains intact. The stop loss of this entire view will be at around say 300 to be precise 295. till the time the counter is about 295, I think the upside till the levels of around 375 to 380 are very much likely. And again, even at those levels, I will not advise the profit booking. Rather, we trail the stop loss and hold the position. This can keep on surprising on the higher side.
Point. So I understand we're having a little bit of a technical issue with Vineet's line, but in the meanwhile, let's start with the queries. And in fact, let's focus on the technicals right now. We've got Guru Prasad from Chennai who's asking the first question on a couple of stocks. He's got Trident, which he's got Kunal 40,000 shares off. And he's got Yes Bank 1,250 shares off. He's not given us the buy price, but hopefully he's bought at lower than the current market price. Assuming that he has, what's the kind of advice that you would give based on what you're seeing on the charts?
See, Alex, on both the charts, honestly, the formation, I am sure there must be specific way of looking at the counters from our investors also point of view. These counters are in broader sideways curve formation. Now, curve formation takes its own time. If I look at Trident's long-term charts, January 2022, where the counter was trading at 67, and right now it's trading at 40 odd levels. This is a sideways curve formation. Again, I'm very bullish on this. These curve formations generally take little longer time to deliver good results. For time being, the stop loss on this chart can on Trident can be around 33. If this counter breaks 33, then we should certainly turn cautious. Otherwise, hold on to this position. The first immediate target can be 55, and above that, we can expect the targets of 70 also. As far as Yes Bank is concerned, again, the formations are almost the same. Trigger is almost on chart today. That's at around 25. So if the counter manages to go about 25.30, or 35 kind of levels, then certainly one can initiate a fresh position. Stop loss will be 22, and the targets can be as high as 31 to 32 again. But out of two counters, I would be more comfortable with Trident and less on Yes Bank.
All right. Next counter we're talking about is Bank of Maharashtra. Now the question is from Venugopal Reddy from Hyderabad, and Mr. Reddy has already bought the stock at 39 a piece. The stock is currently trading at around 64 rupees. Kunal, if you look at the trajectory of it's been a little choppy today. It's in a bit of a downturn today, but has given a decent return in the last couple of trading sessions. But from here on, the question is, should you continue holding on to it or maybe exit partially?
Srishti, again, Bank of Maharashtra, IOB, and even, in fact, Central Bank, all three of them are looking similar on the formations. But the interesting observation on Bank of Maharashtra is that it has reached the peak of December 2012. Almost 12 years back, the counter was trading at the same level, and it's reached back to the same level again. And because our viewer has taken perfect entry near to those extreme low levels, as of now, I think he's sitting on a gain of 100%. Ideally, he should take out his capital at least from this. Sell 50%, hold remaining 50% with the trailing stop loss of 55. I think the trend is certainly on, but this is a level which we saw almost 12 years back. So this might act as a resistance for now. So be a little cautious, take out some profit at least off table, and trail the stop loss to 55 and hold the position for the remaining quantity.
Okay. I believe we've got Vineet joining in. Vineet, pleasure as always having you on the program. I'm not sure if you're going to have a view on this, but I'm going to ask you anyway. We've got a question from Arpit. He's asking about Gensol Engineering. I believe that it is either at an upper circuit in trade today, or it has hit. I know that it has hit today. He bought at levels of 868, and he's got as many as 1,000 shares. He's wondering whether he can hold for the next 4 to 5 years. What's the view, Vineet?
No, definitely the good counter that he's gotten, and he got into it when there was artificial selling, in the sense that it was induced from a regulatory angle. The fact that he's gotten at these levels is very interesting, and he should continue to hold. We expect some fireworks from this stock happening over the next 3 to 4 years.
Next stock is a railway stock, Vineet. This one's from Priya, and they're talking about IRCTC, which they've bought at 9.55 a piece. Considerable profit there, but from a longer term perspective, do you see these railway stocks to be overvalued right now as well, even though we've seen a bit of correction there?
See, IRCT is absolutely a platform company, should not be compared with the other railway stocks, primarily because, the others are more infrastructure plays and IRCT is a more of a consumer play. And to my mind, I think the consolidation phase of this stock over the last couple of years has come to an end, and we are in an upward trajectory. And IRCTC has been signing a number of partnerships, Zomato, Swiggy, and they're looking at other areas of interest also. There's going to be booking of hotels and allied travel-related services. So, the costs are fixed, and all these incremental sales add directly to the bottom line. And I think that this stock in the short term is very good for another 8 to 10% run.
I'm asking you a question. I'm coming back to you, Vineet, because we've not asked you enough questions today, obviously. Hindustan Copper, and this is a question coming from Urshita. She's writing it from Mumbai. Now, we've established often on this platform and others that metals is a cyclical play. And based on what we're hearing in a few pockets, whether you're talking about Chinese manufacturing, whether you're talking about the strength in the US economy, seemingly we could see an uptrend in the underlying. But you've already seen the stock price of Hindustan Copper rise as much as 13% in 2024 and over 200%, if I'm not mistaken, over the last 1 year or so. Is this still a buy at this point?
No, definitely you can enter at these values also. The reason being that, if you look at copper, it's a commodity in short supply globally. The entire big continents of Europe and North America are going in for infrastructure spend. Weapon stockpiles of majority countries are depleted, and with the geoeconomic concerns and geopolitical turmoil, I think everyone is upping their spend. Copper is a very vital element for all these. It is also a vital element for the entire power, renewable power segment. So I think power is going to be in good demand, short supply. And with the dollar debacle looming on us because of the unsustainable debt of the US, I think commodities or hard assets are coming into play now as a store of value. And these commodity trends, when they pan out over these macro factors, they tend to last for 8 to 10 years. So we are in the early days of a metal cycle, and Hindustan Copper, being India's only copper manufacturer or iron copper producer, is the best bet to have. So they are not only into copper, the cathodes, they're into copper mining. They've got 5-6 mines. They're exploring new ventures. So all in all, a very good stock to hold and buy from current levels.
Right. So Hindustan Copper, very constructive on that particular stock, especially as Vineet mentioned, this may be a start of a cycle for the metals, positive cycle for the metals. But it's time for a short break, but we'll take more questions on the other side. Stay tuned.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve.
Welcome back. You're tuned into Ask Profit. Let's jump into the queries again. This one's from Arvind from Andhra Pradesh, and he's talking about Aditya Birla Fashion, the stock. Now, we discussed the stock yesterday in detail on the news of demerger of its lifestyle business, Madura Fashions. Now, the street did not take very positive cues from this announcement, and even brokerages continue to remain not as positive as you'd expect. Now, however, the company says that there's going to be value creation through this demerger. Do you also see it that way?
I think, the proof of the pudding can be seen only when the quarter results are out. I believe that the stock has been a laggard compared to the sector. Much of the different retail companies have moved up. We've seen Trent, DMart, V2 Retail all pick up, and ABFRL has been sincerely lagging these counters. So unless and until we actually see the numbers come through, some kind of indication of quarter-on-quarter growth, I don't think that people should venture into it. It should be more of a stock on your radar rather than in your portfolio.
All right. Coal India is the next stock that we're talking about, and we've got Ratna who's writing in from Kolkata and asking about this. Bought at levels of 415, it's at 445 right now. From the perspective of 3 months, Kunal, I'm coming to you. How does it look on the chart?
Absolutely trending counter, Alex, and the sideways consolidation since Feb 2024 so far is just taken out today. If the counter manages to close above 450, I think more room for upside is definitely open. We can expect the targets of around 485 to 490, and the stop loss of this entire view is going to be 415, which is, I think, viewers' buying price itself. So with that particular stop loss, one can certainly hold on, and the targets can be 485.
All right. Kunal, the next counter we're talking about is Infibeam Avenues. This one's from Saurabh. He's bought 5,500 shares at 28 rupees. It's currently trading at around 37 rupees. But from a shorter term perspective, how does it look on the charts?
Again, this chart is very much trending. It's August 2023, the counter was trading at around 14-15 rupees. And since then, clearly making higher top, higher bottom formation, sideways consolidation of last 1.5 months is on the verge of breakout now. So yeah, so far breakout is not happening. The breakout is at 40. So I think one can certainly hold on to this position. The trailing stop loss, which our viewer is supposed to maintain, is going to be 32.5. If the counter falls below that, we'll have to turn cautious. Otherwise, above 40, this counter has a potential to show us the levels of around 50 to 55 also.
All right. ITC is the next counter we're talking about, as well as Tata Power, but I will only take on ITC because we promised to take one question per viewer. ITC bought at levels of 425 by Raghuram, who's writing in from Bhubaneswar. I'm going to ask about, so he's asking about the short term. So Kunal, on the charts, how does ITC look?
See, Alex, since May 2023, this counter has maintained a stable level of 425 itself. See the extreme highs of 500, lows being 390 and back to 425 again. I think this counter can clearly be avoided for now. If someone is willing to hold on for a long period of time, I think this is a good level. One can initiate a buy with the target of around 455, 460. But otherwise, this counter seems to be a laggard and a kind of sideways consolidation counter. Not good from short-term point of view.
All right. Next one, we're talking about IDFC First Bank. This one's from Srinivas Rao from Vijayawada. Now, Vineet, talking about this specific counter, it's in a bit of a downturn today. It's down 1%. But from a longer term perspective, okay, just to mention the buy price, they bought it at 51 rupees and it's currently trading at 78. From a longer term perspective, do you have any targets on this particular stock?
I'm seeing this stock easily cross 100 in the short run. In the next 6 to 9 months, we can definitely get a price of 900 on this. 100 on this stock. It's firing well on all cylinders. Growth is good. Margins are intact. NPA levels are under control. And the growth story continues to pan out. So I believe that you should continue to hold on to this stock. It's just short-term blips if the stock is down. But I think it should cross these 100 levels very soon.
Okay, I think that answers Rahul Das's question as well. He's writing in from Guwahati. The next question I'm taking is on 361. And this is from Rahul. He's writing in from Delhi and he's bought at levels of 650. He's seeking a short-term view. He's gaining ground. The stock is at 700 or thereabouts. Kunal, on the charts, how does it look?
Alex, I'm just trying to find out the stock. Meanwhile, I think I'll just take a bit of time.
300,
yeah, I got it.
361.
Yeah, absolutely. I got it. See, this counter is again a sideways consolidation counter with positive buyers. The view remains definitely bullish. The trailing stop loss on this has to be maintained at around 650. Till the time it's above 650, I think this slow and steady movement might just show the levels of 770 to 800. Also, the view will get negated only below 650. So hold on for now. It's not a counter where we can expect a quick returns, but the trend is certainly positive.
All right. The next counter we're talking about is another bank counter, Vineet. This one's SBI. Now, this question is from Praveen, and they want to know if this is a good time to buy the stock. Would you suggest buying at these levels? And in terms of valuation, from a longer term perspective, what do you see in the stock going forward?
Our target is around 1050 on this stock for the next couple of years. And if you want to really buy a banking stock which is safe with low downside risk and value still there, I think SBI is the big ball to buy. So definitely SBI over the next 2 quarters, you will see some very handsome gains come in this price.
Okay, so let me pose this question to you then. For a lot of people, HDFC Bank is a buy at these levels from the long term. Given a choice between the two, Vineet, would you be a buyer in SBI or would you buy HDFC Bank?
So there are two things. There is a play in HDFC Bank, which is a listing of HDB shares, from which they get a lot of capital, which helps to shore up their capital structure. But if you see purely on valuation basis, I will stick my neck out and go with SBI. So SBI has a whole lot of incremental, bonds that they bought that can be used to finance in times of tight liquidity. Number one. Number two, valuations are cheap. And, the return ratios are on par with HDFC Bank. Today, probably better. Third thing is their NPA levels are considerably in control. And fourth is the fact that, it has got these listed subsidiaries, which are SBI Life, General, SBI Cards, and SBI Mutual doing really well. So I think that, there's a lot of incremental money to be made. And, your percentage returns in SBI are going to be far, far better than that of HDFC Bank.
Fair
so
point.
I think I will go with SBI Bank any day.
Okay, fair point. Vineet, as well as Kunal, thank you so much for joining in, for answering all the questions that you did. Always a pleasure having you on the program. Viewers, well, we tried to answer as many questions as we could today. And of course, some of you have gotten your questions unanswered, but we've promised to take as many of them tomorrow. Do tune in at 11:30. In the meanwhile, lots more coming up over the course of the day. Do stay tuned. This is NDTV Profit.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created. But this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Benchmarks recover from lows to trade flat. The Sensex is now at 73,900. The Nifty is about the 22,400 mark. Sectoral indices trade mixed. Media and IT emerge as top gainers. On the other hand, Realty and FMCG drag. In a significant update for the equity markets, NSE halves the Nifty 50 contract size. Lot sizes for Nifty Financial Services and Midcap Select are also reduced. In India's derivatives markets in danger as a new rule which forces participants to have an actual forex exposure takes effect. And tsunami warnings issued to Taiwan and Japan after a 7.5 magnitude earthquake rocks the region. Reports say earthquake along the coast of Taiwan is the strongest in 25 years. Hello and welcome. This is Hot Money. I am Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade or have been the flavor of the day. But before that, a look at the markets, and we are looking at largely flattish moves once again, with an advance for the Nifty back in the green at the moment, currently holding on to 22,450 odd levels, and the Bank Nifty, which will be in focus, of course, because of the weekly options expiry, and that is also trending about the mark of 47,500 at the moment as we speak. What do we do with these levels at the moment? Well, that's a question that perhaps can be answered through the course of the day, but for now we are looking at gains. Let's take a look at the contributors for the Nifty and see where in fact we have seen that improvement come through. HDFC Bank is advancing, as is TCS and Bharti Airtel along with HCL Technologies, and we are starting to see some strength return to the IT sector of late in the last couple of trading sessions. We also have Reliance Industries, L&T and ICICI Bank along with Kotak Mahindra Bank under just a tad bit of pressure, well, keeping the benchmark flattish. But when it comes to the broader markets, and that's where things are perhaps a little more interesting, and the outperformance for the broader markets continues. We do have a 0.4% advance for something like the mid-cap index, and the small-cap indexes are up as much as 0.8%. Believe it or not, while there's an impression that the small-cap and the mid-cap indices have been rocked, and we've seen a lot of volatility, but on a financial year-to-date basis, that is just in the last 3 sessions, we are in fact seeing an advance of well over 4% for something like a small cap index, and the mid cap index is also up by around 2.5–3%. What's really standing out in these indices is names like Mazagon Dock or Garden Reach Shipbuilders. These are the two defense companies which are into building Navy ships, and they've been up and about. In fact, Cochin Shipyard, which also does the same work, has also advanced in today's day of trade. And besides that, we have GSFC, which is also advancing in trade today. In terms of losers, we don't have too much to speak for, but perhaps we can talk about something like a Macrotech Developers, which is down around 3.7%, and Godrej Properties, along with Oberoi Realty, seeing a little bit of a dip in today's day of trade. I reckon that some profit taking is on in the offing as far as the real estate sector is concerned, and we know it's had a tremendous 1.5 years. So it's a wait and watch on that one. But we have a few more analysts, and by that I mean technical analysts, who are suggesting about a consolidation in the real estate sector at the moment in terms of the way the share prices are expected to move in going forward. That said, let's take a look at all the stocks and sectors that we're going to talk about in today's day of trade, and specifically in this edition of Hot Money. We're going to address MOIL, Hindustan Zinc and NALCO, along with the updates coming through. GSW Energy, of course, is raising 5,000 crores in terms of funds. Prestige Estates has another broking note coming in. Remember that it's tied up with a handful of new projects, and we're looking at sharp gains there. And on account of broking notes, we have Motherson Sumi and Ultratech Cement in focus. And to take us through these, the views on these companies, we have Rajesh Agarwal, Head of Research at AUM Capital, who's joining us on the show. Rajesh, good morning. Thanks so much for joining in. Rajesh, before I come to you, let me take up the first bunch of stocks, and that is the metal counters, which have been in focus, which should come up with updates. Let's get in my colleague Kanika to give us an update on this one. Kanika.
Right, Agam. So first we have MOIL, whose share price rose by more than 4.5% today. Now this is mainly on the back of company achieving best ever production in any financial year since inception, and which showed a 35% year-on-year increase. This is a 29% higher increase from the previous best ever production, which was in FY 2008. And on the sales front also, the company hit an all-time high in FY 24, marking a 30% year-on-year growth. Next, we have Hindustan Zinc. The Q4 refined metal production rose 6% sequentially, and mines metal output was up by 11% quarter-on-quarter at 2.99 lakh tons, and refined metal achieved highest annual production at FY 24. Next, we have NALCO, which recorded highest ever cast metal production at 4.6 lakh metric tons and recorded highest ever bauxite excavation at 76 lakh metric tons. Along with that, it also recorded highest ever metal sales.
Okay. All right, Kanika, thank you so much for getting us those that roundup of the latest that we have from these metal companies. Rajesh, welcome to the show. Your view on the metal sector as a whole. We understand that there are certain changes with respect to the Chinese economy and improvement, which is why there's an expectation that perhaps the metal cycle, even some of the steel companies, in terms of the pricing, could turn a corner. How are you reading into this situation, and what is your view on this entire sector, if you have any picks here as well?
Good morning, Akhil. You said it right. The numbers have been quite exciting. For all the three companies that Kanika pointed out, the production figures and sales figures. I think there are exciting times ahead as where Chinese economy also started moving up. And this spells good for the entire metal pack as such. And out of the three, if I have to select one, I think Moil is the best one because of the kind of reserves they have and the kind of productions. FY23 was the best ever production. Now FY24, 9 months is again better than that. So every year the company is performing well, it's giving good dividends, the reserves are good, and even in EMD that's being used in pharmaceutical and for manufacturing of batteries, this can be an added trigger to this. I think one can go long on Moil at these prices also at 320 odd levels for a 10-15% upside in the next 6 to 9 months. As far as Hindustan Zinc or NALCO is concerned, I would say wait for some amount of correction in both of the stocks before venturing into it. And in the entire metal pack, if our pick has to be concerned, I think steel is a better place than these companies, out of which we can go long on Tata Steel and Jindal Steel and Power.
Okay. All right, so that's the view, or an overall view on the metal sector. But let's go on and talk about another auto ancillary company. And before I go across to Rajesh, let's get in Puneet to tell us about the latest broking note on Motherson Sumi Wiring. Puneet, what do you have for us?
Yeah, thanks for that, Agam. So MK has written a very interesting note on Motherson Sumi Wiring, which is the second listed company in the auto space from the Motherson Group. Now, they've retained a buy rating on the stock with a target price of roughly 80 rupees, which is a 16% upside from the current levels. Now, the MK met the management and also did a site visit on one of his manufacturing plants in Pune, and they say that the company is making strong breakthrough in the SUV focused as well as the EV space in India. They see that they are setting up a new facility within its existing Pune facility right now, which will be focused on in this particular regime. They say that higher localization as well as scale benefits will be one of the key triggers for the stock doing well. Finally, they have also received orders from Tata Motors, as well as they have supplied to 3 upcoming electric SUVs to Mahindra and Mahindra as well. And they see that MK says that this offers a proxy play on the passenger vehicle space and will be a major beneficiary of the EV shift in India. Back to you.
Right, Puneet, thank you so much for getting us that update on, Motherson Sumi Wiring. Rajesh, this is a company that, has less eyeballs off late. Of course, it's not one that we usually talk about, but we're starting to see a little bit of perk up in the share price of the company. What's your view here?
You said it right. The stock didn't do anything after it was demerged from Motherson, some other months and the main company. It hasn't done in the initial stages. It moved up and it was volatile, but then it became stagnant around between 60 to 70 odd rupees. I think the numbers were very exciting, if I would have to say. For the Q3 numbers were very exciting. Revenue was up due to premiumization of proposal, and with new capacities being ramped up in the near future, I think the future growth will be focused on that. So one can go along with a target of 75-80 odd rupees in this stock.
All right. There you have it. That's a view on Motherson Sumi Wiring. Well, on that note, we slip into a short break. And on the other side, we get you a lot more. Stay tuned to NDTV Profit.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers, growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make...
Welcome back. This is Hot Money. We shift focus to JSW Energy, which is next on our list, and that one is in the news. We have an update where the company is looking to raise about 5,000 crores through AQIP. At the moment, it is advancing and is currently trading at a life high at around 550 odd rupees per share. Rajesh, come in on JSW Energy. Do you like this one? And are there any alternatives in the sector? Well, this particular company, of course, has also been making its own moves in the renewable sector for the last 5 odd years. What's your view on this one, and if there are any alternatives?
See, the company is doing great, no doubt on that. The power capacity is huge, and not to forget that government has given advisory to all the power manufacturers to increase their production, anticipating heat waves sort of thing in the entire country, and that spells good news for power companies as such. But as far as JSW Energy is concerned, I think at these prices, all the positives has been discounted into this. It's better to find alternatives into some other stocks, maybe a Tata Power, which is also in a renewables and has a good capacity, or a CESC, which again supplies power to Howrah and Kolkata. Apart from that, they have distribution rights into some of the northern cities like Noida, Bharatpur, Kota, etc. So that company has got good capacities. The price to book is around 1, trading at 10p. I think that company can get highly undervalued when it is compared to the other PL companies. So one can go long in Tata Power or CSC. And JSW Energy, if it corrects by 10% from the current market price, that would be a suitable point to enter.
All right. Rajesh, stay with us. We're going to get you an NDTV Profit exclusive. My colleague Pragati is we're tracking the latest in the Vistara crisis. Pragati, thanks for joining in. What are you tracking? What are you gathering from your sources?
Yes, right. We just got to know that Vistara CEO might address the pilots around 1 p.m. this afternoon, which is in another half an hour or so. We got to know that the meeting is also expected to have the top management, other executives of Vistara, and even the HR, and all pilots have been sent or asked to be a part of this meeting. As of now, we just know that this meeting is online. What the agenda of the meeting is still not clear from either the company side or the pilot side, but we just know that a meeting is coming up, and we plan to bring you the latest updates as and when the meeting gets over.
We will be watching out for what's going to be discussed there. Pragati, thank you for getting us that latest in terms of the crisis with respect to Vistara. Rajesh, a quick note on and a quick word on the aviation space as a whole. Is there anything that you like here, and perhaps could the latest in the crisis be an opportunity to maybe get into another airline at this point in time?
See, aviation stock as a whole are not good for investments, I would say, because every time there are some problems of underbooking, PLF, crude prices going up, or something of that. After so many years, Indigo has shown profit. I think that is the only stock that is running into positive territory. One can have a look at that. Otherwise, I don't think there are any stocks to be very bullish on.
All right. Well, let's move on and talk about Prestige now. Prestige Estates is a company which has been focused on account of the various tie-ups that we've had of late. And, speaking to NDTV Profit, Prestige Group's top boss, Irfan Razak, has confirmed that the company is having, having an off hospitality business and will come up with an IPO by the end of this calendar year. This is what he had to say. Listen in.
What is giving us courage, the revenues will be quite phenomenal, and whatever hospitality assets the company owns now, are doing extremely well. So we are looking at some point of time even doing a separate IPO for the hospitality assets itself. We've got the consent of the board for this. The team is working on it. So that will help us build more hospitality assets without getting too much into more debt, you see, because we have to have this balancing act of how much of debt you can get in and how much of equity is required. Even now, this current deal, it's a question of how to balance yourself, how much of debt can you show in your books and how much of equity you can have. Of course, it comes with a trade-off. The moment you give more equity, you are sharing a certain amount of the pie. But I'd rather you share that pie than have that problem of debt on your head. So, I mean, we'll have to keep doing it right. Of course, it doesn't mean to say if it's equity, you become frivolous. You have to make sure that you give the returns to your stakeholders.
Absolutely. An important line over there, Mr. Razak, in that response was that you are looking at hiving off your hospitality business and maybe bringing in another IPO. I think that's very, very interesting. Can you give us any more details? What is the size right now of this hospitality piece of the pie, and by when? You're saying that there is a board approval, if I heard correctly. So by when do you hope to implement this and bring this as an IPO?
It's work in progress. It takes about at least 6 to 8 months. And I believe that in this calendar year, we should be able to pull this off.
Well, there you have it. That's the management of Prestige Estates telling us about all that is on the anvil, and of course, the possible spin-off of the hospitality business as well. For now, Prestige Estates is up around 1%. The entire realty sector has had a tremendous year, and it does seem like there's more legs to the rally at the moment, even though we are looking at about a consolidation for a whole host of them. Rajesh, your view on the sector, if you have Prestige under your coverage, what's your view here?
See, it's a good company, no doubt on that. With premium projects under its belt in major metropolitan cities, it's doing very well. And now with the management indicating that in the near future, they might come out with a hospitality IPO, that's again good news. Last few days back, they have raised money from Abu Dhabi Investments and Kotak AIF. That is again a feather to their cap, because then they will have liquid capital for their management. I think at 1,300 odd rupees, it can be held for a medium to long term horizon. But for new entry, I think one should wait, because the entire real estate pack have run quite a lot on expectation of good demand and premium projects and all those things. And all the positives has already been discounted. Some amount of correction is due.
Okay. That's the view as far as Prestige Estates goes. Let's move on and talk about UltraTech Cement. And in the latest, we have some updates with respect to the company. We understand that it's commissioned 2 greenfield capacities. Moreover, these capacities include a 2.7 MPTA cement grinding unit in Tamil Nadu and another 2.7 MPTA integrated cement plant in Chhattisgarh. So about 2 different geographies, and specifically when it comes to the cement business, geographies do matter a lot. But of course, UltraTech is a relatively pan-India player. Capacity is expanded by as much as 18.7 million tons in the last 12 months. That's the latest with respect to UltraTech Cement. And while currently the total capacity stands at 151.6 MPTA, ongoing expansion of 33.5 MPTA coming through. So we're really going to look at a very, very large capacity coming through over the course of the next few months, quarters and years as well. And well, its overall target capacity at the end of FY25 stands at around 157.4 MPTA. And moreover, it is going to go ahead and, in fact, invest about 32,400 crores towards ongoing capex over the next 3 years. So a building up of considerable capacities, an expanding market, and we all already know that UltraTech already works and operates on a fairly large distribution network across the nation as well. And it's always been one of the top bets as far as preference for the cement sector is concerned. So the question really is that how does it look like at this level, or are there any concerns as far as UltraTech goes going forward? Rajesh, your view on this one?
See, this is the largest cement manufacturing company in India, with around 146 MTPA capacity in India and 5 MTPA capacity in UAE, and that mix is 151.6, eyeing for almost 200 MTPA capacity in the next 4-5 years. That's a big plan, and the company is doing very well. Recently, in media, there were news that the companies are increasing the prices per cement bag. Secondly, demand is going up because of real estate and infrastructure projects. I think everything is going well for the cement pack as a whole, and somebody wants to invest into it, UltraTech would be the first choice because of being a market leader and the highest capacity as such. And somebody who is looking for a lower risk kind of thing, I think one can even look at Grasim, because it's a holding company of UltraTech. So when you are buying Grasim, you are moving into paints, you are moving into cement via UltraTech and their own business. So I think UltraTech will be our first choice in the entire cement pack. And somebody looking to reduce their risk, one can go to Grasim too.
Right. There you have it. Well, of course, both companies from the same group. But, well, let's move on and talk about Tata Technologies, and that's the final stock that we want to address. And, well, in the latest, of course, the company has signed a JV with BMW Holdings. And this actually entails providing software to the BMW group. And in this JV, in this specific JV, that is BMW Holdings Netherlands, is where the JV is going to be formed. It's a 50-50 JV, and it will involve auto software as well as software-defined vehicles and a handful of other updates coming through. And as you can see on your screen there, they will establish hubs in Pune, Bengaluru, and Chennai. So it's very much going to be an in-house operation. And well, they're going to seek solutions for its premium vehicles and digital transformation solutions. But this is only one part of the equation. Tata Technologies were listed at a substantial premium to its issue price a few weeks ago. It went all the way to the mark of 1,400 rupees per share. It had then since come off and corrected to somewhere around 1,050. And it does seem like we're just looking at a tad bit of a recovery, a tad bit of a spark since then, since it hit its low. Rajesh, your view on Tata Technologies, how are you viewing valuations in terms of the prospects that the company has?
We are extremely bullish on this. We have come out with the initiating coverage report, and we have come out even during the IPO in late November, we have come out with the IPO report too. We are extremely bullish, not only because it belongs to the Tata Group, which again has a premium, but because of the kind of software it has developed for vehicles. Previously, the most of the revenue used to come from Tata Group only. Now they have diversified that revenue chunk from Tata to other groups also. And that today's tie-up with BMW is another feather in the cap. I think one should buy at this price. 1,100 odd rupees is a very reasonable price for Tata Tech. One can accept at a target of around 1,400 in the next 1 year. So it's a very good bet. Go long in this.
There you have it. That's a view on Tata Technologies. And on that note, we are out of time on this edition of Hot Money. Taking a moment to thank Rajesh for joining us and taking us through his views on the several stocks and sectors that we spoke about. And with that, it's a wrap. But lots more lined up on the other side. Stay tuned in.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers, growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market...
Benchmarks recover from low to trade flat. Sensex trades above 73,900, while Nifty is above the 22,400 mark. Sectoral indices trade mixed. Media and IT emerge as top gainers. On the other hand, realty and FMCG drag. In a significant update for equity markets, NSE halves Nifty 50 contract size. Lot sizes for Nifty Financial Services and Midcap Select also reduced. India's forex derivative markets in danger, as a new rule which forces participants to have an actual forex exposure takes effect. And tsunami warnings issued in Taiwan and Japan after a 7.5 magnitude earthquake rocks the region. Reports say earthquake along the coast of Taiwan is the strongest in 25 years. Hello and welcome. You're watching the Market IQ. This is Mahima Vachhrajani. Let's take a deep dive into how the markets are panning out to be. Well, in terms of the benchmark indices, Nifty is trading pretty much flat, although it's off from its day's lows. It is trading around 0.15%, nearly 120, trading with a very tight band of 120 points, hardly 30 points away from its day's highs. In terms of the gainers on the Nifty today include TCS, Shriram Finance, Divis Laboratories, Hindalco, HCL Tech. In terms of Nifty contributors, well, HDFC Bank, TCS, Bharti Airtel, Axis Bank are the top contributors. The stocks that are dragging down in terms of contribution include RIL, L&T, Kotak Mahindra Bank and Nestle. In terms of Sensex is also trading in a very flat range today. It is up around 0.2%. Again, it is off from its day's lows. In terms of the broader markets, well, the broader markets are doing a bit better than the benchmarks today. Midcap 100 is up about 0.5%. The small cap 250 is up about 1%. So small cap 250 is doing better in the broader market segment. Now moving on to how the sectors are doing today. Well, the top two sectoral gainers today include the Nifty Media and Nifty IT. Nifty Media, the gains are being led by something like a Dish TV, Saregama, Hathway Cables. For Nifty IT, the gainers include L&T, TCS and Coforge. Nifty IT is probably seeing a good amount of buying today after the downfall of Nifty IT yesterday. Nifty Media is probably gaining a lot since this financial year starting. It fell around 18% in the first quarter. However, it's doing very well. The top losers on the sectoral indices, however, include the Nifty Realty, which is the top loser. Macrotech, Godrej Properties, DLF, Oberoi are the top losers on the Nifty Realty. We're seeing some kind of profit booking in Nifty Realty today. Nifty PSU Bank is also amongst the top lagging sector today, which is kind of rare. PSU banks usually are not seen in red. Well, likes of Punjab, Sindh, BOB, Indian Bank are some of the stocks that are dragging down the sector today. But well, the MOIL is in focus today, and this is because their business update for March has come in, and if you see, they've recorded a record-breaking production number of 17.56 lakh tons, up 35% YOY. The sales has hit all-time high of 15.36 lakh tons in FY24. They've also said that their EMD production has peaked at 1413 tons, and their exploration efforts have intensified with 87,661 meters of core drilling. Well, Hindustan Zinc also came up with their business update. Metal production up 6%. Their Q4 refined metal production is up 6% sequentially at 273 kilotons. Mines metal output up 11% QOQ. And refined metals achieved highest annual production in FY24. Similarly, NALCO also came up with their business update, and it's recorded highest ever cast metal production. It has recorded production of 4.6 lakh metric tons and recorded highest ever bauxite excavation of 76 lakh metric ton. In terms of the NSE Nifty Midcap Select that we were talking about has reduced its lot size. We can see that the Nifty and Fin Nifty Midcap has also reduced their lot size. Previously, Nifty 50's lot size was 50, which will come down to 25. For Fin Nifty, it was 40, and it will now come down to 25. And Midcap Nifty, which was 75 previously, will come down to 50. However, there is no change in the lot size for Bank Nifty, and this will come into effect from April 26th. And staying with NSE, we spoke to Sriram Krishnan, Chief Business Development Officer at NSE, about the risk management strategies that were in place behind the move. Let's hear.
Stipulate that the minimum lot size has to be always 10, the contract value has to be minimum 5 lakhs and maximum 10 lakhs. It should be in that range of 5 to 10 lakhs. And we should be guided by the average closing price of the underlying index during the previous 1 month prior to the point at which the revision is being undertaken. So what we have observed in this case is that Nifty 50 contract value had gone beyond 10 lakhs to 11.22 lakhs. Fin Nifty and Nifty Midcap are both significantly above 5 lakhs, at about 8.5 lakhs for Fin Nifty and about 8 lakhs for Midcap Nifty. So we thought, we should do one round of correction just to make sure that, they are more towards the 5 lakhs mark, which is the prescribed minimum value. Because these contracts, need to be reviewed from time to time, keeping these guidelines in mind. So we typically look at it every 6 months. So 5 lakhs is the minimum prescribed value, because I think then participation can be more broad-based. And, the affordability is an important consideration for any derivatives contract from an overall standpoint. So, of course, the risk management framework that we have in place is one of the finest in the whole world, has stood the test of time. And we are online risk managers in a sense in the whole world. Nobody comes anywhere close to us. So I think more than risk management, what we are looking at here is to make sure that the contract value doesn't become so high, like in the case of Nifty 50. What we've seen now, it's at about 11.22 lakhs, which means it's beyond the 10 lakh maximum value that's prescribed by the rules. That's why this correction was required.
Well, that was the NSE top management speaking about the recent move. They've guided that this is more of reducing the contract value overall rather than a risk management efforts that they've put in. Meanwhile, moving on, we did talk to the management of Tata Tech. Tata Tech inked JV with German luxury car maker BMW to set up an automotive software hub in India. We spoke to Managing Director and CEO Warren Harris regarding the details of the JV and how will this aid companies' revenue. Listen in.
It's a really big day for the engineering services sector here in India. To have a premium automotive company like BMW make a commitment to India at scale is something that I think is a testament to the growing capabilities that we collectively represent here in this country. You know, today we signed the joint venture. The joint venture is joint venture is subject to regulatory approval in Europe and in China. So I'm not in a position to be able to share too many details, but what I would reinforce is that it's going to be focused upon automotive software and also the development of enterprise IT capabilities that will further enable BMW to optimize the way in which it runs its operations globally. So it's a very exciting day for us, and also an exciting day for the Tata Group. The success that we've celebrated today was enabled by BMW undertaking a search over the last 12 months of candidate Indian engineering services partners. They made a decision on Tata Technologies based upon capability, but also values and culture. And our proposition to BMW was also reinforced by other group companies, and specifically companies like Tata Elxsi. So it's a great day for us, but it's also a great day for the Tata Group.
Agreed. It is a great day, Mr. Harris, and you know we saw that in the stock run yesterday. But having said that, is there any sort of detail you can give us on the size of this JV? What is the quantum of investment? What is, for example, the contribution to your top line that is going to come with this deal? In what aspects are you partnering with BMW? Anything that you can share there?
As the name joint venture communicates, this will be a joint venture between both organizations. You know, we will have a material say in how the JV operates. We'll also have a material ownership position in the organization. But at this stage, given the requirement of regulatory approval, we can't disclose too much in the way of detail.
I think one thing that the street would definitely like to know, and this is something that maybe bothers analysts that track your company, is your dependence on your anchor clients. Your top 5 account for about 70% of your revenue. Your top few are for about 45-46% of the revenue. Can you give us a sense if this deal with, or this JV with BMW now reduces that concentration with your anchor clients?
One of the things that's synonymous with Tata Technologies' value proposition is the strategic nature of the relationships we have with our clients. And so although we typically work with a small number of clients, the commitment that we make to those clients and they make to us is material, it's meaningful, and it's long term. You know, we have focused upon the top R&D spenders in the 3 sectors in which we operate, automotive, aerospace, and transport, construction, and heavy machinery. And wins like this certainly improve the customer pyramid. But as we expand our customer base, we want to stay very true to the difference that matters that Tata Technologies represents, which is our ability to be able to undertake the most complex engagements in this sector. You know, the type of work that we undertake, you know, is typically synonymous with the type of capabilities that the OEMs have themselves. And so we're very clear about where we sit in the market, and all of the engagements and the customer relationships that we're investing in support our ability or support our ambition to expand that.
That's great, Mr. Harris, but let me reiterate that question, which I haven't quite gotten an answer to. For example, does this bring BMW in your top 5 or top 3 client list?
I think maybe in 12 months' time we should have the same conversation. But at this point in time, I'm not going to speculate.
Well, with this, let's slip into a short break. On the other side, we'll get you latest updates on Vistara crisis and more.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers, growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it.
Welcome back. You're watching Market IQ. Well, let's see how the markets are panning out right now in terms of the benchmarks. As we addressed in the start of the show, they are trading pretty much flat. Nifty 50, if we talk about Nifty 50, is trading within a tight band of 120 points. At present, it is around 0.24% up. Sensex is also trading within a very flat range, around 0.26% up. However, both the benchmark indices have recovered from its day's lows. The benchmarks did start on a negative note, however, they've recovered from that. The broader markets are doing pretty well in comparison to the benchmarks. In terms of Midcap 150, the index is up around 0.5%, and the small cap 250 is up around 1.07%. So small cap 250 is clearly doing much better than all the other indexes. Now, there was one stock in focus on the back of a business update. Well, Anupam Rasayan, if we can pull up the chart, it did start on a good note in the morning. It signed an LOI with Japanese multinational company. The aggregate LOI value stands at around 743 crores, and this is to be executed over 7 years. There you go, the chart of Anupam Rasayan. The stock has been up over 2.4%. Also, there was a systematic note on Shelly Engineering, where Systematic has initiated coverage on Shelly Engineering with a target price of 720. If you can pull up that chart, there you go. The stock is up around 3.5%. The note indicated that Shelly Engineering is a leading exporter of high precision engineered plastic products. They have a wide customer base across healthcare, consumers, appliances, auto and lighting. So this is their business advantage and cost advantage. They have a strong order book and guidance that is received from their key customers, and they expect, so Systematic expects that 19% CAGR growth in terms of revenue, 29% CAGR growth in terms of EBITDA, and 46% CAGR growth for PAT over FY23 to 26 estimates is what they're aiming at. The target price of 720 is set based on 30 times the FY26 PE estimates. Now, there was one more stock which is in focus because Jefferies has come out with a note on it. Jefferies is bullish on ICICI Lombard. If you can pull up the chart, well, the stock is not doing much today, around 0.7% higher, but Jefferies has reiterated buy rating on ICICI Lombard with a target price of 1950. They've said that the strengthening presence in health insurance, digital and agency network is pretty strong. They're expecting retail health segment to ramp up in the next 2 to 3 years. What they're saying is that the competitive intensity is becoming more rational for ICICI Lombard, and easing competition is allowing market share gains in motor OD. And it also expects a 16% premium CAGR in FY24-27. The lower combined raise earnings estimate by 2 to 4% in FY25-26, and the target price of 1950 is based on 25 times June 26 E estimates on EPS. Now, moving on to a company which is a real estate sector based company, Prestige Estates. Well, Motilal Oswal has come up with a note on Prestige Estates. It has reiterated buy on Prestige with a target price of 1535. They've said that expansion in new markets to sustain pre-sales growth momentum is what they're backing the reasons on for reiterating the buy rating. The rental portfolio in Mumbai assets is also shaping up well for Prestige Estates. They've also said that to start generating positive free cash flows from FY26 for Prestige, that is what they're estimating. The platform deal with ADIA and Kotak AIF can further release cash flow burden for Prestige. And lastly, they have mentioned that monetizing hospitality portfolio can lead to value unlocking. But moving on, speaking to NDTV Profit, Prestige Group's top boss, Irfan Razak, has confirmed that the company is having off hospitality business and will come up with an IPO by the end of this calendar year. Listen in.
What is giving us courage, the revenues will be quite phenomenal. And whatever hospitality assets the company owns now, are doing extremely well. So we are looking at some point of time even doing a separate IPO for the hospitality assets itself. We've got the consent of the board for this. The team is working on it. So that will help us build more hospitality assets without getting too much into more debt, you see, because we have to have this balancing act of how much of debt you can get in and how much of equity is required. Even now, this current deal, it's a question of how to balance yourself, how much of debt can you show in your books and how much of equity you can have. Of course, it comes with a trade-off. The moment you give more equity, you are sharing a certain amount of the pie. But I'd rather you share that pie than have that problem of debt on your head. So, I mean, we'll have to keep doing it right. Of course, it doesn't mean to say if it's equity, you become frivolous. You have to make sure that you give the returns to your stakeholders.
Absolutely. You know, an important line over there, Mr. Razak, in that response was that you are looking at hiving off your hospitality business and maybe bringing in another IPO. I think that's very, very interesting. Can you give us any more details? What is the size right now of this hospitality piece of the pie, and by when? You're saying that there is a board approval, if I heard correctly. So by when do you hope to implement this and bring this as an IPO?
It's work in progress. It takes about at least 6 to 8 months. And I believe that in this calendar year, we should be able to pull this off.
Well, that was Irfan Razak of Prestige Estates guiding that they will come up with their IPO for their hospitality segment. But moving on to an NDTV Profit exclusive, Vistara's top boss is likely to meet pilots today. My colleague Pragati, who is tracking the Vistara crisis, joins us live. What are the gatherings from your sources, Pragati?
We just got to know that Vistara CEO might address the pilots around 1 p.m. this afternoon, which is in another half an hour or so. We got to know that the meeting is also expected to have the top management, other executives of Vistara, and even the HR, and all pilots have been sent or asked to be a part of this meeting. As of now, we just know that this meeting is online. What the agenda of the meeting is still not clear from either the company side or the pilot side, but we just know that a meeting is coming up, and we plan to bring you the latest updates as and when the meeting gets over.
Right, Pragati. So we'll be on the top of the story and bring to you as and when we come to know what will be the agenda of this meeting of Vistara. Well, but moving on, earlier we spoke to Borosil Limited's Shrevar Kheruka, who highlighted how the company foresees a strong demand outlook despite rampant solar glass dumping from China. Listen in.
As far as solar glass is concerned, as far as that's in obviously separate company, Borosil Renewables, and that company has seen a lot of demand increases, although we face substantial dumping from China, and that's continuing. The government has taken a very positive step of ALMM, which is the approved list of module manufacturers, which has already been implemented as of April 1st, which means this will spur domestic demand for domestically produced solar modules. And therefore, we anticipate that if the domestic production goes up of solar modules, the demand for solar glass will increase, and that should positively impact the pricing to some extent. We don't know how much, we don't know if it will impact pricing, but the quantity will certainly be attractive, and we are geared up for that. We've added lots of new products in terms of thinner glass, in terms of glass with special coatings, etc. So I believe that that business should see an uptick. It'll probably take a couple of quarters to play through because there may be inventory in the system. So maybe April to June, there will still be stocks in the system of the really low-priced Chinese modules. But hopefully by July, August, we should start seeing an improvement there.
Well, it's very interesting to note here that there is an anti-dumping duty on solar glasses, but not solar glass panels. Well, all the solar glass panel companies have put in a request for an anti-dumping duty to stop China from literally dumping solar panels in India. But now we'll shift focus to Bharti Hexacom. IPO date has been scheduled for subscription today, Wednesday, that is 3rd of April, and will close on Friday, April 5th. Let's get in our colleague Smriti with more details.
Well, yes, Bharti Hexacom opened its IPO today. The total size of the IPO is about 4,275 crores, out of which the company has already garnered 1,923 crores from anchor investors. And anchor investors include names like Capital Group, ADIA, Morgan Stanley, and Capital Group. Even among domestic investors, we have Axis Mutual Fund, Aditya Birla, ICICI, SBI. However, let me first tell you what the company does. So the company operates in two circles, Rajasthan and Northeastern Circle. So it's total of 7 states that it operates in. It provides mobile services, broadband services, and fixed line services in these areas. Now, if you look at the what the IPO consists of, it's a pure offer for sale. Telecommunications Consultants India. It's a government-owned entity that held 30% stake in the company. Out of that 30%, it's now going to sell off 20%. The rest 70% is still held by Bharti Airtel. The price band for the issue is 542 on the lower end and 570 at the upper end. Now, if you look at the financial highlights of the company, it had a revenue of 6,579 crores in FY23, which is 22% higher than the previous year. The operating revenue was at 2,925 crores, which was 54% up. Margins were at 44% versus 35% in the previous year, and ARPU for FY23, which is average revenue per user, was at 185 versus 155. A little bit about the subscription data. The IPO has got non-institutional investors about 7% there, retail at 24%, and the total subscription is still at lower end at about 6% or thereabouts.
Right. Well, Smithy, it's very interesting to know that one more telecom company will get listed. The telecom companies have been under pressure. Let's see how this particular IPO gets subscribed. But with that, we're completely out of time. That's all we have on the show. But do stay tuned in to NDTV Profits. Lots more on the other side.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
Benchmarks extend gains to trade higher. The Sensex trades above 73,900, while the Nifty is above the 22,500 mark. Sectoral indices trade mixed. All sectors barring realty, PSU banks, FMCG and auto trade higher. Meanwhile, media and IT emerge as winners. In a significant update for equity markets, NSE halves Nifty 50 contract size. Lot sizes for Nifty Financial Services and Midcap Select also reduced. India's forex derivatives markets in danger as a new rule which forces participants to have an actual forex exposure takes effect. And tsunami warnings issued in Taiwan and Japan after a 7.5 magnitude earthquake rocks the region. Reports say earthquake along the coast of Taiwan is the strongest in 25 years. Hello and welcome. You're watching Market IQ and I'm your host Pallavi Nahata. Before we can move on with the show, let's have a very quick look at where the markets are at first. After starting off on a weak footing because of weak global cues that came in, while the Nifty 50 was slightly, trending weak in the morning, it's now actually gained strength. We're currently up nearly about 0.25%. We're hovering close to the day's highs and we continue to, at this point, remain above the 22,500 mark. The Sensex too up about 0.25% and that too is up by it's above the 74,000 mark currently, up almost about 200 points, a little less than that actually currently. Let's have a quick look at the key constituents of the Nifty 50 and where they are at. It's Shriram Finance that's actually leading the pack there. The stock is up by about over 2.5%, as is Divi's Lab. TCS2 up by almost 2%, as is Axis Bank. What's not performing too well currently is Nestle. The stock is down by about 2.5%. Among the key contributors, while HDFC Bank, TCS, Axis Bank all continue to lend strength to the Nifty 50. RIL, Kotak Mahindra, Nestle are among those stocks which are currently a little bit of a drag on the Nifty 50. But let's have a look at how sectors are performing. A bit of a mixed day currently so far there, with several sectors in the green and a few of them in the red. What's also coming in is that Rahul Gandhi has filed for nomination. And as you can see, those are visuals coming in of Rahul Gandhi filing his nomination papers from the constituency of Wayanad in Kerala for the upcoming general elections. The visuals are just coming in, and we'll continue to bring you more updates on that. Yeah. And as we continue to see, those are visuals coming in of Rahul Gandhi filing his nomination papers for the upcoming general elections. He's accompanied by sister Priyanka Gandhi. Rahul Gandhi is filing his papers from Wayanad in Kerala, where he's contested from and won earlier as well. We're a short while away from the general elections, and the countdown to the elections has now begun. We're currently on our screens seeing visuals of Rahul Gandhi filing his nomination papers. We're going to be watching out for more updates on this. It's going to be an interesting elections, while a lot of us believe that there's not much scope for any surprises. It's still going to be interesting to see how the elections pan out and what are the numbers we're looking at. In fact, if you go on to the NDTV Profit portal, we've begun our coverage of elections. One of the key stories we were tracking today is increase in female voter participation as well. In the elections in several states already, we're beginning to see higher female voter turnout, and in fact an extremely interesting report by the State Bank of India's economic research team actually said that in the next general elections, the one after this one, there is a chance that we're actually going to be seeing a higher number of female voters. But more on that later. So those were visuals of Rahul Gandhi filing his election action papers. Before we can move on, a very quick look at where the markets were at. The Nifty 50 is currently at 22,500, while the Sensex is also above the 74,000 mark. Among the sectors that are performing well is the Nifty IT. That's definitely refreshing to see, considering it's been a bit of a bumpy ride for the Nifty IT. But moving on, in a significant update for equity markets, the National Stock Exchange has halved the Nifty contract size on select indices, including the benchmark Nifty 50. The Nifty bank lot size remains unchanged at 15. The changes came into effect from April. They're going to be coming into effect from April 26th, and the new contract sizes will be available for July 2024 expiry. Now, the move is aimed to increase liquidity by efficiently managing risk to make the size more attractive, especially for more retail participants. Now, we spoke to Sriram Krishnan, the Chief Business Development Officer at NSE, about the risk management strategies that were in place behind the move. Let's hear him out.
Rules stipulate that the minimum lot size has to be always 10. The contract value has to be minimum 5 lakhs and maximum 10 lakhs. It should be in that range of 5 to 10 lakhs. And we should be guided by the average closing price of the underlying index during the previous 1 month prior to the point at which the revision is being undertaken. So what we have observed in this case is that Nifty 50 contract value had gone beyond 10 lakhs to 11.22 lakhs. Fin Nifty and Nifty Midcap are both significantly above 5 lakhs, at about 8.5 lakhs for Fin Nifty and about 8 lakhs for Midcap Nifty. So we thought, we should do one round of correction just to make sure that they are more towards the 5 lakh mark, which is the prescribed minimum value, because these contracts need to be reviewed from time to time, keeping these guidelines in mind. So we typically look at it every 6 months. So 5 lakhs is the minimum prescribed value, because I think then participation can be more broad-based, and the affordability is an important consideration for any derivatives contract from an overall standpoint. So, of course, risk management framework that we have in place is one of the finest in the whole world, has stood the test of time. And we are online risk managers in a sense in the whole world. Nobody comes anywhere close to us. So I think more than risk management, what we are looking at here is to make sure that the contract value doesn't become so high. Like in the case of Nifty 50, what we've seen now, it's at about 11.22 lakhs, which means it's beyond the 10 lakh maximum value that's prescribed by the rules. That's why this correction was required.
Let's get you an update on the Chinese solar import situation as well. The US Federal Authority in August 2023 had said that China has been bypassing local tariffs via other countries. Now, as a part of India's renewable energy push, solar panel modules imports from Vietnam, Malaysia had been rising. We spoke to Borosil Limited's Shrivar Kheruka, who highlighted how the company foresees strong demand outlook despite rampant solar glass dumping from China. Listen into a slice of that conversation.
As far as solar glass is concerned, as far as that's in obviously separate company, Borosil Renewables, and that company has seen a lot of demand increases, although we face substantial dumping from China, and that's continuing. The government has taken a very positive step of ALMM, which is the approved list of module manufacturers, which has already been implemented as of April 1st, which means this will spur domestic demand for domestically produced solar modules. And therefore, we anticipate that if the domestic production goes up of solar modules, the demand for solar glass will increase, and that should positively impact the pricing to some extent. We don't know how much, we don't know if it'll impact pricing, but the quantity will certainly be attractive, and we are geared up for that. We've added lots of new products in terms of thinner glass, in terms of glass with special coatings, etc. So I believe that that business should see an uptick. It'll probably take a couple of quarters to play through because there may be inventory in the system So maybe April to June, there will still be stocks in the system of the really low-priced Chinese modules. But hopefully by July, August, we should start seeing an improvement there.
Well, and the Nifty 50 is now actually below 22,500 mark. It's, of course, very much still in the green, still up by about 1/5%. Broader markets, meanwhile, continuing to outperform. We have a bunch of stocks which came up with their business updates. My colleague Kanika joins us with key details on MOIL, Hindustan Zinc and Nalco, some of the stocks in focus and trade today.
So first we have MOIL, whose share price rose by more than 4.5% today. Now this is mainly on the back of company achieving best ever production in any financial year since inception, and which showed a 35% year-on-year increase. This is a 29% higher increase from the previous best ever production, which was in FY 2008. And on the sales front also, the company hit an all-time high in FY 24, marking a 30% year-on-year growth. Next, we have Hindustan Zinc. The Q4 refined metal production rose 6% sequentially, and mines metal output was up by 11% quarter-on-quarter at 2.99 lakh tons, and refined metal achieved highest annual production at FY24. Next, we have Nalco, which recorded highest ever cast metal production at 4.6 lakh metric tons and recorded highest ever bauxite excavation at 76 lakh metric tons. Along with that, it also recorded highest ever metal sales.
And with that, it's time for a short break, but do stay tuned. We have a lot more of updates coming on the other side for you.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers, growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Welcome back. You're watching Market IQ on NDTV Profit. As part of NDTV's special series all about AI, we're covering ventures and startups doing definitive work in the realm of artificial intelligence. This week, we're covering NeuroPixel, an emerging Bengaluru-based startup. Here's a special report.
As the Indian startup ecosystem embraces the power of artificial intelligence, NDTV Profit got down on the ground in a quest to find ventures that are making a difference. Meet NeuroPixel.ai, a young generative AI startup based out of India's Silicon Valley, Bengaluru, focused purely on fashion e-commerce. We traveled to their headquarters and spoke to founder and CEO Arvind Nair to understand more about the business.
AI as a technology is going to revolutionize the way that we do a lot of things, including one of the most mundane, manually intensive tasks that happens on a daily basis with fashion brands, and that is cataloging all their clothes. With AI, we should be able to automate a large part of this workflow and also simultaneously give rise to a higher diversity of models, better quality images, etc. that boost the customer experience.
Despite a product that promises considerable reduction in time and costs for fashion retailers, NeuroPixel did face an uphill task in convincing their first few clients on why AI was the answer to their catalog woes.
So we were actually doing generative AI before this generative AI wave of the last year. But however, given the gestation period that is typical with these deep tech businesses, we've only started deploying a solution about 3-4 months ago. and we've been growing at double-digit percentages month over month. The first few clients were really difficult, but now that we've got a few wonderful brands on board, it's becoming a little bit easier to sell both domestically and internationally. So we're working in Dubai, in Singapore, and predominantly in India, but we are looking to increase our focus on the US and EU very soon.
Unlike India's first wave of startups that took several years to find product market fit and settled on a much narrow, targeted target market, AI startups in the application layer emerging from India, such as NeuroPixel, are building from India but for the world.
And on to an NDTV Profit exclusive. My colleague Pragati, who's tracking the Vistara crisis, joins us live. Pragati, what are you gathering from your sources? What's the scenario playing out like at the moment?
Right. So about half an hour back, we exclusively reported that Vistara CEO is planning to address Vistara's pilots very soon around 1 p.m. As of now, we are not yet sure if the meeting has begun or not. But in this particular meeting, which is expected to be held online, again, the meeting link has been sent to all pilots. The top management of Vistara, all the HR heads, HR personnel are expected to attend. Now, officially, there's no communication from the top management of Vistara pilots as to what is the agenda of the meeting. But from sources, we know that it is about the standoff that is happening currently between the pilots and Vistara's management. It is definitely about issues that are cropping up ahead of Vistara's merger with Air India. And the primary issue is about the salary or the remuneration of the pilots, because as per the revised contract and as NDTV Profit has previously reported, the fixed pay of the pilots, which was before 70 hours of fixed pay that they were getting and the rest was the variable component, was now slashed to 40 hours of pay, and the remaining component became the variable component, which significantly led to a fall in the remuneration of the pilots. So that is one point of contention here. What the address will be, what will be the communication, and what discussions will follow after this 1 p.m. meeting, we'll bring you the latest updates.
So much, Pragati. We will continue to bring you the latest updates as promised by Pragati as and when there is progress. But in other news, Asia woke up to a powerful earthquake in Taiwan. Dozens of buildings have been damaged, and the earthquake has also prompted tsunami warnings that extended to Japan and the Philippines before being lifted. At least 7 people have been killed and nearly 730 have been injured. Officials have said that the quake was the strongest in nearly a quarter of a decade to have shaken the island, and officials have also warned of more tremors in the days going ahead. Coming back to domestic news, the Indian Meteorological Department has cautioned about above normal temperatures and heat waves in several parts of the country. But is that cause for immediate concern? Let's delve a little bit more into that. So essentially what we know currently is that the South Peninsula, the northwest central India, some parts of East India and the plains of northwest India are likely to see higher temperatures than usual. This is all for the month of April. The April to June summer heat currently appears to pose limited threat. That's what we have gathered from our conversations with people from the weather forecasting agencies, economists, and so on. There is some concern around horticultural crops, such as vegetables, but the Rabi harvesting season is already underway, and as long as there is no delay in the onset of the southwest monsoons, the cause for concern is limited at this juncture. We spoke to Gaura Sen Gupta, who is economist at IDFC First Bank, and what Gaura had to say was that the heat wave conditions definitely pose an upside risk to inflation while posing further downside risks to the Rabi crop output. However, at this juncture, it remains to be on wait and watch mode, just given the number of factors at play. For instance, the La Nina is expected to provide some support to the monsoons, and assuming that the onset of monsoons is timely, this impact that we're talking about on agriculture and in turn inflation might be mitigated at this juncture. For FY25, most economists are continuing to hold their inflation forecasts. We're also going to find out more about inflation and GDP forecasts. We're also going to closely watch out if the central bank has any commentary on any of these. It meets for the Monetary Policy Committee on Friday. The meeting is already actually underway. They will announce their decision regarding the repo rate only on Friday. The expectation is, of course, of a status quo. Moving on, exactly 40 years ago, Rakesh Sharma scripted history by becoming the first Indian to reach outer space on board the Soviet rocket Soyuz T-11. In an NDTV exclusive, my colleague Pallava Bagla spoke to Rakesh Sharma and he spoke about a message that he would like to share for astronaut designates for India's Gaganyaan mission. Listen in.
I've been very closely associated with all four of them, and whatever I had to say, I have been sharing my experience, and whatever my learning has been, I have shared with them. Everybody approaches this with a different mindset, but since they are experienced test pilots, I'm quite sure that they would be as excited as I was, and they would be as shall we say, they will concentrate as much as I did, if nothing else, to make sure that the mission is a success and the country gets the Air Force and the country gets the accolades for it. And given ISRO's recent history and successes, I have no doubt that they will perform well, all four of them. They're professionals, and they will achieve the mission objectives, and they'll return home safe and sound. And I really look forward to having them join the band.
Lovely. You're still very fit. Given an opportunity, would you want to fly on Gaganyaan to go into space again?
Well, I'm not as fit as I would have liked to be. However, if I do get a chance, I would love to go there as a tourist, because this time, instead of working, I would love to, stick my nose close to the window to watch the world go by. I didn't have much time to do that during my flight.
Lovely. India also has a plan to set up its own space station by 2035 and then to land an Indian on the moon. Do you think these are exciting targets and goals that the Prime Minister Narendra Modi has set for the Indian space community? And now we say community because it's going beyond ISRO now.
Yeah, it is indeed exciting. It is, I would say, it's quite analogous to what Kennedy had done for the US, raising the bar and saying we are going to go to the moon, and they did. So we must keep the bar high, because that's the only way we will accelerate our efforts.
And that was India's first astronaut, Rakesh Sharma, in conversation with NDTV. That's all we have on the show for now, but do stay tuned to NDTV Profit. We have more coming up for you.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers, growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Hi, you're watching the Mutual Fund Show. I'm Tamanna Inamdar. The topic we've picked today has actually come from the feedback of our viewers. So one of our viewers wrote in to us and asked a question which has actually struck up a conversation. Her question was, and we'll pull it up for you, about whether an IDCW works better or should she go for a SWP. Now, let me contextualize this before we get to our experts. We keep talking about what investments to make, how to invest in SIPs, how small and consistent investment portions at a regular interval is going to get you the right growth in your mutual funds. But what about when you want to actually get some of that money? Now, this particular viewer of ours wanted to know that in retirement, what is the best way? Should she go in for an IDCW, which is essentially a dividend option, or an SWP, which is a systematic withdrawal plan? So we thought that this is a great occasion for us to explain what these two options are, compare them and ask our experts to break this down. So that's the that's the query that came in from Lata Venkateshan, 64 years. And Lata, thank you so much for writing in. She wrote in saying, I have invested 6 lakh in total in ICICI Pru and HDFC Balanced Advantage Fund. Can we switch our existing funds from growth to IDCW? Is this beneficial for senior citizens? Now, let me start by welcoming our guest today. I'm joined by Juzair Gabajiwala, Director of Ventura Securities, is with us. I'm also joined by Kshitij. Kshitij is also joining in today, Kshitij Mahajan, Managing Partner and CEO of Complete Circle Wealth. Welcome to both of you, and thank you so much for speaking with us today. Now, why I found this question particularly interesting is because it's talking about the other end of the spectrum. At some point, your entire purpose of investments in mutual funds is to enjoy the fruits of that investment. And what is the best way to do it, especially if you are a retired person or you now want some steady income out of it. So with that, let me begin with Juzair to explain these two options. When I say an IDCW or dividend option versus an SWP or systematic withdrawal plan, what does that mean? Because we don't want people to just get caught up in the jargon. What are these two options?
Thank you, Tamanna. Thank you for having me on the show. And actually, this is a great topic, and it's actually one of my favorite ones. It is actually complicated for many investors. So just to give a bit of a context, previously IDCW was actually being called as dividend payout, but effective from 1st April 21. SEBI has changed it to IDCW, which basically means income distribution and capital withdrawal. So the dividend which is there of a mutual fund should not actually be compared with that which a corporate declares dividend. A corporate, declares dividend out of its profits, right? And in case of a mutual fund, it is nothing but buying and selling of securities. So that is a basic primary difference. And previously, what used to happen is that dividend was tax-free. In fact, the tax was being paid at the mutual fund house level. So it was tax-free in the hands of the investor. But now the whole scenario has changed. And because of the change in the scenario, it is better for a person to go for a systematic withdrawal plan. So a systematic withdrawal plan also acts in the same manner as an IDCW, but basically it is more tax efficient. So the tax efficiency is the most important reason that a person should actually opt for a SWP. And it has got its various advantages and, in fact, very little disadvantage. So it is very, very important for an investor to, try to opt for an SWP and not go for an IDCW as an option.
So if there is such a big, difference between the two, who actually and why should anyone actually go in for an IDCW? Let me come to Kshitij on this. Kshitij, great to have you back on the show. And let's begin with the basics, how you see these two concepts. And also let me add another layer to it. When does an investor know that it's time to come in for any of these options, where instead of only having credit flow one way, you're actually withdrawing some of your investments, in intervals?
Good afternoon, Tamanna. I think the context has been said very beautifully. So, when it's the time to withdraw, you have to check that what type of tax bracket you are in. So let's first of all simplify what the tax, various brackets which these two things fall in. Dividend is, or let's say, would we say that IDCW is basically on the basis of what tax bracket you are in. Let's say somebody who's having a 10% tax bracket. So whatever dividend they are getting as a part of their withdrawal, that's been taxed at 10%. Somebody at 20% will be taxed as 20%. But in equity, when you do SWP, or let's say you find a way through which you are withdrawing money, then long-term capital gain is 10%. And capital gain is only on the gain. When you withdraw money, it moves like FIFO, first in, first out. So some part of principal goes, some part of your appreciated amount as a part of equity investment goes. So here, depending on what tax bracket you fall into, you have to take a call. Let's take for example, somebody who's getting retired and is not having income which is more than 7.5 lakh rupees. So there is no tax. So once you withdraw this money and let's say on amount of the example which Lata ma'am has given, she has asked the question, 6 lakh rupees she want to participate and withdraw, let's say 10% every year, that means 60,000 she want to withdraw. And if after withdrawing that amount also, if your tax bracket has still been on the zero tax slab, there will be no tax on the amount which you have withdrawn. Let's say if it's added and the tax bracket has moved to 10% slab, then you are paying 10% tax. So it depends that what tax bracket you are into will guide you that whether you want to do a dividend or SWP, number one. Number two, it depends on the certainty of what type of amount which you need on a monthly basis. Dividends are not a certain thing. It looks like many of the AMCs on various schemes, they've been regular in paying dividend on a monthly basis, but this is not something which is certain. But SWP, let's say if your expenses depends on, it depends on the withdrawal which you are making from your investment, your monthly expenses depend on that, then I think SWP is a better option where you can decide, let's say X amount or Y amount, what amount you want to withdraw, on what date you want to withdraw. Because there's a certainty of withdrawal in systematic withdrawal plan, which is not there in dividend. Dividend option might surprise you in a month or two where any scheme is not paying you any dividend. So these two things has to be taken into account when you're looking for a dividend option or a SWP option.
So depend in parts on what stage of your life you are in, whether you want your essential corpus to, keep dipping with an SWP or not. Would that also be a factor? And, Kshitij, since you mentioned Lata's question, let me pull that up again and let's address her specific query as well, which we want to talk about, because she is talking about, the 10% amount that she wants in. She wants a 10% return, and she says that I've invested 6 lakh in total in ICICI Pru Equity Savings Fund and HDFC Balanced Advantage Fund. Can we switch our existing funds from growth to IDCW? Is this beneficial for senior citizens? So in her specific case, Kshitij, what would be the advice you would give?
Mana, again, it depends on the tax slab in which she is falling into. So if she is falling into a high tax slab, then growth is the right option. If she is not falling into high tax slab and either minimalistic tax slab or no tax slab, then she can go to a dividend option, what she is asking about. Second part, which is important, if she want to use this as an income withdrawal, fund, and she want to keep on increasing her overall capital appreciation after withdrawal also, then she has to move out of the savings fund, equity savings funds, to a better maybe BAF, some balanced advantage fund also. Because that can yield only 6-7% return. Where on a balanced advantage fund category, you can still expect 9-10% return over a long period of time. So, so that second change which she should do on the fund allocation side also, that's what I feel is the right way of doing it, because you can target 19% overall return, and you can expect a withdrawal of 6% up to 6% on a yearly basis from your capital appreciation. And second, as I said, it totally depends on what slab you're into, because equity long-term capital gain is 10%. And that's the most friendliest tax instrument in the country after agriculture income, if you ask me. But if she's in no tax slab, then I think for her, I think it's much better that she should she should move to a dividend option.
Okay, so tax slab is key. We don't have that details for Lata, but I hope that's useful for her. Juzair, what would be your response to her particular query?
So I'll give a very simple example. In fact, we that's what we address with many clients. So we just did a back testing of data. We took, if supposing, one of the most popular scheme was HDFC Balance Advantage. So if somebody had invested on 31st March 23 and we have a 1-year data. So on a 10 lakh investment, if he had opted for a dividend option, you would have received a total dividend of around 97,000. Okay. Now, depending upon 30%, you would have been paying tax of maybe around approximately 29,000. And if it was 10% tax bracket, you would have paid a 9,700 tax. Okay. Now, because this investment, and let us say the same amount was withdrawn by an individual, every month, exactly the same ditto amount we took as a withdrawal for 1 year. So he withdrew exactly around 97,000. And if he had taken capital gains, and now in this particular case, he would have actually paid short-term capital gains because it was, less than 1 year. His taxation would have come to just around 2,800 rupees. So there is a huge difference for somebody even in a 10% tax bracket, as compared to a person, opting even for a IDCW. So I see a great merit in SWP, specifically like, how Kshitij also mentioned, that it gives you the flexibility of defining your withdrawal. And my only second thing advice to Lata would be is that 10% is a very aggressive, withdrawal, because look at it like that. If I'm looking at a fixed income instrument, today no fixed income is going to give you a 10% post-tax return. So you should try to do a withdrawal of roughly around 6%. So which pre-tax would be around 8% or even 7% for somebody in a 10% tax bracket. So doing a 6% and taking a capital appreciation is much better than trying to be very aggressive in your withdrawal, because ultimately otherwise you would deplete your total corpus much more faster.
So see, that comes to the question that I was also asking Kshitij, and I'll bring this to Juzair. At what point do you decide to go for an SWP? So Lata Venkatesan is 64, and she's asked the question in the context of a retired person. Is this an option A, only for retired people? And then does that calculation have to sort of come in? What is your corpus? How much do you need to spend, and what is the kind of lifestyle you want to live, and for how long you want it? I mean, somewhere that back of the envelope kind of calculation needs to be made, Juzair?
She'll have to decide that, what is the amount she needs every month, because that is not something which we can tell. Yeah. But ideally speaking, if supposing, if somebody wants a cash flow, ideally speaking, you should try to build up a portfolio in a growth scheme for at least around 2 to 3 years in a a balance advantage fund type of a thing. Be a little bit conservative so that you get some accumulation for the period of at least 2 to 3 years. So, and then you start your withdrawal. And the withdrawal ideally should not be more than 6 to 7% from there. So, if supposing the total return is going to be around 10 to 12%, so you can withdraw around 6 to 7%, and you can still enjoy 3 to 4% capital appreciation down the line, because no investor likes to see depletion in the value of investments. So that is something which will take care if you be conservative in your withdrawal.
I just want to take that question to Kshitij as well. And is this only an option for retired people, or that kind of a calculation that you make?
Tamanna, very interestingly, sir has said it rightly, but I'll just add to what he said. Problem in today's life is not that how much money you want. Problem is that you are going to live long. If you want to retain that lifestyle at what you're retiring, then you have to build a corpus. Many of my friends, many clients, they ask that let me have, let's say, corpus of 5 crore, 10 crore. There's a monster called, inflation. And we keep on talking about 6%, 7% inflation. Inclusive is more than 8-9%. So you should have an inflation-beating investment returns. If you, let's say, participate in an index fund only, it can give you 11-12% return over the next 10, 15, 12 years, because your index fund return can be in line with your nominal GDP. Now, coming back to SWP, once you have a corpus with you, so, why SWP is important? Many people say that when we are at age of 50, we should go more on fixed income side. My only suggestion to them is, if they don't require lump sum investment, I think SWP works really beautifully. One reason, right now, the long-term capital gain on equity is 10%. And when you do a SWP, your principal and your appreciated amount, it goes in a proper, ratio. So, take for example, somebody has participated 1 lakh rupee and it has become 2 lakh rupees. When you want to withdraw some amount, it will go principal as well as appreciation in a proper proportion, depending on how much amount you're withdrawing, because it works like a FIFO. So tax liability exactly when during the lifespan where you're withdrawing your funds, initially is not more than 2, 3, 4%. And later also it's 5, 6% only, because you want to leave something on the table for other people also. And many people say that, no, I don't know, maybe I will live to 75, 80. Nobody knows how you're gonna and how much long you're gonna live. If you want to maintain that lifestyle, I think you should have allocation toward 10% plus allocation return which can be a balanced advantage fund or let's say a large cap fund, a combination of, and you should withdraw, as said by sir, not more than 6% on a yearly basis from that fund. So that your corpus will still keep on growing and you have that comfort of withdrawing money as and when you want. Let's say if some lump sum investment or lump sum requirement is there, you can withdraw the fund also. So that's the right approach, a better tax efficiency and a better, and there is a certainty of amount which is coming and hitting your bank account. You decide, okay, I want 1 lakh rupee on 1st of every month. It will come to your bank. Come what may, dividend is going to come or not going to come.
Absolutely. That's the way you have to think of it, and great advice there. We're going to take a very short break, but Kshitij and Juzair, please stay on with us, because on the other side, we take your queries and our experts answer them for you. Remember the WhatsApp numbers on your screen, and please do send in more questions like Lata has. If it's something that we think need to be expanded upon, we will take it up on the show as well. But stay tuned. On the other side, your questions coming up.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers, growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean...
Welcome back. You're watching the Mutual Fund Show. Now, this is the part of the show where we answer the questions you send in to us. If you're wondering how to do that, that WhatsApp number is on your screen. So let's begin with this query, which has come in from Muiz Ansari, who's 59 years. The goal is guidance. Says, I will be retiring in May 2025 and will invest 25 lakhs each in HDFC Balanced Advantage Fund SWP and ICICI Prudential Multi-Asset Fund SWP with 7% withdrawal. Where should I invest the balance amount after deducting monthly expenses? You know, this ties in perfectly with what we were discussing in the first part of this show as well. Juzair and Kshitij still with us. Let me come to you first, Juzair, on this query that Muiz Ansari has. Though the question essentially is where he puts the balance money, but what is your take on the two funds he's mentioned, 25 lakhs each in HDFC Balanced Advantage and ICICI Prudential?
So I will not give any specific fund advice, but in terms of the category, I think the category which he has chosen is pretty good in terms of, so both are reasonably conservative. My only concern is that, we are coming from a high level of market right now. From we have had a spectacular run in the last financial year. So whether 24-25 will behave in the same pattern, I don't think so. So he will have to, narrow down his expectations. So within 1 year, whether he'll be able to, withdraw, because like I said before, ideally you should, let your corpus grow for at least around 2 to 3 years to start withdrawing. So if at the end of 1 year, if he gets a, return of around 10 to 12% in the fund, then I think it will be good. Post that he can start withdrawing. I still maintain that he should look at a 6% withdrawal and not a 7% withdrawal as his monthly expenses. Now, what I assume from what he is talking about is that, and you can correct me if I'm wrong, I'm assuming that his withdrawal, what he is doing, out of that he will be meeting his expenses and he will be having a surplus which is going to be left out. So if he is looking at investing in the balance surplus, ideally he can look at into putting it into an equity fund, more as a large and mid cap, because basically he will be converting his income element into bringing in more capital, and maybe after 2-3 years he can top that money back again into his corpus which he is building up for multi-asset or a balance advantage fund as a category.
Kshitij, very quickly, your take on this question, and would you want to give any advice on the funds they've chosen?
So broadly, I agree with what Sir is saying, but I think multi-asset category will not be able to generate more than 7-8% return, and BAF I will take 9 to 10%. So when you don't require fund as a lump sum and you just need the money through SWP route, the right thing to do is that for the first year he can just keep 3 lakh rupees, which is like if he want to have 6% withdrawal or 7% withdrawal on 50 lakh rupees, he can have that money in his liquid or arbitrage fund, and balance he can participate in a balance advantage fund or balance or large cap index funds. That's what he can do. And next, from second year onward, he can have his SWP going rather than just starting from first year onwards. So 1 year gap more he can give from here onwards, as markets are at all-time high, and I'm sure that we are heading for some spectacular market rally next 10 years time, but it's never linear. So, and it's a very short time frame in which he is looking at starting his SWP. So the amount which he requires for next 1 to 2 years, he can just park that fund in a arbitrage fund. But rather than having a multi-asset fund, I will, in personal capacity, I would like to have more of a balance advantage fund, or let's say a large cap index fund to do my SWP. And balance also fund, if he has some funds remaining on his side, he should participate in a large capish oriented mutual fund. This is what I feel, because with a mix of balanced advantage fund, large cap fund, he can target a return of 10 to 11% on overall corpus, and he can have a withdrawal of 6% going easily from his portfolio for SWP.
Well, in any case, enjoy your retirement. Just about a year to go, so I'm sure you're looking forward to it. All right, next query from Vikas, who's age 49. Who says, I've been investing in 4 small cap funds for the past 5 years, and I've booked some profits in 21 and 23. I'm still sitting at a profit of approximately 100% in all these schemes. Good for you, Vikas. Should I book partial profits? If yes, where should I reinvest, or should I continue my SIPs? He goes on with details of his current SIPs for paucity of time, so I'm just putting them on the screen. Giselle, would you like to take this question?
So first of all, I feel that a mutual fund investment is not like a stock investment. So your mutual fund investment should be more goal oriented. And frankly, he by booking profits in 21 and 23, he missed the whole small cap rally of the 23-24 financial year in terms of and he landed up paying capital gains tax, and so. Ideally, any of your mutual fund investments, specifically when you're doing SIP, it should be more goal oriented. It should not be from a purpose of, trying to jump around from one scheme to the another scheme, because you need to understand that you are paying a transaction cost, right? And the transaction cost is more in terms of the taxation. So in my opinion, he should stay invested, and he needs to be mindful of the fact that he's done a SIP for 5 years. But logically, his investment time has only been 2.5 years, because his first installment is gone 5 years back, and one installment is gone even as late as just maybe a month back. So when you take the average of 60 months, his average investment has just been 2.5 years. So that is something which he needs to be mindful of. Ideally, the time horizon for a SIP we talk about in terms of 15 years. Markets will be going up and down. Trying to time the market is not a advisable strategy.
Right.
A mutual fund, leave it to the fund manager to do the booking of the profits. A mutual fund doesn't become expensive or cheap like a stock.
So net, you're saying continue your SIP.
Yes, absolutely, and hold on, not to exit.
Okay, don't exit. continue your sip. That's the advice coming in from Juzair. That's all the time we have, but you know where to get in touch with us. Those numbers on your screen for today. Kshitij and Juzair, thank you so much for joining us, and to all of our viewers as well. We'll be back tomorrow, same time, same place. Meanwhile, thank you for watching, but do stay tuned. A lot more coming up on NDTV Profit.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers, growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks.
Hello and welcome back to NDTV Profit. You're watching Large Trades, a show where we talk about all kinds of bulk and block deals, large trades and stocks buzzing on the back of higher volumes. I'm your host Mihika Barve and with me is Agam Vakil. But before we go on to the stocks that have been buzzing today, Agam, how do the markets look like right now?
It's been flat, Mihika. Largely, we aren't looking at too much traction. It's another quiet day of trade. What's a positive, of course, is that we have seen the benchmarks open in the red and eventually take off. At some point in time, we were nearly once again testing your life highs, and we're now looking at markets off days highs, but we're seeing gains all the same. And at the moment, keeping an eye on the benchmark with respect to how things are panning out. Of course, the Nifty is flattish at the moment, and the Bank Nifty as well. It's the same mostly. We haven't seen too much traction there. Now, let's talk about how things are panning out as far as your constituents go. And it's a fairly mixed day of trade when it comes to the Nifty 50. Of course, we do have TCS, Axis Bank, and along with HDFC Bank advancing to a certain extent. But on the other hand, we also have weakness in something like a Reliance Industries, L&T and Kotak Mahindra Bank weighing on the indices largely. To talk to you about how things are panning out as far as broader markets go, on the whole, it's certainly a day where broader markets have outperformed the benchmark. The Nifty Midcap index is up around 0.5%. The small cap index is also up and about by as much as 0.9%. So nearly 1% gains, in fact, there. If you consider some of your relatively smaller cap names, we do have a lot of traction in something like a KRBL Global. KRBL Global is, of course, up as much as 17% right now, and substantial intraday gains coming through in this one. Mazagon Dock, Cochin Shipyard, as well as Garden Reach Shipbuilders. It's been a tremendous day for all the three stocks. Cochin Shipyard is up 6.5%. It's the same for Garden Reach Shipbuilders as well. So a lot of these navy building ship manufacturers, they've been doing well in today's day of trade. Cera Sanitary Ware is up 9% as well. So on the whole, plenty of counters across segments doing well. What is, however, losing out in trade in the broader markets is Schneider Electric. That's looking at a profit taking down by as much as 4%, but it has been very, very strong off late. Then, of course, you have your real estate companies. So Macrotech Developers, Godrej Properties, as well as Oberoi Realty, all of them are losing out anywhere between 2.5% to 3.5% as far as today's day of trade is concerned. But otherwise, on the whole, it's been a fairly stable day as far as trade goes, and it's something that we're going to keep an eye on. Mika?
Yes. So let's move on to this large trades and stocks that have been buzzing on volume that we do have in focus today. We have something like Anupam Rasaya, Mazagon Dock, as we mentioned, with the shipbuilding stocks in focus today. Hindustan Zinc and Escorts Kubota and MOIL. But up first, we have Anupam Rasaya, which is up in trade today. And we have my colleague Varsha joining us for more details about the company.
Hi Mika, so as you rightly said, so Anupam Rasayan has seen an intraday high of over 6% in trade today. Volumes are buzzing over 9x of its 30-day average. Now this is on the back of deals signed by the company wherein they've signed a letter of intent with Japanese multinational company for almost 740 crore. Now we all know that Anupam Rasayan is a chemical company, so what they're going to do is they're going to supply 2 advanced intermediates using fluorination chemistry. Now these intermediates are molecules that are used in the process of making a medicine basically. Now the intermediate supply will commence from FY25 and this will be manufactured in their existing and soon to be commercialized fluorination plants. Now, this will be first company in India to manufacture these molecules. Now, if you see the stock performance in last 1 year, the company has not given much returns to its shareholders. Now, we all know what is happening with the chemical industry, specifically agrochemical sector not doing well, and the chemical companies' products are used in agrochemical sector. Then you have China dumping. All of this has affected chemical industry as a whole, and Anupam Rasayan is no exception to that. But company is expecting good growth prospects in FY25, wherein contracts worth rupees 8,000 are signed in last 3 years, which provide strong visibility of revenue for coming years. Then they've commercialized 6 new molecules, out of which 4 are from fluorination. Now, fluorine is a hot topic in chemical sector, wherein many companies are using fluorine as a chemistry in their products, which are being used in pharma and agrochemicals. Then till 9 month FY24, they've launched 11 new molecules, all of which will ramp up in FY25 and 26. So all in all, if you see, FY25 and FY26 will be growth drivers for the company on the back of pharma and polymer products. So that's all we have for Anupam Rasayan.
Varsha, thank you so much for getting us those updates. You know, when it comes to Anupam Rasayan, the way the stock moves, it's always usually tends to see sharper movements in general. Of course, today it is advancing, and it's just one of those counters which we do need to keep an eye on. The thing with Anupam Rasayan is that it did hit an intraday high of around 945 rupees per share, and since then it has come up on an intraday basis. It's currently at around 904, so it's lost out a good 40 odd points from the day's high. That said, the volumes are something that you must register. But let's move on and talk about Mazagon Dock. That, along with Garden Reach Shipbuilders, as well as Cochin Shipyard. Well, it's up and about. And of course, much has been made of the huge orders coming through for the entire sector, that is the shipbuilding sector, specifically from the Navy. Let's get in Mahima to tell us a little more about this one. Mahima.
Right, Agam. So as you rightly mentioned, the stock is buzzing in trade today. Well, it touched an intraday high of around 11.5%. The volumes are 8 times its 30-day average, and the stock is around 260 points away from its life high. And if you see, the support levels are around 1832 apiece, which is a 2-week low, and this resistance levels are around 2477, which is a 3-month high. Now, if you see, all kind of Navy shipbuilding stocks and defense stocks are buzzing in trade today. There's Garden Reach, which did touch an intraday high of 9.5%, Cochin Shipyard, which touched an intraday high of 8%, Paras Defense, which touched an intraday high of 7.5%. But more on Mazagon Dock, well, they've recently been allotted, they've accepted an offer for a land and building allotment. The allotment is a long-term lease for 29 years, and the total allotment cost of the particular land and building was 354 crores. Now, the lease, they've also recently received a lease of 14.55 acres from the Mumbai Airport Authority, and they've paid around 354 crores for this. Now, the financial performance, if we see for the 9 months that have gone by for Mazagon, well, they've recorded the highest ever profit in Q3. And the cash balance is slightly in excess of 3,000 crores. Now, in terms of how they're delivering their projects, well, they're expecting a lot of project deliveries between 24 to 25. This includes their first frigate delivery. It includes the P-15B destroyer. It also includes the P-75 Calvary submarine, which is to be delivered in 2024. In terms of their order book, as of Q3 ending, their order book was as strong as 7,000 crores. And it also plans to develop the Navia yard, including the floating dry dock project, with an investment of around 500 crores, and this will be over 2.5 years, and the expenditure approximately of 300 to 350 crores will be for Navia yard. Now, so Bloomberg suggests that the stock has been buzzing in trade today because Motilal Oswal has issued buy call for Mazagon Dock Shipyard with a target price of 2250. So that's all we have for Mazagon as of today.
Thank you, Mahima, for those details. Up next, we had a bunch of metal companies that did, send in their business updates overnight. And one of the stocks that has been buzzing on back of their update is Hindustan Zinc. Now, this is a leading mining and smelting zinc operator. Now, volumes were over 7 times its 30-day average, with total traded volumes of 43.6 lakh equity shares. And the sellers did outnumber the buyers. Now, the stock has reached an intraday high of 4.6%. It's just 2 rupees below its high for the day. The stock has also been gaining in the last 5 days, up 11%. Metal stocks were on the rise based on China's latest PMI data as well. But the latest news was the quarterly and annual production update. Now, they recorded a highest ever quarterly refined metal production, 6% sequential gain on account of better plant availability. Their mined metal production was also up 11% on a quarter-on-quarter basis. This was driven by a mix of improved mined metal grades as well as higher ore production across their mines. For FY24, if you look at it as a whole, they had their best ever mined metal production at 1,079 kilotons, up 2% year on year. This was mainly driven by the improved mined metal grades, and their refined metal division also achieved its highest annual production. Now, when you look at the management commentary and the outlook, the management indicates that the outlook is slightly contradictory in terms of the output, but it reflects a manufacturing expansion. It also anticipates rise in zinc usage across the countries of India, Mexico, China, and Vietnam. The company is also going to continue to reduce their debt, with their net debt around 360 crores as of end of Q3. And lastly is their Fuma project, which is expected to contribute additional 30 tons of silver production. And Hindustan Zinc is a key silver producer, and it's also expected to increase the value-added production from 20% currently to 25%. Well, that's what we had on Hindustan Zinc. Up next, we have a auto counter, Escorts Kubota, which has been buzzing in trade, and my colleague Puneet joins us for more details about the company. Puneet?
Yeah, thanks for that, Mihika. And we're talking about escorts, and the volumes are up roughly 5 times its 30-day average, while the stock has hit an intraday of roughly 4%. Now, this is on back of the March 2024 numbers which the company reported. Now, it was as expected a 16% fall in sales for the month of March 2024. Sales came in at 8,500 roughly versus 10,000 sold in the same time last year. For FY24, if we see, there has been a degrowth of roughly 7.2% in sales at 95,000 versus upwards of 1 lakh units sold in the previous year. Now, do note that the company is also present in the construction equipment space. While this is a very small 6% of all units sold, this saw a growth of roughly 42% over the previous year. Now, as per Anand Rathi, the CV and the tractor space would be muted in the near term on the back of elections as well as muted demand in the industries such as oil and gas. But they see that due to a very high base compared to last year, they see that the company also has given some commentary, and they expect that the demand will stabilize post these elections in the month of April and May, and they expect some better results for, in terms of growth starting from Q2. Now, they see that one of the key early signs would be above average monsoons would be one of the key drivers for these tractor sales. Now, Anand Rathi feels that this is one of the top stocks to come back for the next financial year, and has a target price of roughly 3,500 rupees, which is way above the current price of roughly 3,000. And while this the sales have been muted, the stock has run up 60% in the past 1 year. So a lot of positives to look for escorts going forward in the next year, and that's all we have on escorts right now. Back to you.
Right. Well, Puneet, thank you so much for joining us and taking us through that update on escorts Kubota. But we move on to another company which has in fact been buzzing since morning, and that's MOIL. Well, we do have certain updates on the company as well, and the intraday volumes on MOIL are the highest in, well, a little over a month. Let's get in Kanika to understand what's happening here. Kanika.
Right. So MOIL has been buzzing in trade today, and this is mainly on the back of the company achieving best ever production of any financial year since its inception, and it showed a 35% year-on-year increase. Now, this is 29% higher than the previous best ever production, which was in FY 2008. On the sales front as well, the company has showed a best ever performance, showing a 30% year-on-year growth. And the company has also achieved best ever production of electrolytic manganese dioxide, which is higher by 28% year-on-year. Now here, EMD is a 100% import substitution product, which is mostly used for manufacturing batteries and in pharmaceuticals. Now on Monday, MOIL implemented price hike across product categories, which was to be effective from April 1. Now these price hikes were mainly in ferro grade manganese ores, which was 3 to 6% increase, then in fines and chemical grades by 3% increase, and electrolytic manganese dioxide by rupees 2,000 per metric ton for April. Now these price hikes were mainly done with the intention to boost revenue for the company.
Thank you so much, Kanika, for those details. But it's time to slip into a short break, but do stay tuned. We have lots more lined up on the other side.
Hi, I'm Tanuj Bhojwani, and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers, growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right.
Welcome back to Large Trades. Well, Toyota India unveiled the TATA compact SUV in Bombay today. The company plans to step up its production by 1 lakh units in the coming years. My colleague Tushar Singh caught up with the management at the launch event. Take a look.
I must compliment the government for having done so much in this space. With so little time, we've reached so far ahead in electrification and introduction of battery electric vehicles. And I think this policy is just building on that momentum. It will allow more product options to be available, more players to come in, more investments to come in. So I think it's a good move and a welcome move at that. As far as we are concerned, it's our plans not be able to share right now how we go forward.
Okay, because you have a well-established EV lineup globally. I mean, you're one of the pioneers, to speak in that sense. So, I mean, some kind of direction on those lines will be welcome, even through imports if you want to bring those cars in India.
Well, it's something, we haven't really decided right now. It will not be fair for me to comment on that at this juncture.
Secondly, Mr. Gadkari recently talked about revision in hybrid taxation of hybrid cars going forward, because we are seeing a significant adoption of the hybrid technology. So what is your take on it?
First of all, of course, I'd not like to comment on, policy statements by very senior people in the government, but I'll just like to touch upon the fact that, the issue really is that at the current moment, government does support hybrids. The rates in terms of GST and cess are indeed lower than the ICE, the petrol variant, but it's only 1 to 2%. So what happens is that because the manufacturing cost of a hybrid is higher, inadvertently the consumer gets taxed more in rupee terms. That's the real issue. So as far as we are concerned, we feel that going ahead, all technologies are going to be really required to bring down our fossil fuel consumption and carbon emissions, and therefore all technologies that are green, cleaner, and meeting our national objectives should be supported, and they should definitely get some preference as far as the traditional petrol and diesel vehicles are concerned.
And we now move on to an NDTV Profit exclusive. My colleague Pragati, who's been tackling the Vistara crisis, joins us live. Pragati, what are you picking up from your sources?
Right. So we just got to know that the meeting of Vistara CEO with the pilots has concluded. The meeting was scheduled for around 1 p.m. and it roughly lasted around 45 minutes to an hour. We don't know the exact timeline, but that's it. And nothing major has come out of the meeting, no resolution, but we know that the management addressed several concerns. In fact, the management clearly stated in its address to the pilots that they understand that what the problems are, that there were problems related to aircraft availability concerns, there were network planning issues, and that they understand that pilots were not to be blamed for this. That's what Vistara's management has reportedly said to the pilots, because sources told us that. Sources also said that towards the end of the management's address, Q&A was also conducted, and in that Q&A, some junior pilots and senior pilots raised their concerns. Some pilots also spoke about the contract, and while the management did not respond to their queries at that point of time, they did say that they will definitely look into the matter, and they mentioned that they would address all the concerns very soon. So the meeting did not last for as long as everyone anticipated, and people were anyway anticipating some sort of a solution, but nothing like that has happened. The management has presented their side to it. The pilots have also raised their concerns, and as of now, the management has only assured that yes, they will look into the matter, and they will come back with some possible outcome of all these things. That's what we are gathering as of now. We'll come back to you as we have more updates.
Right. Thank you so much, Pragati, for getting us those updates on Vistara. Again, perhaps an important day to keep an eye on with respect to that particular meeting coming through. Well, but moving on, speaking to NDTV Profit, Prestige Group's top boss, Irfan Razak, has confirmed that the company is looking at the hospitality business listing on the bourses by the end of this calendar year. Listen in.
What is giving us courage, the revenues will be quite phenomenal. And whatever hospitality assets the company owns now are doing extremely well. So we are looking at some point of time even doing a separate IPO for the hospitality assets itself. We've got the consent of the board for this. The team is working on it. So that will help us build more hospitality assets without getting too much into more debt, you see, because we have to have this balancing act of how much of debt you can get in and how much of equity is required. Even now, this current deal, it's a question of how to balance yourself, how much of debt can you show in your books and how much of equity you can have. Of course, it comes with a trade-off. The moment you give more equity, you are sharing a certain amount of the pie. But I'd rather you share that pie than have that problem of debt on your head. So, I mean, we'll have to keep doing it right. Of course, it doesn't mean to say if it's equity, you become frivolous. You have to make sure that you give the returns to your stakeholders.
Absolutely. You know, an important line over there, Mr. Razak, in that response was that you are looking at hiving off your hospitality business and maybe bringing in another IPO. I think that's very, very interesting. Can you give us any more details? What is the size right now of this hospitality piece of the pie, and by when? You're saying that there is a board approval, if I heard correctly. So by when do you hope to implement this and bring this as an IPO?
It's work in progress. It takes about at least 6 to 8 months. And I believe that in this calendar year, we should be able to pull this off.
And as part of NDTV's special series all about AI, we're covering ventures and startups doing definitive work in the realm of artificial intelligence this week. We're covering NeuroPixel, an emerging Bengaluru-based startup. Here's a special report.
As the Indian startup ecosystem embraces the power of artificial intelligence, NDTV Profit got down on the ground in a quest to find ventures that are making a difference. Meet NeuroPixel.ai, a young generative AI startup based out of India's Silicon Valley, Bengaluru, focused purely on fashion e-commerce. We traveled to their headquarters and spoke to founder and CEO Arvind Nair to understand more about the business.
AI as a technology is going to revolutionize the way that we do a lot of things, including one of the most mundane, manually intensive tasks that happens on a daily basis with fashion brands, and that is cataloging all their clothes. With AI, we should be able to automate a large part of this workflow and also simultaneously give rise to a higher diversity of models, better quality images, etc. that boost the customer experience.
Despite a product that promises considerable reduction in time and costs for fashion retailers, NeuroPixel did face an uphill task in convincing their first few clients on why AI was the answer to their catalog woes.
So we were actually doing generative AI before this generative AI wave of the last year. But however, given the gestation period that is typical with these deep tech businesses, we've only started deploying our solution about 3-4 months ago. And we've been growing at double-digit percentages month over month. The first few clients were really difficult, but now that we've got a few wonderful brands on board, it's becoming a little bit easier to sell both domestically and internationally. So we're working in Dubai, in Singapore, and predominantly in India, but we are looking to increase our focus on the US and EU very soon.
Unlike India's first wave of startups that took several years to find product market fit and settled on a much narrow, targeted target market, AI startups in the application layer emerging from India, such as NeuroPixel, are building from India but for the world.
Well, that's the AI bit that we're covering. But as far as markets are concerned, at the moment, we are looking at the Nifty, trending just shy of the 22,500 mark. But it is the Bank Nifty which will be in focus right now, considering we are keeping an eye on the Bank Nifty weekly options expiry, and it does seem like 47,600 is where the market, this particular index is. It's a wait and watch whether or not we in fact do see the close around here. But, we certainly do know that 47,500 is an important level to keep an eye on, and the next hour of trade will perhaps determine whether or not we break below that or we see this particular expiry move above that. So wait and watch on that one. But on that note, it's a wrap on this edition of Large Trades, but lots more lined up on the other side. Stay tuned to NDTV Profit.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
India market close, and what a day it has been. I would say a day of recovery on most counts. Let's quickly take a look at where the Nifty and the Sensex are. Now, when you look at the indices, you're just probably seeing, a very range-bound, flat kind of trade, but the real story is in the broader markets. Let me just pull out the advanced decline. to show you what the entire day has looked like and where all the action is. It is definitely the day of the broader markets. It's a day of IT companies. Now, right at the start of trade, you saw very narrow range bound trade. You saw the advances improve dramatically, and they have sort of held on through the day. So you have recovery coming in, you have buying coming in, short covering coming in, call it what you may. Let's pull up the heat map and see what's been happening, and you'll see very clearly why IT is the sector of the day. So today we don't have a stock of the day, but we definitely have a sector of the day, and TCS, I would say, is the big mover. 2.5% move on TCS today. Tech Mahindra are doing fabulously as well. Divi's among the other gainers of the day. Bharti, Shriram Finance, all of them up there. Even an HCL Tech you see in the first line. Infi not doing too badly. Wipro about 0.5% up. So IT has been the big story. On the losing end, Bajaj Auto has continued to show softness right from the get-go. This was the case on opening trade as well. Perhaps you're seeing some profit booking coming there. Nestle down about 2.5%. There is a note which has marked it as underperform. That could be a contributing factor, but definitely some weakness coming in all of your consumables FMCG space, whether it's a Nestle, whether it is a Britannia as well, seeing that kind of a pain. Let's quickly pull up what's happening with Nifty contributors and you know what is really keeping it afloat in a sense. And yeah, there you have it, pretty much balancing out between an RIL and a TCS, two heavyweights kind of balancing it out, and which is why you see an even keel there on the Nifty as well. Kotak Mahindra Bank has seen quite a bit of a hit. Let's pull up the sectoral indices and give you a sense of what really has been buzzing in trade today. And there you have it, the PSU banks up. Realty has had a pretty bad day. Realty down about 2.5%, maybe a few exceptions here and there. But IT stocks is where the entire story lies. I shouldn't, we'll do a detailed piece on the IT sector and why that is the sector of the day. Yes. But some real sizzlers in the broader markets as well.
Well, yes, absolutely. Some on the basis of news, not too many on the basis of news. In fact, they were buzzing at the start of the day, but some of them have cooled off since that point. Let me start off with a few names. Let's pull up some on the back of numbers. You have the likes of an MOIL, Nalco, Hindustan Zinc. Some of these are doing well. MOIL and Nalco came out with numbers with their update, and the stocks are up and away on the back of that. Let's also pull up something like a GTND. That one has announced a business split, and the energy business spin-off is effective today. Stock is up 5% as we speak. Something like a Shelly Engineering in the broader markets, 3% up. In fact, it was up 7+% earlier in the day. There's an initiating coverage note from Systematic. 720 is the target price on this one. Something like an Ashiana Housing also doing fairly well. 440 crore worth of units sold off entirely on their new project. They've virtually done quite well on that one, almost 3% higher on that one. Again, on the back of numbers, something like a Satin Credit Care doing very well in trade today. Even an Ireda, second consecutive day where it's up nearly 5+%. So both of those also doing very, very well. Then some defense stocks which are doing well as well. Something like a Datamatics, IdeaForge, look at Mazgon Docks, look at Cochin Shipyard, all of those doing fairly well. Even within the slightly smaller market cap kind of names, you have Datamatics, IdeaForge, NIB, all of which are doing very, very well. 3% plus on all those three as well. Lastly, some sugar stocks also doing fairly well. Bajaj Hindustan, Dalmia Bharat, Sri Renuka, all of which are up again 3% plus. So there are pockets where and certain sectors which are buzzing, but outside of that, certain specific names as well that we've tried to cover. We'll obviously chat about that a little bit more on this show itself.
Defense is definitely one play which is catching my eye. Now, a lot of stories doing the rounds that you could have a big announcement at the cabinet briefing. It takes place every Wednesday. We'll have to wait and see how that is playing out, but even a Garden Reach, I would add to Harsh's list. Garden Reach has just been fantastic, about 8% today. Some others that have caught my eye, Manali Petro is about 13.5% up. Some sugar stocks are doing very, very well. Dwarakesh, Andhra Sugar. You look at that entire list, and sugar stocks are another set which are having a pretty good day. Yeah. There you have it. Even Paras Defense is buzzing in trade today. We're going to go across to Osho Krishnan from Angel One, who's joining us today. So it's Sudeep Bandopadhyay of IndiTrade Capital. Welcome to both of you. Thank you so much for speaking with us. But let me begin with Osho. Osho, hi. How are you doing? Great to have you on NDTV Profit. Let's first get a sense of how you are seeing the technical charts as far as the Nifty and the Bank Nifty is concerned. Bank Nifty has been seesawing in a small range all through the day. So you're seeing that pressure coming in?
Very good afternoon. Thank you for having me at your show. Well, coming to the query on Nifty, the Nifty has seen a kind of a resilience near the zone of 22,500. But at the same time, dips are auguring very well for the bulls. So that portrays that market is having a very strong bullish undertone that can be seen, because as we have seen a decent gap down opening, which was augured well for the bulls, and we have seen a very strong up move. But on the higher end, 22,500 still has the strong put writing positions around 22,500. So I'm expecting until we surpass the zone of 22,500 on Nifty, there can be some kind of consolidation in the benchmark index. On the lower end, 22,300 to 350 should be acting as the support zone, and on the higher end, 22,500 should be acting as the target or resistance in the short term period. And the time we surpass the zone of 22,500, then only we can see another 200 to 300 point of rally coming to the benchmark index. Now coming to Bank Nifty comparatively is looking very positive as compared to the benchmark, because overall the scenario in Bank Nifty is very positive, especially if I'll be talking about PSU banks. Then PSU banks are looking very strong. Major of the PSU banks have seen a strong breakout, or they are hovering around the all-time high level. So I'm expecting that Bank Nifty will be having a bullish undertone from here onwards and can even outperform the benchmark index. On level specific front, 47,300 to 200 is a very strong support zone for Bank Nifty. While on the higher end, 47,800 is the first resistance, followed by 48,000 psychological mark. But overall, this count is looking very positive, and I am expecting within 1 to 2 trading sessions, the level of 48,000 can be breached in Bank Nifty, and we can witness a very strong upsurge in the overall market.
So Bank Nifty is looking positive. That's very clear. Great cue coming in from Osho Krishan. Sudeep Bandopadhyay also with us this afternoon. Sudeep, very good afternoon to you. You know, all the action today in the broader markets and in your defense shipping kind of plays, a Cochin Shipping. I was just looking at what's happening with Cochin Shipping. We talked about a Garden Reach, a Paras Defense, etc. What would be your take on this? Are you going to see more and more of this kind of a buzz ahead of elections? Last few decisions actually that the government can make. I mean, the model code of conduct is on, so no new big schemes. But the current government can announce, details of what has already been in the public domain. So, what do you think is contributing to the buzz today?
Well, I think first of all, I think missed out Mazgaon Dock.
My bad. No, absolutely, absolutely. Yeah, Mazgaon Dock is another sizzler today.
Absolutely. I think these are all sizzlers today. I find it little, confusing and little hard to understand and process this. I know these are good companies and they are getting orders left, right, and center, and rightly so. I mean, we are doing defense make in India, and I think that's a very, very right step. The government is spending quite a lot of money, and more money will be spent for indigenizing the defense, particularly this, shipbuilding, submarines, and the whole lot of stuff related to that. So obviously there is a lot of traction as far as these companies are concerned, and they're getting orders continuously. So all that is good. The only challenge is the valuation at which these stocks are at present, and and even from those levels, if they are moving up, I think it becomes very, very difficult for me to digest and buy or recommend a buy. The reality is that these are long-term contracts. This is not a contract where let's say Mazgaon Dock or a Cochin shipyard will start making money immediately. these things take 4, 5, 6 years to execute. So a single contract will take 5, 6 years probably to execute and get translated into P&L. Now this probably needs to be understood carefully before we start bidding up the prices on a continuous basis. That's my simple take here, and I'll be cautious. Very clearly, I'll be cautious. Some of these stocks have run up about 10% over the last few days also, and at such elevated levels, entering or adding, or I'm not very sure whether it's the right thing to do.
What about exiting? Entering, adding, not the right thing to do. But what about booking some profits here? Would you go as far as to say that, Sudeep?
Well, I'll be looking like a fool, because if every day is going up by 10% and I'm advising somebody to sell. So what I will do is, for somebody having the stock, is keep a very careful watch. Please ride as long as it's going up. But, if you can keep a stop loss and keep moving the stop loss every day up, because that's what is happening. So keep moving the stop loss up. But I think it is a matter of concern the way the prices have gone up, and you need to be careful.
I like that idea. Dil sambhal ke aap stop loss badhate jaiye. Osho, you have to come in on this, since we've talked about some of these counters. How do they look on the charts? What would you do with them?
See, majorly all the defense counter, as you both have mentioned, that those are at a very elevated levels, but technically those are looking very positive on the technical perspective. And as he has said that we need to ride the momentum. So currently when the market is looking very bullish and each stocks are gaining approximately 2-3% on average per day, so one should better ride the momentum for these counters with trailing their stop losses to the high levels, specifically for the defense counters like HAL, BEL. All these counters are looking very positive. So even this is my advice also, because from technical perspective, the counters have reached the overbought territory. So one should not be very much aggressive in these counters, but obviously the momentum is still intact. So one should definitely ride on the higher end, but be cautious, maintain caution in these counters, and keep trailing the stop losses.
Yeah. We're talking about defense, but we would be completely missing the bus if we didn't talk about the sector of the day. I would say defying all odds, maybe some logic as well. The IT stocks have just been, on a run. They're coming off their highs today, down less than about 1%, but I want to pull up the internals of that index and show you what's running within the IT companies. And yeah, there you have it. L&T Tech is the one leading the charge, but even a TCS doing absolutely well. So there is a CLSA note that could have contributed to some of this enthusiasm. Harsh has all of those details. Yes, Harsh?
Well, absolutely, Tamanna. They're talking about the Q4 numbers, what we can expect, and they have a couple of upgrades. So let me first talk about what the expectations are from that CLSA note. What they seem to be suggesting with regard to top line is TCS will lead the pack, at least the larger pack, in the top line growth. 1.8% sequential is what they're expecting. This is constant currency, mind you. BSNL contract is going to drive that number. Outside of TCS, let's pull up the others as well. Infi, Wipro, LTI, Mindtree, Tech Mahindra. Absolutely flat, right? 0.3 is what they are projecting on Infosys, sequential constant currency, to a decline of 1.5 odd, which they are projecting on Wipro. With regard to margins though, flat EBIT margins expected across the board, except HCL Tech and Infi, where margins are expected to shrink a bit, and where Tech Mahindra is concerned, if we can roll over, Tech Mahindra is concerned, margins are expected to expand sequentially, but that's also because of certain one-offs which have been parked in the last couple of quarters. So maybe that will aid margins for Tech Mahindra, maybe not the right base there. In terms of commentary, Q4 has been slow in terms of deals. Deals have been far and few, except one big win that TCS has had. No major deals. Even tech budgets currently are constrained, limited. That's the sense. Mind you, Accenture commentary also came into focus earlier this quarter, where they spoke about weak demand, uncertain macro, conservative guidance across the board. CLSA also continues to give this conservative guidance. There's an unchanged outlook as well. There's no real major change. So let's talk about the FY25 estimates that CLSA is expecting some of these companies to report, 4 to 6% in constant currency there, 5 to 7 for HCL Tech, and Wipro absolutely flat for Q1 FY25, of course. On the margin front, absolutely flat, but the good part is no decline from here, so that's possibly a positive. Let me flip over and try and look at the ratings and targets. TCS, HCL Tech and Tech Mahindra have been upgraded, so that's a positive, but that is also because, and CLSA cautions here, that is also because of the fact that they've rolled forward their earnings estimates, and therefore there's a slight bit of change in the target prices, which is what has led to that change in rating. So that's one. Second, they continue to flag caution. So despite this positive rating change, they continue to flag caution on IT.
Anything in this report, Harsh, which explains what's happening with IT stocks today? Because it seems quite circumspect, to be honest.
Well, Tamanna, it's the same story as Q3. There's no real big change the way I see it. You know, when I'm looking at some of those IT stocks, if we can pull those up, they're doing fairly well in trade today, but except for a TCS, which is expected to deliver a decentish kind of a revenue number sequential for Q4. Outside of that, you're seeing absolutely flat. But the commentary as well as going forward, maybe, you know, they start rolling forward towards Q2 and Q3 in terms of their guidance, which could start to see that uptick. So what I think CLSA continues to believe is as you roll forward, there is a possible upside from here because the worst is already priced in.
You know, interesting. I want your take, Sudeep and Osho, but let me start with Sudeep on what we're seeing in tech stocks and why you're seeing this kind of run up. I mean, all the basic reasons why you would expect that just aren't there right now. The whole interest rate cut scenario by the Fed in June is looking a little more iffy, I would say, than even last week. No great deals in the pipeline or no big change which is visible. What's your take, Sudeep, on what's happening?
Well, I think I, to an extent, agree with the CLSA report. I think, you know, we have seen the worst. This is reasonably certain that the worst probably is getting over or is already over. And from Q1 onwards, which is where we are now of FY25 fiscal, we will start probably seeing a slow but definite, you know, recovery. That's our reading as far as technology sector is concerned. In general, there will be company-specific variation, and there will be company-specific, you know, upgrades, downgrades. But the fact is, overall industry, I think we have seen the worst. That's point number one. Point number two is, while we are, you know, a little bit skeptical about US Fed rate cuts, when they will start and what will happen and things like that, and definitely from a, you know, 6 cuts and all that, we are now talking about 3 cuts, and we are, I think, generally talking about 75 basis point cut throughout the current calendar year as far as US is concerned. But the fact remains that, you know, the Fed Chair Powell continues to remain positive. And I think last week, his statements, which he spoke outside at an event, I think was not very discouraging. He didn't give any signal that the rate cuts won't be there or anything like that. So I will not read too negatively into the future prospects. And I will continue to maintain my view that we have probably seen the worst as far as technology is concerned.
Osho, your take? Anything in the tech space that you would pick up or be constructive on?
Looking at the overall momentum in the tech companies for the day, I am expecting that this should continue for the coming 1 to 2 trading sessions. Overall, if I have to say, the major heavyweights or even the mid-cap IT companies, some of the companies were still into a consolidation phase towards sidelines or maybe into a corrective phase. So one of the counter which is looking very lucrative to me on the technical front is Coforge. Looking at the technical setup of Coforge, it was into a corrective phase from the zone of 6,800 towards 50 odd level. So which was approximately the 200-day SMA, which historically has seen a very strong support zone or demand zone for this counter. Even on the technical development, it has already been into the oversold territory. So with today's positive development in the technical, in the tech companies, I am expecting that from here onwards, there can be a significant up move that can be seen in Coforge. So my technical recommendation on Coforge is to accumulate at current levels, hovering around the zone of 56, 80 odd levels, keeping a strict stop loss of 5500, which is the 200-day SMA, for immediate upside target of 6,000. So this is one of the recommendations from the mid-cap IT companies. Major of the companies from IT space is looking positive, but this is having a very strong risk-reward ratio.
Okay, time for a quick breather. We'll of course continue the conversation on the other side with our guests, as well as talk about some other spaces and pockets where it's worth speaking about. More on the other side. Stay tuned.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers, growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies.
Well, thanks for staying tuned to India Market Close here on NDTV Profit. Host of stocks buzzing in trade on the back of volumes. Varsha is here with the list of those stocks.
Hi Harsh, so few of the stocks that are buzzing will be highlighted by me. So starting with Indian Metals and Ferro, which is buzzing on the back of volumes. Now if you see few metal stocks are buzzing today in last few days. Now this is on the back of business updates by the companies, where majority of metal companies are coming up with strong production numbers. Then we have Anupam Rasayan, wherein the stock is buzzing on the back of company has signed deal, that is LOI, letter of intent, with Japanese multinational company, for which the aggregate value of that total contract is almost 743 crore. Then we have Mazagon, wherein company has seen an intraday high of 11.5%. Volumes are over 8x 30-day average. All defense and shipbuilder stocks are buzzing in trade today. So if you see Garden Reach Shipbuilders seen an intraday high of 9%, followed by Cochin Shipyard and Paras Defense, which has seen intraday high of over 7%. Then lastly, we do have Hindustan Zinc, wherein the stock is buzzing on the back of where they have record quarterly refined metal production, which is up 6% quarter on quarter, and mined metal production is up 11% quarter on quarter, and also the refined metal have achieved its highest annual production. So these are few of the stocks which are basically buzzing on news flow.
Okay, thank you for that, Varsha. I want to, out of that, take a cue with regard to metal stocks especially, because that's another segment outside of media maybe which has been on a tear, at least in the first few days of this financial year. And Sudeep, I want to take it to you. A bit of the Chinese angle coming through with regard to where metals is concerned. You expect this to last and this to be slightly more structural of sorts when it comes to the metals pack? Do you expect valuations looking decent on the back of this possible Chinese push?
To an extent, you're right. I think this China factor is going to definitely drive globally the metal prices up, and definitely that will have its impact on India and Indian companies related to this as well. Apart from the China factor, I would like to also point out one more issue which will work in favor of the metal is that easing of US interest rates. An expectation is there very much for that happening maybe in the second half of current calendar year. And if and when that happens, that will add a further impetus to this metal price rally. So yes, metal prices are likely to remain at an elevated level. As far as India is concerned and Indian companies are concerned, also there is one more factor. There is significant amount of capital expenditure which is happening. And at this stage, predominantly the government is spending money on infrastructure and construction and multiple other related areas. And that also creates incremental demand for multiple metals. So obviously, at some stage, we expect private capex also to pick up. That again will lead to further increase in demand for metals. So under these circumstances, we expect that the current fiscal FY25, we will see a decent demand and price stability for metals. In fact, the price, there will be an upward bias to the metal prices during the current fiscal. That's what is our belief.
Sure. And Sudeep, if I can just quickly chip one more in, how best should one play it? What's the best play even in terms of value and in terms of segment, ferrous, non-ferrous and the like?
Well, I do like the steel companies because I think that's a basic ingredient for all the construction infrastructure work which is going all around us, whether it's the roads, ports, and other construction or the housing sector. The steel is in big demand. And, if Chinese production also goes up and Chinese demand also goes up, so the dumping issue will be not there. And Indian steel manufacturers, to a great extent, have become resilient to those factors. Some of these steel companies do have captive ore. Tata Steel, for example, JSW to an extent for that in that context. I think these are the companies one should look at, which will definitely benefit from the upswing in capital expenditure and demand for steel.
Also, your views with regard to technicals on metals?
See, metals have definitely seen a very strong resurgence in the recent period. And some of the counters like Jindal SAW, Jindal Steel and Power are looking very positive. So I'm expecting there is ample amount of room still left in metal space, and one should definitely look on a bullish front for these counters because major of the counters has been into a consolidation for a longer period, and after a long duration they have came out from the consolidation zone. So I'm expecting that from here onwards in the coming, let's say 2 to 3 weeks from that means a short-term perspective, definitely there can be a strong movement that can be seen in the overall metal space.
Also, if you can quickly highlight that before we move on.
Sorry?
Names and levels, if at all,
okay.
on your radar.
Yes, the first counter which is looking very positive is Jindal SAW. Jindal SAW is hovering near the zone of 490, 500 odd levels. So this is a very strong consolidation zone in the historical period for this counter. So one should definitely try to gauge momentum at the current levels. On the higher end, I'm expecting a target, not very aggressive on the targets, but I'm expecting 535 to 540 to be seen as the immediate target in this counter. It has seen a very strong movement from the lower zone of 440, 460 odd levels. So I'm expecting that from here onwards, in the coming period, there can be a strong movement that can be seen. Second one is JSW Steel. JSW Steel have seen a consolidation breakout this week only at the zone of 840. So I'm expecting that from here onwards, it has the potential to test 900 odd levels in the coming period. But one should not be very much aggressive in the counter as of now. If there will be any kind of correction in the near period towards the zone of 845, 850, that will be the apt level to accumulate this counter for a higher target of 890 to 900.
All right. The other sector in focus is real estate. Realty is having a bad day. Probably some profits being taken off the table on a sector that has really run up. But we had an interesting conversation today with Prestige Group's top boss, Irfan Razak. Remember, Prestige was in the news because of a 2,000 crore rupee deal that they've inked with ADIA as well as the Kotak AIF. They're going to be developing real estate projects, residential projects with a GDV, a gross development value of 18,000 crore rupees. So we had the opportunity to speak to Irfan Razak about this plan, but during that conversation, he gave us a very interesting bit of news, and this is completely an exclusive, that Prestige is planning to demerge its hospitality unit, its hospitality business, and list it. It could be within this calendar year. Listen in to a slice of that conversation.
What is giving us courage, the revenues will be quite phenomenal, and whatever hospitality assets the company owns now are doing extremely well. So we are looking at some point of time even doing a separate IPO for the hospitality assets itself. We've got the consent of the board for this. The team is working on it. So that will help us build more hospitality assets without getting too much into more debt, you see, because we have to have this balancing act of how much of debt you can get in and how much of equity is required. Even now, this current deal, it's a question of how to balance yourself, how much of debt can you show in your books and how much of equity you can have. Of course, it comes with a trade-off. The moment you give more equity, you are sharing a certain amount of the pie. But I'd rather you share that pie than have that problem of debt on your head. So, I mean, we'll have to keep doing it right. Of course, it doesn't mean to say if it's equity, you become frivolous. You have to make sure that you give the returns to your stakeholders.
Absolutely. You know, an important line over there, Mr. Razak, in that response was that you are looking at hiving off your hospitality business and maybe bringing in another IPO. I think that's very, very interesting. Can you give us any more details? What is the size right now of this hospitality piece of the pie, and by when? You're saying that there is a board approval, if I heard correctly. So by when do you hope to implement this and bring this as an IPO?
It's work in progress. It takes about at least 6 to 8 months. And I believe that in this calendar year, we should be able to pull this off.
All right, so that was an interesting take from Irfan Razak. Let's just quickly pull up the weekly chart for Prestige and see what's happening there. Of course, some profit booking here. But it's over the last 1 month gone up 11.5%. Quite a bit of news flow. We'll take a very short break on this side, but you know, we're going to come back with what's happening in the F&O side of things after this break. Stay tuned.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers, growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Welcome back. Straight to the F&O queues that are coming out very close to close now today. But first off, let me take it across to Agam. Agam, you know, benchmarks not doing much, but plenty of action in broader markets, right?
Certainly. Well, and of course, even in terms of the benchmark, the Bank Nifty continues to be in focus considering the weekly options expiry. But I'm going to start off with the Nifty as usual. And when it comes to the Nifty, well, at the moment, we are looking at, once again, marginal cues. It seems like we're going to close at yet another flat level. And well, there's been no traction as far as OI is concerned. The Bank Nifty, again, it does seem like the Bank Nifty has had a trending day this time, because we started off the day with levels of around 47,300, and eventually we've seen the Bank Nifty rise by around 300 points, and eventually, well, it does seem like we're going to close in the green at the moment, but we are seeing about a 6.5% added in open interest there as well. Moving on to your overall options market, where today is a day where we saw a little more writing around the 22,500 put. And this is naturally because the Nifty once again tried and tested the life high. It didn't make through there, but we were, well, once again just falling short by about 20 odd points. And this is, of course, your overall distribution. And this is what we are set up to do moving into tomorrow. On the lower end, keeping an eye on 22,000. On the higher end, keeping an eye on 23,000. And, of course, 22,500 in the middle. Bang in the middle, where we are seeing a lot of writing in terms of calls as well as puts. Well, moving on, this is a Bank Nifty distribution. And as I was telling you, we saw the Bank Nifty move above the mark of 47,500, moving on higher, and which is why you're seeing so much writing around, these levels too. Puts being written here, and of course at 47,600 as well, where we are most likely to, see the expiry come through within. And of course, moving on to stocks, keeping an eye on longs, where we did see that in AU Small Finance Bank and Lotus Labs, and of course shorts in Nestle, Kotak Mahindra Bank, as well as something like a DLF. And on the flip side, also keeping an eye on longs and winding for ABFRL, as well as L&T, Gujarat Gas, Coal India and Hindustan Copper looking at about a short covering. So keeping an eye on a whole host of these counters. All in all, a mixed day of trade, a quiet one for the Nifty and a trending one for the Bank Nifty.
Okay, well summed up. Thank you so much for that, Agam. But let me take it across to broader markets, and let me take Osho, your views first with regard to where broader markets are at. We've seen a good recovery when it comes to broader markets since, of course, a week or two back when we saw a bit of a correction in that space. Do you believe that that recovery can sustain now?
See, overall, as you have mentioned, in the last 2 weeks, there has been some kind of a strong corrections in the mid-small caps, even followed by Nifty 50, where it has given a strong breach below the 50-day exponential moving average on the daily time frame. But now things have turned around. There has been very much optimism surrounding the market, because for today instance, we can see that we have witnessed a kind of a gap down opening, but that has been argued very well for the buyer. So I'm expecting that from here onwards, the undertone has turned quite bullish, and I'm expecting that the time we give a breakout in the broader market, in the benchmark index, approximately 22,500, then from there onwards, a strong upsurge can be seen. So I'm having a very bullish approach in the market, but will be adamant to have aggressive approach as of now, and will be having buy on dip a kind of a approach for the time being. So overall, trend seems to be positive, but one needs to keep patience and be fuzzy with the stock selections.
Osho, can we get your calls for this afternoon? What would be your trades in the last, I think, 20 odd minutes?
Firstly, the first call which I would like to give is from the IT space, which I already have given in Coforge. The other counter is from PSU banks. Canara Bank has given a breakout today, and I'm expecting that it will be sustaining the zone of 600 for the day. So I'm expecting that in the follow-up day, a strong move can be seen. So Canara Bank is a buy, which can be even for BTST and for positional basis both. For positional basis, I'm expecting a target of nearly 620 to 625, keeping a strict stop loss of around 585. For BTST, approximately 612 to 15 kind of a target can be seen, keeping a strict stop loss of nearly 590.
Interesting, Canara Bank there. But Sudeep, let me try and close this loop here with regard to broader markets as well. Your views, there was some concern with regard to valuations, especially when we saw that bit of correction. What's your sense now? We've again seen some of the broader markets doing very well. We are seeing good traction in that space today.
Well, what we have been witnessing is consolidation around these all-time highs. The market reached a certain level, and after that, I think it's hovering in that range. I think the overall market movement have been in a very narrow band, if you really see, over the last 15, 20 days. And I think, I don't think it's bad for the health of the market. It's a bit of consolidation at such elevated levels, I think is good for the market. Bit of profit taking, bit of consolidation, bit of, staying at these levels is not bad. Trajectory definitely is positive. All kind of dips eventually are getting bought into. And under the circumstances, I would say that at some point of time, I think there are a few triggers coming. One is of course, the corporate results, which will start trickling in from next week. We have the monsoon update, monsoon forecast and things like that. And of course, the elephant in the room, which is the election results and election, which is around the corner. I think these three factors will drive the market, apart from, of course, the interest rate scenario and how it pans out as far as US Fed interest rate cuts are concerned. We are not expecting too much from RBI, but by and large, the US Fed action, along with corporate results and monsoon predictions, will keep us excited for the next 30 to 45 days.
I don't know how exciting elections are. Frankly, I've been waiting for that buzz to kick in this time round. Sudeep, it's, markets have discounted it. No one's talking about it yet. But perhaps we'll see some pickup in the next few days. Meanwhile, another interesting story is the Bharti Hexacom IPO date. Subscriptions have started. The IPO closes on Friday, April 5th. Now, why is there so much excitement about it? What is this IPO all about? My colleague Smriti is joining with more details.
Well, yes, Airtel Hexacom has opened its IPO today, and just to give you an overview of what the company does, it operates in two circles largely, Rajasthan and Northeast states. So that's a total of 7 states across the country. Now it provides fixed line broadband and mobile services in these 7 states. Revenue-wise, market share in Rajasthan is nearly 40%, while revenue-wise market share in Northeast circle is 52%. So quite a big market share in terms of how limited the company operates in. But let's talk about the IPO. It had launched an IPO of 4,275 crores. It's a pure offer for sale. Now, a government-owned entity, Telecommunications Consultants of India, is selling 20% stake in the company. It held 30%, now out of which it's going to sell off 20% now, and the rest 70% is held by the parent company, that's Bharti Airtel. Now, the company has already raised 1,923 crores from anchor investors. Now, anchor investors include marquee names like Capital Group, ADIA, Morgan Stanley, Capital Group. Among domestic investors, we have Aditya Birla Sun Life, ICICI Access Mutual Fund. But let's focus on the financial highlights of the company as well. Now, it had a revenue of 6,579 crore, which was 22% up 22% on a year-on-year basis. The operating profit was around 2,925 crores, which is 54% upside from the previous year. Margin was 44% versus 35%, and ARPU in FY23 was at 185 versus 155 in the previous year. Let's talk about the valuation of the company as well. Now, if you look at this from a point of view of what the valuation may be after it gets listed, it's somewhere around 28,500 crores or thereabouts. So that's pretty much the picture of the IPO as we stand today.
Right. Thanks for that, Smriti, for breaking that down for us. Currently, 0.27 times subscribed as we speak. QIB around 0.3 and retail around 0.4 times subscribed. So still up for grabs, Tamanna. And it's very interesting because if the ARPU does move from that, it's moved from 155 to 185. But if it moves towards 300, which is where Sunil Mittal has suggested it ought to move to.
Suggested, he's been emphatic about it. He's been emphatic about it in every interview, including when he spoke with us last. But it's more of what the industry will do. I mean, everyone's pricing that ARPUs will eventually move. I just want to give a quick take with Sudeep on Bharti Airtel is buzzing today. Vodafone as well. Vodafone, there's going to be an EGM for the fundraise. You didn't see great numbers from Bharti Airtel in the last lot, but the stock's doing okay today. Your take on this and the IPO, if any, Sudeep?
Well, I think definitely, Airtel has been doing well. They have over the last 3-4 years, if you see, I think remarkable performance improvement have been seen in Airtel, both domestic as well as the international business. And the ARPU increase, of course, is the holy grail, and that's what pretty much Jio as well as Bharti Airtel has been working on and are very keen to go there. Unfortunately, it hasn't yet happened, but it should happen, and pretty much everybody agrees. And I think it's a matter of time before it happens. Under the circumstances, with the kind of dominance Airtel has, the kind of incremental customer additions which they are doing month on month, of course, mostly at the cost of Vodafone, I think it's a good long-term play. So I don't have any challenges in recommending a buy in either Bharti or Airtel or subscribing to the IPO for a long-term investor. Now, if you're looking for a short-term flip, I'm not sure what will happen either in Bharti Airtel or the IPO. But if you're a long-term investor, I think it's a good bet to get into.
All right, good bet to get into for a long-term investor. Another stock that has been in focus is Tata Tech, and there's a JP Morgan note out on their deal with, it's a JV actually with BMW. They remain underweight with a target price of 800. They say the JV is a step in the right direction, will reduce dependence on anchor customers, and that really is the big issue or the challenge when it comes to Tata Tech. They say the estimated revenues are initially $5 million from this JV and could lead to an eventual annual revenue opportunity of $50 million. They're awaiting clarity on accounting and margin profile, and they say they need to scale up revenue from non-anchor clients to more than $20 million. It's interesting, Harsh, because when I had the chance to speak with the Tata Tech CEO, I asked him this question constantly. What is the revenue? What does it do to your margins? Of course, he said, I can't tell you because the JV is still in store. But on the anchor clients, and that's their problem, right? The top 5 clients are 70% of their revenue.
Correct. Yes.
They weren't very clear about whether this will change that. Are they going to be at least in the top 3 or top 5? What is important, though, is that BMW did a global hunt.
Yes.
For this profile and has picked Tata Tech, so that becomes important.
Yes, absolutely. And even in terms of valuations, Tamanna, it's not a very cheap stock to be in.
Yeah.
The IPO happened at 600 odd, and we're currently sitting at 1,000 plus. In
Target price of 800.
Correct.
Is what JP Morgan has given.
So yes, that's just the situation which is playing out. And of course, client concentration is definitely a concern. Let's go across to Sudeep, ask him for his views. Sudeep, do you think this is obviously a step in the right direction, but when would you start to feel comfortable that client concentration is going away? Not yet for sure.
No, absolutely right. I think why they are not answering that question is because it probably doesn't move the needle much. But it's a step in the right direction. That's what I will say. And it's very important that a company of BMW's repute has selected them amongst, I'm sure, multiple other contenders. So they are moving in the right direction. I'm not, of course, the client concentration is an issue, and we keep highlighting that. And that's an issue, of course. But I'm not too perturbed. If you look at this company, I think they're doing very well. They're providing a fantastic service. And with the automobile industry moving towards EV and more technologically advanced vehicles, I think the requirement of Tata Tech services will be more and more felt. So under the circumstances, I believe the company has a bright future. So for a long-term investor, it's a fantastic buy. It was a great buy during IPO, and it's a great buy even now.
Yeah, even at 11:35. So a lot of things we spoke to Warren Harris about, and do catch that full interview on all our social media platforms, including on the website. But the question that I wanted to play out here is what I asked him, how they're going to manage the relationship with JLR. JLR is their anchor client, a clear rival of BMW. So how do they manage that equation? Listen into what he said.
Well, we've established a capability to protect the confidentiality and the information that is shared with us by our top clients. We're very proud of the relationship with JLR. The relationship at JLR has allowed us to demonstrate the capabilities that we represent on both the full product side of our value proposition, all the way through embedded electronics, software, and again, enterprise IT. So we've been able to, I think, demonstrate capability at scale with JLR that has really reinforced confidence with other customers like BMW. But we will continue to protect the trust and confidence that is extended with Tata Technologies across our entire customer portfolio. Integrity and trust is the basis on which we've built our customer pyramid, and it's something that we will never compromise upon.
Okay, Osho, your take on Tata Tech with regard to charts. How do you see it?
See, for Tata Tech, the technical charts are not very much suffice, but looking at the overall trend, because it is newly listed company, and from after the listing price, there has been a consecutive correction in the prices. But overall, being the fundamentals of the company or from a longer perspective, the company is very positive for investment. But for short-term perspective, yes, I'm having a view that above the zone of 1170, 1180, there can be some kind of buying traction that can be seen in this counter. While on the downside, 1000 should be acting as the initial support zone from where it has actually reversed. So 1000 should be acting as the support, and 1170, 80 should be acting as the resistance for this company. So in between, it might hover in the coming period, but after the breach, we can witness some kind of buying traction again following in Tata Tech company.
Just purely on the charts, Osho, this 800 target price that JP Morgan has put in, what's your take on that?
Yeah, I'm not very much in line with the same view, but again, that has been fundamentally taken. But even before IPO, even our companies have also given a very strong fundamental for the company, and everybody have quoted a very strong IPO for this company, and even a higher counter for a longer duration. So I'm still intact with the view, and I'm expecting in the coming future, from a fundamental point of view, there can be a strong upsurge in this company. So I'm expecting a decent movement. There should not be any worrisome that can be triggered in this company for the timing. So I'm expecting a decent upside movement with a gradual, not very aggressive, but a gradual up move can be seen over a period of time.
Okay, Osho, and anything else within the R&D basket that you seem to like, maybe better than this or otherwise as an option?
See, overall, there are many counters which are looking very positive, but conducively, as of now, on the technical charts, I am not very much aggressive in the markets, because I'll be awaiting for some kind of strong momentum or a strong breakout in major of the company. So I'll be having a subdued move. I will be stuck with the stock-centric approach in the market for the time.
Any BTST trades, Osho, that you want to highlight?
See, firstly, as I have mentioned, Canara Bank, the target which I have mentioned, it is near about the same target. So looking at the overall trend, only two sectors are looking very positive, on which I'm expecting that it should continue its upward movement in the coming period. One is PSU banks, the other one is IT companies. Apart from these two companies, the counter which is looking positive is from chemical, that is Coromandel International. Coromandel has given a breakout in the last trading session, and I'm expecting that a follow-up buying can be seen in this counter for a higher target of nearly 1180 in the coming time. So for BTST, one can even look for Coromandel, because it has been gaining strong traction on the back of volumes from past 3 days, and it has given a breakout from 1120 odd level. So one should keep a stop loss of 1120 for upside target of nearly 1175 to 1180.
Since you talked about chemicals, have you been tracking Anupam Rasayana and what we've seen today with it? Osho, what would you do with the stock?
Yeah, overall, I have not seen the recent movement in the company, but overall, this counter is not having a strong traction for the timing. So I'm expecting that once it gives a decent breakout above the zone of psychological mark of 900, then only it can witness some kind of traction in the coming period.
So given up most of its gains of the day. We have Sudeep with us as well. Sudeep, last calls for what would be your focus areas? What's on top of your list for trade tomorrow?
Well, I think I'm focused on the real estate players. I think there's a significant traction there, and forget today's correction. By and large, I think there is a lot of traction. So a Godrej properties definitely look good after the correction, which we did see now. And that can be bought at for a significant upside over the next 6 to 12 months.
Okay, and Sudeep, we have a slew of updates coming in from the lending side of things as well. You have Satin Credit, which came out with numbers doing fairly well in trade today, but maybe not on the smaller lenders. But one thing that's really caught my eye is something like a Yes Bank. They've done very well on the deposit side of things. Sequential 10% on deposits, well, not something that I was penciling in at all. What's your sense with regard to Yes Bank? On both valuations, there's been a run-up as well as on the numbers itself.
I think the commendable performance, absolutely right, Harsh. I think they have been really doing well, and quietly so. And without raising too much of expectation, they have been delivering. And definitely it deserves a lot more than what it is getting. Of course, the price have run up quite a bit already, but I think a commendable performance. I would also probably bring in RBL here. That's another bank which has gone through some turbulence, and again, quietly they're doing a lot of good work. So both Yes and RBL are on my radar.
Okay, and Sudeep, with regard to the large, while we are on banks and on financials, do you see value in some of the larger private sector banks? Do you think HDFC Bank will deliver a decent quarter? It's something that is on everyone's radar. Everyone's just waiting for that turnaround there for that one. Also, if I can pull in the other larger NBFC, something like a Bajaj Finance, which has also languished. Do you think that both of these are possible opportunities to buy at this point just before earnings?
Well, if you are really trying to do that for the earnings, I would say probably refrain. I don't think earnings will come in a shape or manner that will really provide blockbuster returns for somebody buying at current levels. So I think, but if you're looking at a long term for HDFC Bank, I think it's a fantastic story, and it can be definitely bought. The reality is the deposit mobilization is becoming a challenge and a costly affair, and that is going to have an impact on credit growth and the margins. So I'd say it's a trade-off which some of these banks will have to do. Let's see where things settle down. But at this stage, I don't think I will buy HDFC Bank for short term.
All right. Thank you so much, Sudeep and Osho, for joining us today and taking us through the end of the trade. So we're almost at the closing bell right now, and let's just take a look at how markets are pairing out while we end. Again, another completely flat, slightly negative day for the Nifty. So second consecutive day where your top line indices are going to end in the red, definitely, but not with too much of a downward bias. Let's just pull up and see what's happening at the broader end of the markets and where you are seeing the buzz over there. So definitely better. Again, a consistent trend that we've been seeing from the last few sessions where your small cap and your mid cap is doing much better. In fact, I want to pull up the micro cap because the micro cap 250 was leading the way through most of the day. So yes, even that's about 1.5% up. Let's see what's happening with the advanced decline ratios and where we seem to be ending at close today. And yeah, pretty much steady, a bit narrower. That gap is narrowing a bit, but about a 1:3 ratio, and not half bad. for a market which opened with very, very negative global cues. Remember, at the start of this morning, you had bond yields jumping, you had crude sharply high, gold was higher, US markets were down. So all things considered, it's not looking like a very bad close. I just want to pull up the heat map and see where we're ending and whether anything has changed massively. Not really. Shriram Finance, I think the standout of the day. We'll have to figure out what's really fueling Shriram Finance. Looks like it's ending about 4% up. Your PSU pack, your tech pack has been the story of this afternoon, Harsh, you would agree. So if you look at NTPC, TCS has been stellar today, and as a heavyweight really helping, I think, keeping the momentum balanced, even though on the face of it, the Reds completely outweigh.
Correct.
So your TCS, Tech Mahindra, all of them doing fairly well. Bharti may be getting a bit of boost from that IPO which is open. And on the losing side, Nestle has had a rough day, so has Dr. Reddy's, Bajaj Auto, and Kotak Mahindra Bank has particularly not had a very good day. But the real, I think, movers and shakers have been among the small cap and micro caps.
Well, yes, absolutely, Tamanna. That's where the action has been. 0.5% higher on the mid cap. Even the small cap index has done fairly well, 1+% in trade. And let's look at the advanced decline because that will signify this. The advance declined strongly in favor of the advances. There you go, 3:1 in favor of the advances. So the breadth of the market through the day was quite strong, Tamanna, and that is reflecting in where the broader markets were at. Let's look at some names which were buzzing. Let's pull up some defense counters, something like a Mazgon Dog, the top mid-cap gainer, at least in trade today. Let's see where that one's closed, nearly 12% higher. So that's the other one, 8.5% higher. Cochin Shipyard, that's the second top gainer within the Nifty Midcap 100
We should look at what's happened to Garden Reach as well, since we're on this entire theme which was building today, and maybe off its highs a bit, but still 7% up. So those were the stories today, apart from, I would say, metals, your Nalco, MOIL and all of those.
JSW Energy, it seems to have done very, very well in trade today as well. QIP News, 7% higher, that one. And let's also pull up something like a Loris Labs, because that is up as well in trade today. It's done fairly well. Among those which have not done well in the broader markets, some real estate names, Loda, Godrej Prop, if we can see where those have closed. Some of the top losers on the Nifty Midcap. Cochin Shipyard was, of course, the top gainer on the Nifty small cap, but Angel One has done very, very well today as well. So that one has closed nearly 6% higher. So lots of names in the broader markets which have done well.
Theme-wise, if you had to build it, I would say Realty was not having a good day at all. IT was decent. Banks was medium, neither here nor there. But standout story, defense and Reality
and
took the cake.
Sugar
was definitely sweet. Some of those counters, Rakesh, etc., have done very, very well today. Well, that's all the time we have on the show. So from Harsh, me and the entire team that put it together, thank you so much for watching. Stay tuned, a lot more coming up on the other side.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers, growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Monetary Policy Committee is set to meet for the first time in the current fiscal year on Friday. Now, not much has really changed in a sense from when it's last met. Economic growth continues to remain strong and resilient, while inflation, though still above target, is showing encouraging signs of easing going ahead. We're in conversation with Arvind Chari, the Chief Investment Officer at Q India, for a special chat ahead of monetary policy to get a sense of what his expectations are from policy on Friday. Thank you so very much, Arvind, for taking time out for us.
Thank you for having me, Valerie.
So, the expectation broadly is of a status quo from Friday's meet. But do you think you would not rule out a change in stance just as yet?
So when you talk about the monetary policy stance, right, the RBI current has been having this stance of withdrawal of accommodation. And I think I made a comment back in October that, they have to start thinking about changing that stance, because they had hiked already to about 6.5, and then they had some more hikes to go. And given where inflation was trending and where inflation was settling, for at least for the last two policies, that has been a discussion, especially in the markets and with the RBI, and there have been regular questions asked RBI saying that why do you have that stance? In fact, even Jayant Verma, who is the monetary policy member, has been voting against that stance of having withdrawal of accommodation. I think there is a case for them to move to neutral. Now, I can get a sense of why RBI is kind of have not changed the stance, because I think they are taking the cue from what the Fed did. So when the Fed first indicated that they have reached their peak rate and then they will soften their stance, the market took it as a rate cut, a very near rate cut, and you saw a big rally in the US 10-year, right? I think the RBI wants to avoid that situation where they don't want the markets to front run what they intend to do with the monetary policy. Broadly, if you see, most central banks have kind of stopped giving very explicit forward guidance. Now the Fed has a dot plot, the RBI has this stance. But broadly, most central banks have because the conditions have been so data dependent or volatile in terms of commodity prices and demand and supply conditions and supply disruptions. So that's why I think they've been wary. I still feel I think the RBI has done enough in terms of rates and has got inflation well and below under control. Thanks largely also to the government, and there is clearly a case for them to move to neutral, where basically they should indicate that we don't intend to hike, but it is not a cut. But we are in a neutral monetary policy where if the conditions of our inflation expectations are met, then the next possible move could be a move down. But you can always guide the market in terms of how they should expect that. But having a withdrawal of accommodation where they are not actively sucking out liquidity, nor are they hiking interest rates, it does not make, I don't know what sense they are trying to convey by still talking about withdrawal of accommodation. Maybe in this policy, if they term it properly and they have the confidence, maybe they'll move to what we call neutral stance, where they're neutral in terms of where they are with the monetary policy, both. And in India, monetary policy is rates and liquidity, right? In some sense, from a activity and transmission perspective.
Right. Also, a while back, the conversations now shifted to when the RBI will come around to cutting rates. Yeah. Pretty much, that's pretty much the case across central banks, yes. Right? But in case of India, even when the RBI does cut rates, be it middle of this year or maybe a little bit after that, India's rate cut cycle is still expected to be a shallow one, right?
Right, yeah. Yeah, if you look at long-term rate cycle average, right? If I look at a 20-year average of the Indian repo rate, it's been between 6 and 6.5%. Right? If you look at long-term average CPI inflation, it will be around between 5 and 5.5%. So, as compared to developed markets, developed world, where the current rates from a 15-year historical perspective is higher than what it was, And that's where the impact on the economy and the impact on the markets and the impact on conditions are different. Whereas in India, we are at 6.5% repo and 7% bond yields. We are at about the long-term averages. So Indian households, Indian businesses, Indian government, and the policymakers know how to operate in this segment, right? Given the fact that now we are in an inflation targeting environment, right? Barring shocks on either high side or on low side. So high could be very high oil prices, or low could be things like COVID, where the central banks and the government has to intervene in a major manner. Barring that, if you take that 4% plus whatever 1 to 2% real rate, you should expect that the general normal average repo rate will be between 5.5% and 6.5%, right? Given that you need that buffer of real rates. So that's why even if the RBI cuts rates, it will be 50 to 75 basis points. If everything else remaining constant, right? So if the growth trajectory falls a lot more, then they will need to do a bit more to support growth. If there is another commodity shock in terms of rising commodity prices or rising oil prices, then maybe they will react to the otherwise. But otherwise, it is a shallow cycle. But they need to think about in terms of what is the exact rate, what is the relevant rate they require for the growth that the country desires to achieve.
Right. I do want to ask you about where we're headed in terms of bond yields, both in terms of domestic as well as global cues.
Yeah.
What's the range you're looking at for the benchmark yield?
So if you look at build-up of how we look at inflation risk premia and term premium, right? Those are the two things that matter to long-term bonds, which is a 10-year is a long-term bond yield. So given the fact that the RBI itself is guiding that CPI will head towards below 5, towards 4.5, and the current numbers suggest that actually it will surprise on the downside, like the actual headline core or what I look at CPI ex vegetable, it's all going towards 4 or below 4. From that perspective, if you then take some inflation risk premium, which is basically real rates that the central bank itself wants to have and then it wants to give to the market, so about 1 to 1.5%, right? And then you build in term premia in terms of where you want to have liquidity and term premia. So from that perspective, if you build up that from that perspective, you should expect some amount of reduction in bond yields, maybe closer towards 6.5%. I'm not saying that's fair valuation, but you can see just from a build-up of inflation risk premia and term premia currently. And then the other thing that matters is, of course, demand supply, right? And today we see demand supply is very favorable. If you look at the demand from domestic banks, given the growth in NDTL that they have seen, given the LCR requirements that they need to have, I think we are already closer to the threshold of demand from banks for SLR. You should expect the same from insurance and pension funds. We don't see too much long-term issuances of corporate bonds yet. So their demand for long liabilities, long asset will come from buying longer dated government bonds. And then of course there is the foreign FPI demand, right? We've already seen about $9-10 billion of flows since the time that the bond index inclusion is announced. And given whatever estimates go around in the from the street, it's about $15 to $25 billion of eventual flows should come in. A mix of both passive bond flows, just tracking the index, and active managers who use the JP Morgan Emerging Market Bond Index as their benchmark. And if India is 10% weight of that, they will want to have some, some could be underweight at 7-8%, some could be overweight at 10-11%, but no one can ignore or not have India bonds in their portfolio. So they'll have to be, if you add that up, given the domestic demand supply and the foreign, I think from a demand supply perspective also, it's favorable for bonds. So when we've seen scenarios where when the demand supply is favorable, the 10-year bond yield actually trades a lot closer to the repo rate. So even if the repo rate remains at 6.5%, we've seen 10-year bond yields at 25 to 40 basis points of trading above that, right? So that's one way to think about it. Even if the repo rate gets cut, you would expect favorable demand supply, and the fact that the inflation is very much under control and you do not need as much term premium and liquidity is comfortable, you should expect bond yields to go down. And you're seeing that in positioning. right? Both from foreign investor and the domestic, you're seeing an increase in duration profile in funds. Like if you look at bond funds, their average duration profile has gone up. If you look at what foreign investors also are buying, given the fact that they buy that fully accessible route, securities which are in that FAR security group, you're seeing they are preferring to buy more, like slightly more duration as compared to, you know, buying at the very shorter end, which is indicative of the fact that everybody is expecting some, you know, some easing in yields. Now, there are two risks, and one risk in India is always oil prices, right? If there's one short-term risk that India has, that's oil prices. So if oil prices bump up, and you could see some amount of increase in oil price in the last month. If it goes well above $90, $95, $100, then you will see some impact on rate expectations, inflation, and hence on bond yields. And the other is, given the flux in the global markets on where central bankers are headed and where global bond yields will go, if the US Treasury, so US Treasury yields are a reasonably dominant factor on how markets and global markets think about emerging market bonds as well, right? So those two factors are kind of the risk or the swing factors. But otherwise, from a domestic perspective, inflation, term premia, demand supply is very, very favorable for bonds. Yeah.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers, growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve.
I think it's fairly well sort of etched out what's working in favor of India. In a recent LinkedIn post of yours, you did highlight some concerns as well. And these are concerns that we know about, right? Private consumption, for instance. And exports, of course, is picking up. But in case of private consumptions, the trajectory going forward remains a little unclear. And there is a fair chance that the gap we're seeing between investments and private consumption continues at least for maybe the next year or so. It remains to be seen how that is playing out. So what are you making of that?
So if you look at the overall consumption is linked to incomes, right? So if you look at the income profile and the consumption profile, since demonetization, we've seen a reduction in incomes of certain segments of the economy, right? And they had multiple shocks at demonetization. Then GST was a good reform, but it had an impact on unorganized segments. Credit crisis was specifically to finance, but it did choke up funds into SME and unorganized segments of the economy. And then COVID. Right? So of course the government provided some support on food and some income support. But still broadly, if you look at the income growth in the economy has been lower than its historical average, and has been lower even now. So you can see that in FMCG sales. Now people will debate whether it is because of choice and because of competition, but you can still see a general sentiment and a I won't say weakening, but the consumption trajectory is still not back to where it would have been at the current level of growth. Now, for a growing economy that we are, of course we need more investments than consumption as a share of GDP, right? Because investments is what eventually will drive long-term sustainable growth. But there is need to have a balance between how much consumption and investment. So supply side and demand side. This is where now if you look at from a monetary policy perspective as well, if we are okay with India growing at 6 to 6.5 real GDP, right? That has been our long-term 20-year, 30-year average. And if you are comfortable growing at that level, maybe the current level of interest rates, the current level of real rates are okay. But if we believe that the consumption should be growing or income should be growing at a slightly faster pace, and that requires support, so that the amount of supply side capex or investments that the government has done will ensure that India can actually grow at say 7% in the medium term, and that requires support. Maybe that's when the RBI has to think about whether right now if you look at real rates, if you assume 4 to 4.5% as sustainable inflation, and if you look at 1-year T-bills or 1-year State Bank of India FD at about 7%, it's about 250, 300 basis points of positive real rates. Now, is that required when the GDP growth is still in that 6.5%, or does that require some reduction in both increase in liquidity and rates to be able to take the GDP growth, slightly, or support the consumption income? That's one aspect to think about, because broadly, India still grows at that long-term GDP still remains about 6 to 6.5%, right? But increasingly we are seeing many like even from the government or even the RBI mentioned that these sustainable potential growth could be 7% in India. And if you take that into consideration, do you require 3 percentage points of real positive rates at this stage of the economy? So that was one thing that I guided on, that although the GDP growth print is at 8%, but the actual consumption and income growth is still lagging that indicator. Maybe the trickle down takes time and you will see more consumption income growth. But right now, it is better to be realistic about what is the long-term growth projection and potential. So it was more from a guidance to investors, saying that India always disappoints both the optimists and the pessimists, and it pays to be realistic about the expectations. And I just cherry pick 4 or 5 indicators to show that although the narrative is very positive, and that's what we continuously hear from foreign investors also, that the narrative in India is good, and everybody is looking to have an allocation to India, which is good to see. But you have to always temper your expectation in terms of what returns can you earn in India and what are the actual realities. So that was the post that I posted.
Right. From a global perspective, we've seen fairly encouraging data come on multiple fronts, right? China is looking relatively a little better, as is the US. So globally, what's it looking like?
So if you look at the US economic data, as I said, I've written about this before. I think markets made a big deal about interest rates from from like small changes in interest rates impacting the economy. As you're seeing now, even at a 4%, 5% Fed funds rate or treasury yields, the economy seems to be doing well. So of course, there is a problem for the borrower. If you've borrowed a mortgage at 2%, and the mortgage resets to 5-6%, of course there is a cash flow impact, right? You see less of that in the US because they have fixed rate mortgages, but you see more impact in countries like Australia or Canada or UK, where where the mortgage rates are floating. And so when the reset happens, there is an impact on EMIs and your monthly payments and your incomes. But broadly, from a corporate activity perspective, given the fact that during COVID, there was so much fiscal impulse, initially to support people's incomes and then to support businesses, right? There was, all countries did a mix of these two aspects, supporting incomes and then supporting businesses. So you are still seeing the lag of that. Maybe some countries have tightened their fiscal, they've reduced the support, they've removed some amount of subsidies, but there is still enough investment-driven activity or investment-driven stimulus that is available in the global world, and that's why you're seeing not the high interest rates have not caused a major recession, which is what was worried, which is what the worry was, right? So you're seeing economies and corporates actually kind of relatively managing the situation better. In India, surprisingly, we are not seeing that in, say, non-oil goods export, right? We saw a bump in...
That appears to be indicating a little bit of an improvement as well.
We saw an increase in 2020-21, but last year has been more or less flat, right? So if the global economy is indeed doing well and supply chains are back and the disruptions are not there, then you should have seen a bit more increase in non-oil goods exports. We saw that in service exports. Service exports have done very well and continue to do well, but non-oil goods has remained a problem in India, and it has grown, hasn't grown at the pace, but the global economy is giving you opportunity. That tells you maybe impacts of import duties that we are seeing, or maybe India is still not in the global supply chain of manufacturing, right? It'll take some time. But otherwise, as of now, the data is showing that high interest rates has not created a recession in the global world. I think both households and corporates have been able to manage the impact of high interest rates in a reasonably okay manner. We'll have to see how that pans out in the next 1 year. As of now.
With that, we're completely out of time, but thank you so much for taking time out for us today.
Thank you so much.
Stay tuned to NDTV Profit for our continuing coverage on the Monetary Policy Committee's meet, which is scheduled for Friday.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers, growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
Market ends flat ahead of the FOMC meet outcome. Nifty Midcap 150 records an 8-day winning streak, while Nifty Small Cap 250 gains for the 9th day in a row. Vistara Airlines management assures pilots of addressing their concerns, holds meeting, conducts Q&A amid mounting issues of flight delays and cancellations. Bharti Hexacom IPO gets a muted response, subscribed only 29% on day one. Rahul Gandhi files nomination in Wayanad constituency in Kerala after holding a roadshow in the city. Arvind Kejriwal lashes out at Enforcement Directorate in Delhi High Court, says the sole purpose of the arrest was to humiliate him, adds that ED acted without an inquiry statement or material that could be the basis of an arrest. At least 7 dead and over 700 injured as the strongest earthquake in 25 years hits Taiwan. Epicenter is located in the south of Hualien City, says US Geological Survey. Hello and welcome. You're watching The Reporter on NDTV Profit. I'm your host, Smriti Chaudhary. As always, this show aims to bring you the market headlines along with national and international news. But before we move on to the show, it's time to see how the markets performed today. My colleague Harsh Saita is joining us for a quick market wrap. Harsh?
Well, the benchmarks closed as flat as they can get. There you go, the Nifty 50 just about 0.1% down, as flat as it can get, 20 points lower. And we flip-flopped a bit between the red and the green. The Nifty Bank 2 not doing too much, not too much action on this end of the spectrum, 0.1% higher. But the mid-cap and the small-cap indices, that's where all of the action today was. 0.5% higher on the mid-cap, 1% up on the small-cap as well. Let's pull up the advanced decline. The breadth of the market was extremely strong, largely signifying the way in which the broader markets have done today. 3:1 in favor of the advances, so good strong momentum that we saw within the broader markets. Let's pull up the sectoral charts to try and see where we've done well today. PSU banks, PSEs, so that's where we've seen a bulk of the action. In fact, it's been a flip-flop kind of a day for PSE. It was in the red, it's gone into the green and ended as the second top sectoral gainer for the day. But IT was where a lot of the action was. It in fact came up 2% from the day's low at one point of time. So we saw good traction in IT on the back of a possible CLSA positive note, even though that was reversed towards the end. The CLSA note itself suggested caution with regard to IT, but despite that, IT has done fairly well. Realty was the one which took a bit of a knock, 2.6% lower. If we can pull up Realty, we saw some names do decently well, but outside of that, we saw a lot of names do fairly badly. Macrotech, Godrej Properties were two of the key losers in the broader markets. Suntech Realty was the one big gainer on the Nifty Realty Index. But that kind of sums up the day for today.
Thanks, Harsh, for that market wrap. Now let's start the show with an NDTV Profit exclusive. Vistara Airlines CEO has assured pilots of resolving the ongoing issues in the airline at a meeting held earlier today. Pragati Oberoi joins us to share more details about this meeting. Pragati, what are you picking up from your sources?
Right. So we just got to know that the meeting of Vistara CEO with the pilots has concluded. The meeting was scheduled for around 1 p.m. and it roughly lasted around 45 minutes to an hour. We don't know the exact timeline, but that's it. And nothing major has come out of the meeting, no resolution, but we know that the management addressed several concerns. In fact, the management clearly stated in its address to the pilots that they understand that what the problems are, that there were problems related to aircraft availability concerns, there were network planning issues, and that they understand that pilots were not to be blamed for this. That's what Vistara's management has reportedly said to the pilots, because sources told us that. Sources also said that towards the end of the management's address, Q&A was also conducted, and in that Q&A, some junior pilots and senior pilots raised their concerns. Some pilots also spoke about the contract, and while the management did not respond to their queries at that point of time, they did say that they will definitely look into the matter, and they mentioned that they would address all the concerns very soon. So the meeting did not last for as long as everyone anticipated, and people were anyway anticipating some sort of a solution, but nothing like that has happened. The management has presented their side to it. The pilots have also raised their concerns, and as of now, the management has only assured that yes, they will look into the matter, and they will come back with some possible outcome of all these things. That's what we are gathering as of now. We'll come back to you as we have more updates.
Well, thanks, Pragati, for that. And as Pragati said, we'll keep bringing you more updates on this story. But moving on to the IPO space, Bharti Hexacom launched its IPO today. Today was the day one for the IPO. It's a 4,275 crore, that's the issue size of the IPO. It's a pure offer for sale, where the Telecommunication Consultants of India, it's a government-owned entity, is going to sell 20% stake. Now, this telecommunication consultants holds 30% stake in the company, so they're going to be left with that 10% balance stake. The rest 70% is owned by the parent company, that's Bharti Airtel. But before I talk about the IPO, let me tell you what the company does. Now, the company is only present in Rajasthan and states of Northeast. So, essentially total 7 states where it has its presence. It provides mobile services along with the broadline and fixed line services in these 7 states. Now, there's presence in Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Tripura and Rajasthan, as I mentioned. Now, the company has already raised 1,923 crores from anchor investors, and we have marquee investor names like Capital Group, ADIA, Morgan Stanley and Capital Group. Among domestic investors, we have the likes of Axis Mutual Fund, Aditya Birla Sun Life, ICICI Prudential, SBI, Kotak and more. Now, the price band for this IPO is 542 rupees to 570 on the upper end. The issue size, as I said, is 4,275 crores. If you look at the revenue-wise market share in Rajasthan for this company, it holds nearly 40% market share in Rajasthan itself, and has a market share of about 52% combined in the northeastern region. The total customer base is at 2.71 crore as of December 31. Now, if you talk about the valuation of this, the annualized EPS that we calculated comes out to be around 7.52. So, the PE is likely going to be on the upper end at about 75.8 times. This compares to 63.3 times for Bharti Airtel. So there is more premium for this particular player, even though it's a subsidiary of the company. The valuation is likely to be around 28,500 crores when it lists. Now, in terms of ARPU, if you look at the ARPU of the company, it has grown to 185 rupees in FY23 versus 155 in FY22. If you compare this with the industry, the industry ARPU in Rajasthan itself was growing at 20.8% CAGR. In Northeast, it was 23.1% CAGR, and in Hexacom is 19% growth CAGR. But let's also look at the subscription data and where it currently stands. Now, there's a total subscription of 31%, so not as much demand as one would expect. Then breaking it down a little bit, there's QIB subscribed about 29%. From non-institutional investors, we have subscription of about 26%, and retail subscribing the most at 44%. So that's pretty much the picture. But there are 2 more days left for the subscription for this IPO. IPO and it closes on Friday. That's April 5. So that's the picture with the Bharti Hexacom IPO. But let's move on. We have Toyota India that unveiled a Tizer compact SUV in Mumbai today. The company plans to step up its production by 1 lakh units in the coming years. My colleague Tushardeep Singh caught up with the management at the launch event. Take a look.
I must compliment the government for having done so much in this space. With so little time, we've reached so far ahead in electrification and introduction of battery electric vehicles. And I think this policy is just building on that momentum. It will allow more product options to be available, more players to come in, more investments to come in. So I think it's a good move and a welcome move at that. As far as we are concerned, it's our plans not be able to share right now how we go forward.
Okay, because you have a well-established EV lineup globally. I mean, you're one of the pioneers, to speak in that sense. So, I mean, some kind of direction on those lines will be welcome, even through imports if you want to bring those cars in India.
Well, it's something, we haven't really decided right now. It will not be fair for me to comment on that at this juncture.
Secondly, Mr. Gadkari recently talked about revision in hybrid taxation of hybrid cars going forward, because we are seeing a significant adoption of the hybrid technology. So what is your take on it?
First of all, of course, I'd not like to comment on, policy statements by very senior people in the government, but I'll just like to touch upon the fact that, the issue really is that at the current moment, government does support hybrids. The rates in terms of GST and cess are indeed lower than the ICE, the petrol variant, but it's only 1 to 2%. So what happens is that because the manufacturing cost of a hybrid is higher, inadvertently the consumer gets taxed more in rupee terms. That's the real issue. So as far as we are concerned, we feel that going ahead, all technologies are going to be really required to bring down our fossil fuel consumption and carbon emissions, and therefore all technologies that are green, cleaner, and meeting our national objectives should be supported, and they should definitely get some preference as far as the traditional petrol and diesel vehicles are concerned.
Well, that was the management of Toyota talking about what the hybrid automotive industry faces, the issues that this industry is currently facing. But then let's now look at an important weather update. The South Peninsula and adjoining Northwest Central India, some parts of East India and the plains of Northwest India may experience heat waves during April. That's according to IMD. But what's the likely impact on agricultural output and food inflation? At this stage, it might be limited. Higher than usual temperatures between April to June does pose a threat to horticultural crops such as vegetables, but with the Rabi harvesting season already underway and as long as the monsoons are not delayed, the cause of concern is limited, but needs to be monitored closely. Going ahead, according to Gaura Sen Gupta, economist at IDFC First Bank, from an inflation perspective, a potential impact on Rabi output, if any, could keep cereal inflation elevated. That said, one key support for FY25 inflation outlook is the possibility of the development of La Nina conditions, which would be supportive for monsoons, unlike last year when we had a heat wave plus El Nino conditions. But let's shift focus to politics now. Rahul Gandhi has filed nomination papers from Kerala's Wayanad Lok Sabha seat, accompanied by his sister Priyanka Gandhi and other senior party leaders, including AICC General Secretary K.C. Venugopal. He submitted his nomination papers to the Wayanad District Collector, who is also the returning officer. After submitting the papers, he read out the oath to uphold the constitution, which concluded the submission process. He said that the opposition is protecting the constitution and the democratic nature of the country. Let's listen in.
That's what the fight is about. It's very clear to all of you who is on which side. It is very clear who's attacking the constitution, who is attacking the democratic structure of this country. Thank you very much. ये जो लड़ाई है, ये जो लड़ाई है, ये लोकतंत्र और कॉन्स्टिट्यूशन, संविधान को बचाने की लड़ाई है. एक तरफ कांग्रेस पार्टी और इंडिया अलायंस लोकतंत्र के लिए लड़ रहे हैं, संविधान के लिए लड़ रहे हैं, और दूसरी तरफ प्रधानमंत्री मोदी जी, अमित शाह जी और बीजेपी के लोग, आरएसएस के लोग संविधान को और लोकतंत्र को खत्म करने में लगे हुए हैं। धन्यवाद।
Well, it's time to slip into a short break now, but stay tuned. We have lots more lined up on the other side.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching The Reporter on NDTV Profit. Now, Asia woke up to a powerful earthquake in Taiwan, dozens of buildings damaged, and it also prompted a tsunami warning that extended to Japan and the Philippines before being lifted. At least 7 people were killed and nearly 730 injured, officials said. The earthquake was the strongest one in 25 years to shake the island and warned of more tremors in the days ahead. Well, now, as part of NDTV's special series all about AI, we're covering ventures and startups doing definitive work in the realm of artificial intelligence. This week, we're covering NeuroPixel, an emerging Bengaluru-based startup. Here's a special report on that.
As the Indian startup ecosystem embraces the power of artificial intelligence, NDTV Profit got down on the ground in a quest to find ventures that are making a difference. Meet NeuroPixel.ai, a young generative AI startup based out of India's Silicon Valley, Bengaluru, focused purely on fashion e-commerce. We traveled to their headquarters and spoke to founder and CEO Arvind Nair to understand more about the business. AI as a technology is going to revolutionize the way that we do a lot of things, including one of the most mundane, manually intensive tasks that happens on a daily basis with fashion brands, and that is cataloging all their clothes. With AI, we should be able to automate a large part of this workflow and also simultaneously give rise to a higher diversity of models, better quality images, etc., that boost the customer experience.
Despite a product that promises considerable reduction in time and costs for fashion retailers, NeuroPixel did face an uphill task in convincing their first few clients on why AI was the answer to their catalog woes.
So we were actually doing generative AI before this generative AI wave of the last year. But however, given the gestation period that is typical with these deep tech businesses, we've only started deploying our solution about 3-4 months ago. And we've been growing at double-digit percentages month over month. The first few clients were really difficult, but now that we've got a few wonderful brands on board, it's becoming a little bit easier to sell both domestically and internationally. So we're working in Dubai, in Singapore, and predominantly in India, but we are looking to increase our focus on the US and EU very soon.
Unlike India's first wave of startups that took several years to find product market fit and settled on a much narrow, targeted target market, AI startups in the application layer emerging from India, such as NeuroPixel, are building from India but for the world.
Well, talking about the markets, Utpal Seth, founder of Trust Mutual Fund, said that it's not fair to say that the valuations are high. He said this at the launch of its maiden equity fund. He also added that large caps are at fairly compelling valuations. Listen in.
I've learned from Rakesh ji that while beauty lies in the eyes of the beholder, value also lies in the eyes of the beholder. Therefore, I think it is not fair to make a comment that valuations are high. I think we will only know in hindsight. Also, I don't think valuations are high today across the market. I think the large caps are really at fairly compelling valuations. There may be pockets of valuation exuberance. That's okay. It's a localized situation. It is incumbent upon the investment management team to look at and navigate those different situations. There is no worry that there is an imminent fall ahead. I don't see that.
I know that you can't comment on stock specific, but at least sector-wise, where do you see the next growth of opportunities in India?
I think every component of India will have to grow. It can't be one component of India. You heard the Trust Group CIO Mihir Vora talking about opportunities in the manufacturing side to begin with. I think that's one large mega trend. There are other mega trends which he has laid out. And that team will make their independent investment decisions. So I feel on behalf of Trust Mutual Fund, it would be right for that team to comment on this rather than me.
That was Utpal Seth talking about how manufacturing in India is a mega trend going ahead. But exactly 40 years ago, Rakesh Sharma scripted history by becoming the first Indian to reach outer space on board the Soviet rocket Soyuz D-11. In an NDTV exclusive, my colleague Pallava Bagla caught up with the cosmonaut Rakesh Sharma on a message he would like to share for the 4 astronaut designates for India's Gaganyaan mission. Listen in.
I've been very closely associated with all 4 of them. And whatever I had to say, I have been sharing my experience, and whatever my learning has been, I have shared with them. Everybody approaches this with a different mindset, but since they are experienced test pilots, I'm quite sure that they would be as excited as I was, and they would be as shall we say, they will concentrate as much as I did, if nothing else, to make sure that the mission is a success and the country gets the Air Force and the country gets the accolades for it. And given ISRO's recent history and successes, I have no doubt that they will perform well, all four of them. They're professionals, and they will achieve the mission objectives, and they'll return home safe and sound. And I really look forward to having them join the band.
Well, the sauce is the unsung hero of the food industry. That's the word coming in from the founder MD of Viba Foods, Viraj Bahel. While speaking to my colleague Sesha Sen, he added that the demand for sauces is not limited to tomato sauce and mayonnaise, but salsa, harissa, South chipotle are also picking up. Let's listen in.
So I think when we started Viba, India was a ketchup market and a little bit of mayonnaise, red chili sauce, green chili sauce and soya sauce. What the gap I thought which existed at that time was that, Indians, we love our gravies, we love our, dals and so on. So I thought, why should taste be only limited to spices? It should be limited to, it should be wet gravies and sauces, etc. And we decided to bring in a wide range of sauces to this country. And though we are bringing global tastes into India, all our sauces are made, for the Indian palate. We're a proud Indian company making in India, making for India. And honestly, like our, let's say our Southwest Chipotle, though we will import the Chipotle pepper from Mexico, but the taste has been designed according to the Indian palate.
Right. So, after the pandemic, what we had seen is there was a dramatic increase in demand for mayonnaise. But beyond mayonnaise, today we see salsa, pesto, all these sauces are taking, they're becoming favorites among the Gen Z population. So what is your take on this? How do you see the sauce market? And also some flavors apart from mayonnaise and ketchup, if you could throw some light on that.
So, in my humble opinion, Sesha, the sauce is the unsung hero of the food industry. Can you imagine? Think of a burger. People talk about the tikki of the burger, people talk about the bun is crumbling, the bun is not good, but people don't talk about the sauce. Now imagine there's a burger, there's a bun, there's a paneer patty, and then you put tandoori mayonnaise, it becomes an Indian burger. So second burger, same bun, same paneer patty, but you put a salsa or a Southwest Chipotle, it becomes a Mexican burger. So maximum taste, least value, it is just not spoken about, it's an unsung hero, but it gives maximum taste to the burger and least cost to the burger.
Right.
So, sorry, just imagine like a mother comes home, she's got two kids, one wants to eat a, let's say a Mexican burger and one wants to eat a Asian burger or a pizza. Basically what she needs to do is have a good sauce at home, and that's what it's going to, do the trick for her.
Well, that's all the time we had on this edition of The Reporter. But stay tuned to NDTV Profit for more fresh news and updates.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, Some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got
Good morning and thanks so much for tuning in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Smriti Chaudhary. We'll take you through the next half an hour or so of trade. Now, this show is aimed at